presentations contain forward-looking statements. Forward-looking statements are subject to various risks and uncertainties that could cause our actual results to differ materially from these statements and should be considered in conjunction with cautionary statements and risk factor discussions in our filings with the SEC, including our most recently filed periodic reports on Form 10-K and Form 10-Q and subsequent filings. SBUX assumes no obligation to update any of these forward-looking statements or information, which are made as of their respective dates. Non-GAAP financial measures. Certain financial measures included in this presentation are not measures of financial performance under U.S. Generally Accepted Accounting Principles, GAAP. Certain non-GAAP measures were not reconciled to the comparable GAAP financial measures because the GAAP measures are not accessible on a forward-looking basis. The company is unable to reconcile these forward-looking non-GAAP financial measures to the most directly comparable GAAP measures without unreasonable efforts because the company is currently unable to predict with a reasonable degree of certainty the type and extent of certain items that would be expected to impact GAAP measures for these periods but would not impact the non-GAAP measures. Such items may include acquisitions, divestitures, restructuring, and other items. The unavailable information could have a significant impact on the company's GAAP financial results. References in today's presentations are on a non-GAAP basis unless otherwise noted, or if there's no non-GAAP adjustment related to the metric. Reconciliations for the non-GAAP measures to their corresponding GAAP measures can be found in the appendix to this presentation.
Good morning. I'm Tiffany Willis, Vice President and Head of Investor Relations here at SBUX. And on behalf of our leadership team, we welcome you to our 2022 Investor Day. Now, before we shift into our presentations, allow me to cover just a few housekeeping items, such as our forward-looking statements that we made available at the beginning of this meeting for everyone to reference. And second, I would like to share our agenda for the day. And as you'll see, we have an action-packed day brewed just for you. Now you may be wondering, wow, this is long. But don't worry, we have plenty of coffee, okay? And then third, for everyone joining us virtually online, you'll be able to follow these presentations, and they'll also be made available through our website for everyone to access throughout the day. Now with that, let's get this show started in a way that only SBUX knows how, and that's through our coffee tasting. So please help me welcome Michelle Burns, Demetrius Brown, and Nisha Hassel to the stage.
Good morning, everyone. As Tiffany shared, my name is Michelle Burns, and I lead our global coffee team here at SBUX. I am so honored to be here today, and I believe the last time that I was with this community, we were in New York. So welcome to Seattle, and it's great to have you back. You're in for a great day. I'm honored this morning also to be standing alongside two of my SBUX partners, Nisha and Demetrius. So, over our most sacred rituals at SBUX, one of them is always connecting over coffee. Our tradition has often been tasting hot coffee, the highest quality, ethically sourced Arabica coffees from all over the world, as we have done for over 50 years. Well, I'm also here to tell you that all that care and quality continues, but it's a new day, and the fact is, cold is hot. So, today, we're really proud to share with you a future cold beverage that we will be tasting in just a bit. But before we do that, Demetrius, I'd love to invite you to introduce yourself and tell us a little about you.
Thank you. My name is Demetrius Brown. I'm a 4.5-year partner at Kent Flexible Plant, where I'm currently plant lead. The highlight of my day really is bringing in coffee from all over the world, from the farmers, roasting it to its own certain character and profile, and then shipping it off to Nisha and all the Green Aprons in the store, which I'd really love to thank the Green Aprons. They're out there on the front lines every day, and without them, there's no me, manufacturing, or distribution. whether it's cold brew or our journey, I'm really excited for tomorrow.
All right, awesome. Thank you, Demetrius. And give it up for Demetrius and his green apron. Bringing a little flash. And Nisha, who for the very first time today is wearing her Black Coffee Master apron. So congratulations. Nisha, tell us a little bit about yourself.
First, thank you, Demetrius, and all the Roasted Plant partners, because we in the stores couldn't do what we do and serve our customers if it was not for you all. So appreciative of that. Hi, friends. I'm Nisha Hassel. I am an almost 8-year partner. I started in the Chicago area, and I moved to Seattle in 2016. And I worked at various stores throughout Seattle. Currently, I work at our heritage store in Pike Place Market at the very first Starbucks store. So I have the unique opportunity to welcome all of our guests from across the world and share coffee and culture and a little bit of the store company history with them. Yeah.
Awesome, thank you. And Nisha and I both share starting in Chicago, her 8 years ago, me 28 years ago. So it just kind of goes to show the beauty of this company and the expansion of what we do. Now, we created Cold Brew in 2015 and brought the best of flavor and heritage of Starbucks to our customers as a new cold coffee offering, and it has been growing ever since with the launch of Nitro in 2017 and then the incredibly favorable and favorite cold foam in 2018. But maybe instead of telling you all about it, let's all have a taste of this fantastic beverage that will be coming out in the winter.
All right. So we'll take a couple seconds, and as the coffee's coming out, yep.
Here come our Green Apron partners.
All right.
Right on. Thank you. And now while they're passing, our commitment to craft and great tasting coffee truly remains our ultimate responsibility. As I mentioned earlier, cold is hot. In fact, two-thirds of beverages served in the U.S. today are cold beverages. Now, we've taken our coffee leadership to a next level through cold, maintaining a premium, coffee-forward beverage that is innovative and differentiates us from all others. Now, cold brew is our third fastest growing segment over the last 2 years with a 30% CAGR. It's contributed significant growth over the pandemic. Cold brew alone is over a $1.2 billion business and growing. Again, let me say that. 2-year, 30% CAGR on an over $1.2 billion business. And I think really importantly, we are meeting our customers in relevant ways. Cold, refreshing, customized beverages that are largely enjoyed by our largest customer segments, Gen Z and millennials. Now, I think it looks like everyone has a beverage in their hand. Nisha, why don't you go ahead and lead us in the tasting?
Absolutely. So I'm excited to introduce our pistachio cream cold foam cold brew. It will be launching in stores in winter 2023, so very soon. It is our cold brew, and it has a pistachio cream cold foam on top with a cocoa dusting and a nice citrus spritz. This drink was inspired by our pistachio latte that is served in our roastery stores. It launched to commemorate the opening of the Chicago Roastery back in 2019.
All right, let's take a taste. What do you think?
What do you think?
Yeah.
How about the orange? Oh,
Yeah.
my gosh.
Little orange zest.
Yes.
The pistachio, the beautiful cold brew. Just a fantastic, fantastic beverage.
I know our customers are going to love this.
You think customers will love
The
it?
customers will love this, yes.
I can't wait till this comes out.
Right?
They will.
She talks to how many hundreds of thousands of them every single week?
About 6,000 a week.
Yeah, 6,000 customers a week. So our cold brew is truly unique with our signature Starbucks roasted beans from Africa and Latin America as the base for this cold brew that brings out the acidity, this brightness that you get, perfectly roasted, blended, and crafted with passion and care. So thank you for joining us in a coffee tasting today. Thank you to Demetrius and Nisha for sharing your passion, your commitment to your coffee and to our customers.
Thank you, Michelle.
You bet.
Thank
and
you.
thank you to our investing community for joining us.
Thank you, everybody.
Yeah.
Thank you.
We hope
All
you all
right.
get a little boost of Starbucks cold brew energy. energy to begin your day. So cheers.
Have a good day.
Cheers.
Have a good day.
Thank you. How was that coffee tasting? I now have the distinct honor and absolute privilege of introducing our iconic founder and interim CEO of this company that we have all grown to love, the one and the only, Mr. Howard Schultz.
Good morning. It's great to see you all. It's really going to be a seminal day in the history of Starbucks Coffee Company. Let me first acknowledge our chair, Melody Hobson, is here this morning. Melody, please stand up. We also have, I think, about 30 of our international partners who have traveled very far to be here. Please stand up and be recognized. Thank you. Thank you, guys. Thank you so much. Well, it's been an interesting 5 months for the company and for me. And I think as we prepared for this morning, I think all of us could not be more excited, more enthused to really tell the story of the future of the company. And if I had to pick one word to describe what we're going to share with you, it would be ambition. Now, if you look about the slide behind me, you see Starbucks stores all over the world. But who could have imagined that a company that began in 1971 and had 11 stores in 1987 and just 100 employees would one day have 35,000 stores around the world in 80 markets, serving 100 million customers a week and approximately 400,000 people wearing the green apron. That was ambition. That was ambition. That was the entrepreneurial DNA of the company. And that was the courage and the curiosity to see around corners and really do things that other people did not think was possible. But here we are. And what you're going to experience today, you're going to have a front row seat, is that the ambition, the entrepreneurial DNA, the curiosity and the courage to see around corners and make big bets has never been greater than today. Now, there's one difference between today and years past, and that is the strength of the equity of the brand and the demand that exists for Starbucks coffee all over the world, which gives us extraordinary levels of encouragement in terms of what we have planned. Now, let me begin by telling you a story that kind of defines the entrepreneurial DNA of the company. Here it is. In 1996, just 4 years after the IPO of the company, we had less than 400 stores, and we were getting calls from all over the world for Starbucks to open up internationally. Now, here's the thing. None of us had any international experience to speak of, except one of us was from Canada. And so, with all the inquiries that we were getting, we decided to take a tour around the world. Remember, just 400 stores. We were a young group of people. Some of us had never been to Europe, never been to Asia. And we took this tour around the world, and we saw an extraordinary level of opportunity. And we decided that we were going to open up in Japan. Now, the board at the time, given their fiduciary responsibility, we had no experience, said, Howard, we need to hire a consulting firm to help us understand what the opportunity is and the challenges. So we did that. Now, I'm not big on consultants, but we did it. They went out for months, did a comprehensive study of the market, came back to the board with a thick book, and the headline was, if Starbucks goes to Japan, it'll be dead on arrival. Dead on arrival. Why? Our no smoking policy would not go well with the Japanese consumer. Certainly no Japanese customer would ever eat or drink in the street. They would lose face, and the cost of real estate would be too expensive. So what did we do? We listened, and we decided to go to Japan. And so in 1996, we opened up our first store in Tokyo in a great site in the Ginza. But we made one calculated mistake. And the mistake was we opened at the wrong time of the year. August in Tokyo is 100 degrees with 100% humidity, and we had no cold coffee at that point. No Frappuccino, just hot coffee with 100-degree weather. So the night before, I say to our Japanese partner, through a translator, Yuji-san, you have to understand, we made a mistake. We should have opened up in the winter. It's going to be a tough day. The translator was afraid to tell the truth. And she says to him, Mr. Schultz says it's going to be the biggest day in Starbucks history. I'm dying. I get to my hotel room, and I have an enthusiastic person on the other line saying, Howard, you got, we have incredible news. CNN is going to cover the opening live. I didn't sleep the whole night. Wake up that morning, Howard Bihar, who's here. We rush to the store at 6 a.m. And as we're driving to the store, there is a line around the corner. And I turned to the translator again. And I said, Yuji-san, did you hire extras? Turns out they slept overnight. We cut the ribbon, and a young man, doesn't speak a word of English, rushes to the front of the line to the barista and says, double tall latte. And at that point, we all knew we were home. That was 1996. Just imagine what's happened since then. 400 stores now in Tokyo, 1,800 in Japan, 18,000 stores in 30 countries around the world because of the entrepreneurial courage, commitment of the leadership team, which you're going to see in spades today. Now, from the IPO in 1992 to 2008, we accomplished something that was unprecedented, never before done. 64 consecutive quarters of positive comps, 190 consecutive months of positive comps, while cannibalizing approximately 30% of our stores. Never done before. Unheard of. There was really an extraordinary level of growth, development, and just what we were doing as a leadership team in the company. And all of that was based on the quality of the coffee, the equity of the brand, and the currency of trust that we were building with our people and customers all over the country. And then, unfortunately, 2008. Now, 2008 was a cataclysmic financial crisis. We all experienced it. But there was something else going on at Starbucks. And we have to be honest about what happened and what we learned. And that was a disease entered the company in 2008, and it was hubris. It was hubris in which the company was chasing, measuring, and rewarding the wrong things. The stock price, comp store sales, operational efficiency at the expense of the customer, and Starbucks lost its way. And we went negative. Not only did we go negative, but look at the headlines. Some of you might even recognize that some of those headlines might have been yours. So what did Starbucks learn? What did we learn about ourselves? And probably most importantly, what did you learn about us that is threaded into the year 2022? Now, what we learned about ourselves is the resiliency of the brand, the relationship we had with our customers. And in 2008, the bloom was off the rose. Everybody was counting us for dead. And believe it or not, we did our best work. The level of innovation was extraordinary. What we did in 2008 was literally transform the company. Now look at this. 2008, we built for the first time our rewards program. That led to mobile order and pay, which is currently a significant part of our business. 60 million rewards customers around the world, 30 million alone in the US, and driving about 50% of our business. Born in 2008. Bottled Frappuccino. Here we were. We had blended Frappuccino in our store, and we said, why don't we bottle it and create a CPG business? Very few bricks and mortar companies have ever been able to do anything along the lines of the CPG business, which you'll hear about in a minute, in terms of what we've been able to do. Bottled Frappuccino led to a multi-billion-dollar partnership with Pepsi-Cola. Thirdly, we embraced our coffee. And in 2008, we said we need a coffee that appeals to the masses of Starbucks customers, beyond our core customer base. And Pike Place Roast was introduced in 2008. Today, the biggest selling coffee in the world for Starbucks. Again, innovation. And then it was Clover, recognizing that we needed to really produce the highest quality brewed coffee in a new machine, a new basis of how we're going to brew coffee. Well, what you're going to see today in the Trier Center is that Clover has led to Vertica. And Vertica will be rolled out nationally. Coffee on demand, highest quality coffee in the world, and significant savings in waste. That was 2008. Now, what happened since 2008? 2008, with everyone saying the world was over for Starbucks, we bounced back in approximately 17 months. In 17 months, we were back. Positive comp store sales, opening new stores at record numbers, the affinity of the brand, highest level of retention among our people, and we were back. So what did we learn? We learned that there was a crisis externally, there was self-induced mistakes, and we had to look in the mirror and say to ourselves, what is the core purpose and reason for being for Starbucks? And it's always been the same. And that is, our ambition has been to create a great, enduring company, to achieve outsized levels of returns for our shareholders and a level of benevolence and conscience in terms of the equity of the brand and how we share success with our people. And from 2009 or so until today, we were doing things again that produced $100 billion in market cap for the company. And if you look at where we were, 11 billion, 20 billion, we went all the way to $100 billion in market cap, growing the company successfully, embracing the conscience and the sensitivity of the brand and what we stand for. And then once again, crisis occurs. Now let's just talk about what that is. 2008 was not a proxy for what has happened in 2022. There is no textbook whatsoever for how to navigate through a pandemic, the likes of which we've all seen. No proxy. But what it was a proxy for, unfortunately, is there was self-induced mistakes again, where we lost our way. And so when I came back in early April with the next generation of leaders at Starbucks, we looked at 2008 not as a proxy, but as a proof source of the capability of the company to once again innovate at levels that had never been seen before. And what I'm here to tell you is that the level of ambition, the level of innovation, the entrepreneurial DNA which created the company has never been greater. Our sight line in terms of what we see for the company is extraordinary and different than 2008. In 2008, we came back in 17 months, but we did not have demand. Remember, we had negative comps. We had negative traffic. Right now at Starbucks, domestically and around the world, record demand. Inflation number comes out today. So far, we have been immune from any recognition whatsoever that there is a downturn in customer traffic, a downturn in terms of average ticket. In fact, in terms of our business, the most significant thing that I can see is that despite the fact that the business has changed dramatically, 50% drive-through, 25% mobile order and pay, 70% cold, Starbucks has adapted. And underneath all of that is the relationship we have with our customers. Record demand. Our international partners are in the room today, with the exception of China. Every single market internationally is either meeting or exceeding plan. And if you look at the innovation that's taken place, go to the next slide, please. What we've been able to do in just 5 months is quite something. And it's just the beginning. What you're going to witness today is a level of thoughtfulness, understanding, and a complete level of line of sight on how to once again capture the sizable market for Starbucks, in which every market that we're in, we will be the leader in the U.S. and around the world. Now, what gives me comfort to say that? Well, just 2 weeks ago, we introduced our fall campaign, and we have the #1, this is an incredible thing to say, we've been in business 51 years. Our highest record sales week in our 51-year history was 2 weeks ago. And I got to tell you, we are just getting started. Now, when I think about where we are today and the future of the company, we clearly had to recognize that I'm 69 years old and I'm long in the tooth, and it's time for a new CEO. And so the board, the search committee, with Melody leading the search, we went out and looked for a global citizen, a servant leader, somebody who had an innate understanding of the heart and conscience of the company, someone who had the entrepreneurial DNA in his blood, and someone who could embrace the vision of Starbucks in his own way. And I'm so proud to tell you that we found and we hit the jackpot with a #1 draft choice. So, ladies and gentlemen, let me welcome Laxman Narasimhan to the stage. Laxman. Thank you. So I don't want to embarrass, come over here, Laxman, please. Sure. I don't want to embarrass Laxman. This is his first time meeting you all. I can just tell you, in the time that he has been in Seattle, he's captured the hearts and minds of our people. And I think, thank you. You know, you can't teach heart, but his deep sense of humility, his understanding of the human connection at Starbucks, his understanding of people who wear the green apron and work so hard on behalf of the company, I just think he's the perfect person for the job. And so, Laxman, I want to formally welcome you to Starbucks, and I have something for you.
Oh, thank you, Howard.
So I've had this on my desk for almost 40 years, and a Guatemalan coffee farmer gave me this. It's been sitting on my desk, as I said, for almost 4 decades. It's got me where I am today, a little bit of luck along the way, and I just want to give it to you. And just as you put this on your desk, think about the responsibility we have to all the coffee farmers and everyone who wears a green apron around the world. Thank you.
Thank you so much, Howard. Thank you.
Thank you. So we're going to give Laxman an opportunity to speak to our head of HR. Sarah Kelly is going to come up and speak to Laxman for a few minutes on stage. Sarah?
Thank you. Thank you. Thank you. We're live with Sarah Kelly.
Oh. Well, good morning, Lakshman.
Thank you.
It's great to be with you this morning with our investor community to allow them to learn a little bit more about you just as we've been learning about you these last few days.
Thank you.
And I know Howard said it, so I might just start off with I think, grounding us in what this search has been about for a new CEO. And Melody and Howard have shared, we've been looking for a global citizen, an entrepreneurial, a proven global operator, a world-class strategic thinker. And we have found all of those things in you. But above all, we were looking for humanity. We were looking for a purpose-driven leader. And that is what you bring to Starbucks. And so I want to start this conversation today around humanity. And as I think about humanity, and I take us back to our origin stories, one of the most fundamental aspects of our origin are our names. So, Lakshman, can you share a little bit with us about your name, your origin story, and how that has shaped who you are today?
Well, thank you, Sarah. And it's really an honor to be here. And it's a privilege to be asked to lead this company. I haven't started yet. And so I'm really looking forward to being in the audience with all of you, listening to the ambitious plans that this amazing team has put together. Firstly, you said my name right.
Thank you. I've been practicing.
Yeah, you have. It's showing.
Thank you.
It's Lakshman Narasimhan. Now, by the way, I have a barista name, and it's important for me to say it because when I go to the stores, I always tell them my name is Lax, L-A-K-S, and they write it down and they get it right all the time. But Lakshman Narasimhan. So Lakshman is actually the brother of Ram in the famous Indian story, the Ramayana. And I was named after my brother, Ram. Now, Ram unfortunately passed when I was 6 and he was 8. And so it's a real story of loss, a real story of many challenges that have been thrown at me. I came to this country with nothing. And so sitting in front of you, I truly am the epitome of the American dream. I had many ladders given to me, much like I know the ladders that Starbucks offers to its partners to get to a better place in life. So loss, challenges in life, but yet the American dream. And so it's not really what happens to me, but how I respond to it that defines me. So Sarah, at the end of it, resilience is what defines me.
Mm-hmm. And defined by resilience, defined by purpose, you've had a remarkable career. So can you thread through some of those professional experiences and talk a little bit about what you're going to be bringing to Starbucks?
Well, nothing could really prepare you to lead this beautiful, this special company. But I hope what I can do is call on a combination of experiences that'll hopefully I can bring to bear on the company. The first is, I'm as global as they come. I've lived literally everywhere and worked everywhere, and I've had operating experiences, leading businesses with large numbers of people in varying environments, developed environments, developing environments, emerging markets. I have led transformational journeys that have resulted in the creation of a significant amount of value. But I'm truly in my zone when I am leading, energizing, mobilizing large numbers of people around a mission. Now, I've been a CEO before, but what really attracted me to the company is this mission. It truly inspires me.
So let's talk about that mission, because one of the things we've talked these last few days about is the impact that Starbucks can have on the world. Can you tell us a little bit about how you see that impact and what you believe?
I think the best way to do this is to just tell you a bit of a story. I came here to Seattle to spend a weekend with Howard, and he took me to the store upstairs. And I think all of you met Nisha. Mm-hmm. Nisha, you did a great job, by the way. Thank you very, very much. Woo! So I met Nisha, and Howard said, hey, can you fix up something for my friend here? So I asked her, what do you recommend? And Nisha said to me, I recommend the vanilla sweet cream cold brew. I said, wow, I've never had that. Can you make one for me? And she said, yes, I can. And she did, and it was amazing. The Sunday morning, Howard said, we've got to go to Pike Place. We've got to go to the place where it all started. So we went there, and the store opened, and amazingly, Nisha was there. She looked at me, and she said, I recognize you. Now, it's possible that she recognized me because I was Howard's friend. But she said, what would you like? I said, I'd like a espresso doppio macchiato, which is my drink of choice, with a bit of hot milk on the side. And she said, got it, I'll make it. Now, when I came here, I'm sort of looking for a place to stay, looking for care for my mother. I thought I'd go to Pike Place with you. And we went there, and sure enough, Nisha was there. And what did Nisha say? She said, I know you. When the announcement came out, I went to Christy in the store, and I said, I know this guy. I know this guy. Now, it's amazing how in that one moment, she demonstrated to me what the power of this brand was. That the power of this brand is about connection over a cup of coffee. And if we can get that to happen, millions of times around the world, always, the opportunity set for this company is limitless.
When we were in Pike Place together, you put on the green apron for the first time. You got behind the bow.
What a stressful time.
You pulled shots, you steamed milk.
I got a stain, by the way.
You did, your first stain.
It wasn't voluntary, by the way.
Well, you did an exceptional job. So tell us a little bit, you're going to go through barista training, all 40 hours of barista training.
Stressful.
And become a certified Starbucks barista in the near future, once you start on October 1st. Can you tell us a little bit about how you're gearing up for barista training?
Well, the first thing is, I've had a lot of time and a lot of conversations through the process. The first is I spent a lot of time with Melody Hobson, our chair, and we see the world with similar eyes. I've had interactions, very encouraging interactions, with members of the board, and I've also spent time with Howard. This whole weekend, we literally talked for a weekend. I've spent time with him in his New York apartment. And we've talked about the company. I was mesmerized. Go to stores with Howard is something else. You see the world through his eyes. You see what he looks for in design, what he looks at from an artistic perspective, the joy he has when a customer's order is fulfilled, and frankly, the joy he has when a partner responds and connects with customers, just the joy. So I got to see all of that. So one of the things we did, which Howard and I did, was we co-designed this structured emotion. And it's going to mean certainly time with Melody, time with members of the board, but also it's going to mean really a learning of the culture of the company, engaging with the people of the company, understanding the brand, understanding the secret sauce of this special company. So there's time in stores, there's time in the roasting plants, there's time with partners, there's time with investors, there's time observing customers. And so it's an incredible opportunity, by the way, for me, to be learning at the feet of one of the best entrepreneurs in the world. And that's what the next 6 months are about.
That's excellent. Well, we can't wait to take you through your 40 hours of barista training.
I thought it was 30, years. By the way.
It's 40. It's 40 hours.
Oh, my goodness, 10 more. Okay, I got to make it through. Yeah.
You're going to do exceptionally well, backed by all of our Starbucks partners.
Of course, thank you.
So this is Investor Day, and here today we're here to talk about value creation. Can you talk a little bit about how you see new value at Starbucks and value creation for Starbucks?
I've been an operating CEO. I've been the CFO of a large operating division. I've engaged with investors. And I recognize that the value creation model for this very special company is very unique. And it's grounded in the idea that we have to meet or exceed the partner experience. It's almost the second place for our partners. And through that, we meet or exceed the expectations of our customers. And we do that with superior product, with innovation, with distinctive experiences across the physical world as well as the digital world. And so if we do a great job with our partners, we're going to exceed the expectations of our customers, the third place as we have defined it. And through that, we have an impact on the community. And we do that in a sustainable manner. It has a very positive impact on the world. And so as I look at value creation, this is the model that is core to the value creation model of the company. And if you do it right, the opportunity set is limitless. And I know what it will lead to is outsized returns for our shareholders.
I couldn't agree more. Exceeding the expectations of our partners is where it begins, right, where it starts. Can you share, just as we think about you joining the organization, and tell us something maybe that the world doesn't know about you, something that you want us to know as you join Starbucks?
Well, if you read about me, I think what you're going to see is a lot of right brain stuff. A lot of things analytic, this, that, strategic, and all that. But what's not really not known is the left brain side. My love for art, my love for design, the fact that I write poetry, the fact that I care deeply about people, and ensuring that what I can do is provide ladders to millions. That really inspires me. And I hope what I can do is bring both sides of this to bear to this beautiful brand, to this beautiful company, to the beautiful and amazing people that work in it, and help it realize its limitless potential.
Well, thank you in joining me in this conversation. And what I can share on behalf of all of our Starbucks partners is that we cannot wait to begin this brilliant journey with you and the limitless opportunities ahead. So
thank you so much. And Howard, I want to thank you for this. I'll live up to this. Thank you.
Great. Thanks, guys. Thank you. I think in just a few minutes, you saw somebody who just has the natural proclivity to be himself and so comfortable in his own skin, and the kind of person and leader that is the perfect person at the perfect time to lead the company. And so over the next 6 months, as Laxman said, we'll spend time domestically and around the world, and he'll be in a great position to lead the company, and I'll stay on the board with Melody and do my best to support him to ensure the fact that he's successful. I'm only up here for another few minutes, and then I'm going to give it to my colleague, Frank Britt. But let me just say a couple of things about how I feel about this moment in the company and why I came back and why I feel so confident and enthused about the future. You know, there's a word that's not used very often in business, and the word is love. I've spent my life at Starbucks, and my love for the company, my responsibility to our partners is at the highest level possible. And when I came back over the last 5 months or so, I was once again reminded about the power of the culture and values and guiding principles of Starbucks, how unique it is, how rare it is, and how it must be preserved and enhanced. We had a board member for many years, Senator Bill Bradley, who was from Missouri. And once we're talking about the future of the company, and he said, "You know what the motto is for the state of Missouri?" I said, "No, I don't know what the state motto is. What is it?" And he said, "It's the show me state." And so I want you to think about that. You're in for a really wonderful day, a world-class level of insight, perspective about the brand, the future of the company, and our responsibility as a leadership team in creating confidence and trust with you is to show you. And we've got to show up every day. We don't take for granted the responsibility that we have to our shareholders and all of you. And I said something the first day I came back in a company-wide meeting, which I actually believe more today than I did then, and that is the best days for Starbucks are ahead of us. It took us about 17 months to come back in 2008. I'll go on the record and say it's going to take less time this time around. And I think you'll see that today with the quality of the people presenting, their understanding of the business, and the opportunity in front of us. I'm going to steal a little bit of thunder from Rachel and just tell you some of the numbers that you're going to be hearing about. Double-digit revenue, double-digit EPS growth, continued strength in our comp store sales, record numbers of accelerated store growth, and a significant return to shareholders in the form of dividend, and a return at some point to buying back our stock. All of that will be framed for you in the strategy and how we're going to go to market domestically and around the world, and the plethora of opportunity that Starbucks Coffee has. We're reinventing the company, but we're not reinventing what we do. We're just reinventing how we do it. I'll remind you about something else. Given the fact that there's been such a significant change in consumer behavior, where there's a different level of pattern recognition post-COVID, you would think that the relevance of Starbucks Coffee Company would be fading. It would make sense. People are no longer coming to the store the way they would when they used to. But the question really is, given the fact that there's been such a significant change in consumer behavior, how is it that we are in a double-digit comp state in which our customers are using Starbucks in a different way, but more than ever before? And the level of transition that we've had is how quickly we have adapted to drive-through, mobile order and pay, and meeting customers where they are. We didn't have a delivery business 18 months ago. That delivery business is on fire today, and it's just the beginning. You're going to hear so many new ideas today. I worry sometimes when I sat through this yesterday if we're only giving you too much. But you're going to see all the things we're working on, the excitement we have for the future, and the confidence we have, and how quickly Starbucks is going to return to the kind of financial performance that you've seen from us from the past. So thank you very much. You've got a front row seat in terms of what you're going to see. I'm excited and so privileged to be in front of you again. Thank you very much.
Good morning. Howard, thank you so much for grounding us. And Lakshman, we're so privileged to have you join our team. On behalf of our 400,000 plus partners, our gratitude for your commitment to us has only begun, but we're looking forward to the co-creation of a future that I think will be unlike any other. It has been said that there are years when nothing happens, and there are weeks when years happen. And over the last 25 weeks, since our iconic founder has returned, he has done something that is unique to a founder. He has reset and rebooted Starbucks, a company of 51 years in duration, and he's regrounded us as to what matters most at Starbucks. He's taken the ideas and the values that have always made Starbucks such a different kind of company, and he's brought it to life, and he's role modeled it, and he's inspired each of us to think differently. In fact, he's challenged each of us, and he said, you will need to see the world differently if we're going to become the next and better version of ourselves. You need to think differently if we're going to become the next best version of ourselves. And most importantly, you need to act differently. You need to lead in a different way, in a different context, in a different moment in time. And we are ready to do that. And so for today, we are going to provide you the most comprehensive and operationally transparent perspective on Starbucks, certainly that's been provided in the last couple of years. It's designed to give you appreciation for the depth, the breadth, the reach, the potential of a company that already has scale, scope, and efficiencies unmatched by any other firm, and ultimately give you the confidence you need to continue to support our very ambitious agenda for the next few years. So the agenda is reinvention. And it makes sense, right? Because we're a coffee house, and the origins of all coffee houses are about stories. And so what we're going to tell you today is about our new story, the story of Starbucks, past, present, and most important, future. And our theme is around reinvention. It's premised on the idea, as Howard just noted in his own unique way, that the compass for Starbucks remains exactly and appropriately pointed at creating experiences that allow our partners to thrive and our customers to value our relationship uniquely. However, while the compass is still right, the map must change. And what we're going to lay out for you today is what is that map, and how are we going to get there, and what are the commitments, and what are the capabilities, and what is the rationale for why we have such conviction about that happening. A question we get often is, what does reinvention mean at Starbucks? We hear the word, but give me the substance. What is it about? We think of it's about three things. Firstly, and very importantly, an iconic company of global scale like ours, you can only imagine has unlimited opportunities. And the purpose of reinvention, perhaps more than any other thing, was to establish a clear mandate and agenda and priorities. We've gone through a rigorous, frankly ruthless process to prioritize what matters most at this time in our history to allow for short-term improvements in performance, in partner experience, and in customer experience, and set us on a trajectory to a very different kind of future. So part one, prioritization. Part two is There are very tangible, targeted, substantive improvements that we are making in the P&L in 23 and 24, directly tied to the reinvention agenda. It's about fixing the fundamentals of the partner experience, the store experience, and the customer experience. Make no uncertain facts about that. We are focused on performance. And it's a process. It's a process designed to reveal insights, to provide stepping stones to discovery that you can only get through the application of the work we're going to do. And so we're embracing this idea. We're embracing the idea that discovery are really accidents that meet a prepared mind. And we are trying to earn the opportunity to have that prepared mind to put us in a position where we can do our best work. And so ultimately, we are a company that's focused on improving the basics, future-proofing, and ultimately enabling different kind of discoveries than we ever have before. And then finally, in the theme of focus, just to be even more clear, this reinvention plan, phase 1 of the company reinvention, is focused on U.S. company-owned retail stores with a primary emphasis on the green aprons in the store. That said, we have a very expansive agenda to take what we're doing here and expand it around the world in partnership with our various licensed partners and domestic partners in each of the countries, and to expand to all of the partner cohorts of Starbucks. Our plants, our distribution centers, our support centers, and of course, the folks that work each and every day in our stores on behalf of our customers. And so that's kind of the master plan. For those of you who took a little bit of time and listened to the last earnings call, you'll recall we introduced the components of the reinvention agenda. Component number 1 and number 5, 1 being about mission and 5 being about a different kind of relationship with our partners. We will not go through those in great detail today, but hopefully you'll see that threaded through all of our comments and all of my colleagues' insights through the rest of the day. And instead what we will do is we will go deep on the core components of the reinvention agenda, which is the partner, the customer, and the store. That will be the emphasis of the rest of today. And so with that in mind, let me just say why that is the approach we're taking. The premise is that these 3 elements need to work individually better, and they need to work as a system in kind. They need to be synchronized in service of ultimately an experience that works best for our partners and best for our customers. And so what we're trying to do in the next 90 minutes is to unpack each of these pieces in great detail to give all of you the depth and insights as to what, the why, and the how of the reinvention agenda on these 3 dimensions. Now, as we do that, we are very mindful that coffee remains very much at the epicenter of who Starbucks is. And so all that we do is premised in the idea that the heart and the soul of Starbucks is premium coffee. It's the DNA of the company, and no one should be confused. Whether it be local to global, farm to cup, partner to customer, our reason for being is around coffee, because coffee is the medium we use to create human connection. And at the end of the day, we're a human connection company that uses coffee as our medium to enable that to happen at scale. And that is the essence of the brand of Starbucks. And that is why we are always quite declarative that we are a premium coffee company. We are not a food company. We're not even a beverage company. We're a premium coffee company because that is the soul of the company. And we aspire to continue to be the world's leader in premium coffee in both the art and the science of coffee and coffee innovation, which gives us permission and opportunities that are unparalleled for new kinds of occasions, new kinds of channels, and frankly, even more countries. That is the essence. From a competitive strategy perspective, the Starbucks business model is a competitive advantage that says from bean to cup, we have built a one-of-a-kind, vertically integrated platform that combines sourcing, blending, roasting, and delivery at scale, with scope, and with an unmatched level of sophistication. And that is the reason why we earn the opportunity each week around the world to enable 400 million occasions a week that Starbucks supports around the world, and yet it's why we even have more conviction that the white space for Starbucks ahead has never been greater. So with that said, we have these three components. I'm going to take the partner section and go deep, and then I'll hand it off to Brady Brewer to go through customer, and John Culver will go through store. So let's dig in. All the discussions today around balance sheets and income statements will be quite robust. But there's a fairly interesting argument that says the most important currency of Starbucks is actually not on the balance sheet or the income statement. It's the currency of trust, the currency of trust we have with our partners and our customers. The reality is, and we are embracing reality, Howard has encouraged us to embrace the ruthless facts in service of getting to a different and better place. We have a trust deficit. We have a trust deficit with our partners. Not all our partners, but far too many of our partners, Green Apron partners in particular in our stores, we have not lived up to the highest level of obligations. Our historical aspiration of meeting and exceeding the expectations of our partners in service of our customers, we haven't not done that consistently. There's a bunch of reasons. Some are exogenous, but frankly, a lot of it is self-induced. And we accept that, and we embrace that, and we own that, and we plan to do quite a bit about it. We also acknowledge this generational shift happening. There's an awakening. There's a new dynamic emerging in the labor market writ large, and we need to be responsive to that as best we can. And so what we're going to talk about today is what are we doing about our approach to reinventing the partner experience. Now, the good news is we start with a position of strength. And while there are always skeptics, the reality is that we didn't follow a playbook relative to the creation of new kinds of experiences for our partners. We invented the playbook. We invented the playbook that companies around the world look to for what is best-in-class standards, practices, and ethos relative to partner experience and frontline workers. And so the first reason we have conviction is because we've done it. We know how to do it, and we believe it's an opportunity that is unlike any other. The second reason, though, we have conviction, which actually might even be more important, is because we are not creating this by ourselves. Our partners are creating the future of Starbucks. Our line is, we are creating the future by partners for partners. Our partners are co-creating the future with Starbucks. This is not a project in some ivory tower. It's a bottoms-up approach. It's a democratization of innovation at a company that has unique scale, engaging the people who have a unique window into America, who are most proximate to the challenges and the opportunities that the marketplace provides us, and coming together as one unit in order and in service of helping improve the partner experience and the store experience. And that's why, since April 4th, we've committed over $1 billion to improving and elevating the partner experience, which we view as a significant statement of our intent. And yet, as you'll hear through the rest of this conversation, we're, quote, just getting started. So let's talk about, if you just zoom out just for a minute, Starbucks does not operate in a vacuum. It's part of a much larger context. So let's talk about the context of the market in which we compete. And in this case, it's the competition for talent, not the competition for customers. So it turns out the category we're in, the frontline worker labor market, is going through dramatic changes, significant changes, unprecedented changes. More than 50% of the people that worked in this sector 3 years ago are no longer working here. If you looked at last week's jobs report, there are 2.5 million open positions. 2.5 million open positions. Now, keep in mind, this is in a context where participation rates in the labor market are about 62, 63%, which are near historic lows. And unemployment is near an historic low at 3.7. Those challenges pale compared to the challenges of finding talent in the category we're in. So that is the reality that we deal with, and we have to embrace that. Having said that, companies like Starbucks have always led by example and need to lead by example. And we have given deep reflection to what are the kinds of things we need to begin to do differently as a company, and that we exceed many of our leading company peers doing much the same. So just briefly, first is a shift in orientation. We need to shift our mindset, so the from to, if you will, from labor to talent, from thinking about people in a store as a cost center to a value creation center. Thinking about the idea that where we get talent can't only be from the traditional sources. There are lots of other components of the labor market we need to tap into. those are the shifts we start to see in orientation. Let's talk about the work experiences themselves. Well, firstly, and most importantly, people need scheduling empowerment. They need to define their life, not be constrained by the company. And so you see companies like ours and others embracing the shift from fixed schedules to anytime shifts, thinking about wages as, of course, important, but thinking about a total rewards program. And then perhaps most importantly, not viewing all baristas as equals. Every person is unique in where they are in their lives and where they are in their careers, and we need to embrace a much more personalized journey in enabling them to achieve their highest and best self, or as Lakshman would say, giving them the ladders they need to meet their goals and aspirations in their life. And then finally is job design. The reality is the work we do in our stores today is too physically hard. It's too physically hard. So you should see and expect, and will see throughout today, implementation of workflow tools and automation tools that allow the lower value-added tasks to be done and to free up time, energy for the two things that matter most in a Starbucks store: the craftsmanship of the production of the coffee itself, and most importantly, the connection to customers. And so we are beginning to see a shift in what we do, and that shifts our mindset to not just think about the productivity of a person, but what are their needs? What's the whole person design that's important? And then finally, companies like Starbucks, particularly, need to think of themselves in the larger context of the labor market as not talent takers, but talent makers. In the same way we've embraced sustainability in the green energy context, we need to think about the sustainability of the talent market, because the talent market is a rate-limiting factor to companies like ours' ability to grow, and we see tremendous opportunities for us to contribute to grow the pool and move away from this zero-sum game kind of model. So that's the context of the labor market at large for frontline workers. What does that mean to Starbucks? I'm glad you asked. Well, as you probably know, we are typically and historically a top employer in the category. One of the things we look at very carefully is the Aon, multinational company Aon, which is kind of the Malcolm Baldrige Award equivalent for benefits. Starbucks is in the 100th percentile, 5 years in a row relative to benefits, to which we say, very pleased, but hardly satisfied. The reason we're not satisfied is this past year, in the last 12 months, we've added 183,000 people to the Starbucks Green Apron in the U.S. alone, and we have very ambitious plans for the future. So we're going to need to continue to distinguish ourselves and be thought of as a preferred employer brand in the same way that we're thought of as a consumer brand. Let's look at some facts. We've taken some data from across the category, we've normalized it and indexed it for you, and what the data shows is, firstly, that Starbucks is demonstrably better in relative terms for turnover or retention, which are essentially the inverse of each other. So the data shows Starbucks is better than the market by a lot. You might say, well, that's interesting, but how about you compare Starbucks to Starbucks? Because that's really the most important benchmark. We agree. If you look at the data here, not surprisingly, turnover rates peaked during COVID. Remember, this is all indexed. These are not absolute terms. The best and important news is the actions we've taken in the last 25 weeks are already starting to have effect. And you can see the turnover rates on the far side of the page are starting to go down, or said positively, retention rates are starting to go up, and we couldn't be more pleased. But we also are hardly satisfied. And so the work we have ahead is to say, let's build on the momentum we've built over the last 25 weeks, and let's see where it can take us. The reality is that it's still a very, very difficult environment inside of our stores, despite the incredible progress we're making as a company. And so what we wanted to do here is to give you some sense that we accept empathetically that we have not lived up to our end of the bargain complete with our partners. We need our partners to help us figure out how to navigate to the future. And what this conversation then turns to is, what are we going to do about making it a better place to be in service of their needs and ultimately in service of our customers? The term we've been using is thrive. What does it mean to thrive? The word thrive, by the way, means not just growth, it means vigorous growth. When you thrive in your life, you're playing at a different level. And we think that word matters a lot. So as we talk about thriving and think about thriving for our partners, let's hear from our partners as they think about this topic in their own lives.
A thriving partner is one who's proud of their craft, and it feels empowered to work on their development throughout their day.
Feels confident in their role, has a growth mindset, and is constantly looking for opportunities to improve.
A thriving partner is one whose personal and work needs are met.
The partner that feels empowered, supported, loves their role, and bringing their very best self to work every single day.
A thriving partner is a partner that's engaged, passionate, and they've chosen Starbucks because not only will they grow as a partner, they want to grow as a human being.
So the notion of thriving is the architecture and the framework we're using to evaluate and self-evaluate and design the future of the experience for our partners. And as we think about that, we think it includes three components. Firstly, how do they thrive at work in their jobs? Secondly, how do they thrive as individuals, since their lives are much bigger than just their commitment to Starbucks? Then how do they thrive as a team? And our intent is to architect a master plan that allows each one of those components to be optimized and laddered up for each and every person, and ultimately allow the company to get a commensurate number of rewards as a result. Now you might ask, well, why does an investment community meeting have to talk about thriving partners? We're interested in the P&L and the income statement, the balance sheet, and all the other components. We're with you, but we're going to kind of give you the argument for why everyone in this room, for all the right reasons, should care deeply about what does thriving partners mean. And the reason is, it is the catalytic force that drives the value chain of Starbucks. It's that simple. It is the ignition for the flywheel of Starbucks, financially and in terms of brand equity. And here's how it works. A thriving partner, therefore, has what we call higher partner engagement scores, which is the Net Promoter Score equivalent for a partner. And when those scores are high, empirically, it drives customer connection. And when customer connection's high, well, that's when life works just as you want, because it drives top-line growth, operating income, customer loyalty, and brand affinity. And as if that weren't enough, there's a set of derivative benefits as well, as you can see in the chart here, which is we spend less in aggregate on partner acquisition because we don't need as many partners, because we have higher retention rates and ultimately more labor leverage in the P&L. And so thriving partners are the foundation of the company, and really the most important thing that affects all other factors vis-a-vis performance, however one wants to measure it. So let's take for a few minutes and talk about what we mean when we talk about the thriving concept. The first of the three is thrive at work. Now you know, because you're experts on Starbucks, we have a long history of education, healthcare, mental health programs. We are the definers. We invented things that didn't exist, like stock for part-time workers. And our list and our history is strong, but it's not enough. It's not enough. And that's why, since April 4th, we've made a series of very bold and decisive commitments on behalf of our partners. We've increased wages for all eligible stores, all eligible people around the United States. We have doubled the amount of training that we have in our stores, because all people want to feel competent and confident in their roles. We have brought back our iconic program of Black Apron Coffee Master credentialing, which goes back to the joy of coffee and acknowledges the unique skills and capabilities of our people. And in the last 24 hours, as you've probably noticed, we've rolled out two new programs. One is what we call My Starbucks Savings Program, which is designed to incent people to save. We will pay you to save if you're a Green Apron at Starbucks. And mindful that student loans remain a tremendous complex challenge for many people, we've built out a solution in partnership with a leading company to create an expert-based coaching model to help you navigate student loan challenges. Again, all of these things, as part of the billion-dollar commitment, we would say pleased, but still not satisfied. So what other things should you be expecting from Starbucks going forward? Well, we think they fall into three categories: wage innovation, well-being, and recognition. On the wage innovation side, the most important thing is actually scheduling to complement absolute wages. People need empowerment in terms of their lives, and we need to move to a model that gives them more of that opportunity. In the well-being area, you'll see us announce relatively soon a much more advanced or progressive or generous sick time accrual model. You'll also see us roll out extended mental health support and a whole new level of capability set to empower people to take better control of their lives in terms of their mental health, which we believe is essential. And then the third component is in the recognition and connection, and there's some really interesting things happening there. We're rolling out a whole new recognition program, which will allow people to acknowledge each other in the stores and across stores, and ultimately allow the customer to do the same. We're rolling out what we call digital tipping, which is a complement to the current model we have on the mobile app, which we think will create more opportunities for customers to celebrate the great work our folks do. And we're rolling out a whole new digital ecosystem that will allow us to connect in a digital way with all our partners around the United States as a complement to the relationships we have in the stores. So that's one of the three components. Thrive at work. Let's talk about thrive as individual. The drum major instinct Sermon argued that all people want to lead their parade. We couldn't agree more. And we need to give people the agency and the opportunity to do that. And how that manifests itself is people want to be able to have a path that works for their lives. Because by definition, we're all at a different place in our careers, in our lives, and Starbucks needs to embrace that. So we started in the context of the Thrive model to articulate what are alternative career paths for a barista. And then what do we need to do to create personalized experiences, much like we've done on the customer side, to enable folks to get the best and highest laddering and value creation for themselves out of their experience at Starbucks. Let me give you two examples. There's a cohort of partners we have which we call independence drivers, and their needs are crystal clear. They want the same hours every week. They need a steady paycheck. They want to bring the joy of coffee, and they want to be able to go back and meet their other domestic commitments. And we should create a pathway that allows that to happen. There's another cohort, and these are examples of some of the cohorts we've come up with, of what we call a passionate career builder. This person sees Starbucks as the path to their greatness in their careers. And we need to wrap services and capabilities and coaching and incentives and anything we can do to help encourage and affirm those behaviors and instincts they have. And so what you should expect over time at Starbucks if you join is not a one-size-fits-all experience, but one that works for you. And when that happens, we believe that will stabilize the store, improve retention rates, and ultimately allow each person to achieve their highest and best level of actualization. The third and final component of Thrive is Thrive as a team, or Thrive as together. And I think an argument could be made that the most important group that needs commitment, focus, and intention at Starbucks is actually the store manager. Because the store manager is the person that brings the love to the store. They are the heart and the soul of the store. They build trust. They create equity in the brand, both as an employer and a consumer brand. And we need to do even better of helping them. So we're rolling out, to complement the work we're doing for the Green Aprons, a new leadership model, new tools and capabilities that empower them to make different kinds of choices on scheduling, which is a very complicated part of their job and one that really matters enormously to both the culture of a store and, frankly, the financial performance of the store. And then they, too, need career maps that work for their lives. And the reason we think this is so important is because the data is overwhelming. That if you have a partner that is stabilized as a store manager over 3 years, it lowers demonstrably the turnover rate in the store. It increases customer connection scores. Those are two key factors I cited earlier. And it increases on a relative basis to an average store by plus 13%. So the store manager is the key to the whole master plan at a store level. And that means they need to thrive in their work and in their jobs and as an individual in the same way that folks in the store do. Final thought for you as you think about the architecture of Starbucks and how we're rethinking ourselves. The notion of a partner as a source of value and thinking about it as a lifetime value equation, the way you would normally do in consumer marketing type context, we think applies to our partners. However, while we are very preoccupied with the lifetime value per partner, we think it's important to get the order of operation or the sequence right, which is what we need to be obsessed with and preoccupied with, is how to create more value for the partners. Because when we create more value for the partners or to the partners, the benefits that to come off that are enormous. Firstly, we spend less money to acquire more relationships because we have higher retention, and we get more value from the partner over their lifetime. So this idea of lifetime value per partner is very much in the new thinking of Starbucks relative to the economics of talent in a store. And I think you'll see over time a lot of different innovations to come out of it, because when you have this kind of lens, it changes your aperture, and it frankly helps illuminate why it's so fundamentally important to drive retention by all the various cohorts we have of folks who work in our stores, which takes us back to the idea of a thriving partner. A thriving partner is the best way to increase the net lifetime value per person in our store, and that is the center-of-the-plate goal we have for the company prospectively. So that's the current state. Where are we going in my last few minutes with you? We are announcing today the formation of a Partner Experience Innovation Center. You will all have the unique pleasure and opportunity to go see the Trier Center, where we do R&D on equipment and operations. We're going to stand up a comparable capability set to the Trier Center focused on partner experience. If the partner is the essence of the experiential brand, and we know that to be true, we need to devote the same types of capabilities and preoccupation we have for that part of our business to complement the store operations side. And that means new technologies, new innovations, and really much more of a product management approach to thinking about talent in the same way we've always thought about it as it relates to beverages and beverage innovation. And that takes me back to the reinvention agenda: partner, customer, and store. And so the partner, customer, and store agenda is as important as it's ever been. And as we look at charts like this, while we think this is accurate, we think it may underrepresent the real need and opportunity. While it's important to make the store better, make the customer better, make the experience for the partner better, the reality is that it's an integrated system, and that the alpha of Starbucks prospectively is our ability not only to improve the store, customer, and partner, but how we connect the dots, how we synchronize, and how we make that a high-performance engine in service of financial performance, partner experience, and ultimately the customer. And when we do that, well, that's actually the definition of reinvention of Starbucks: a new way to bring a high-performing, high-capable machine that works for humans, works for customers, and works for the financial commitments we have as a company. And when we do that, it will take us back to one of Howard's notions that the future is not something that we enter. The future is something we create. And this is an agenda for a reimagining of Starbucks against all the primary components of partner, customer, and store. And with that said, I appreciate your time, and I'm happy to hand off to my dear friend, Mr. Brady.
What can I get started for you?
Oh, sorry, I'm deaf, so I can't really understand what you're saying.
Oh, I'm sorry. Hold on 1 second.
Good morning. Let's start really with the realities of today's business and the marketplace. We have a lot of challenges out there, internally within Starbucks, outside of Starbucks. How many of you are Starbucks customers? Anyone hands not raised? Well, you see it firsthand. We have our fair share of challenges, but you've come here today to hear about the future of Starbucks. Which leads me to another question. Earlier, Howard said the word ambition. And I want to ask you, coming here today to hear about the future of Starbucks, what do you still have to see today? What did you come here to discover to prove to you that our best days are truly ahead of us? If you really look inward, what would it take to instill that absolute belief? That even after 50 years, 51 years of business at Starbucks, that we're a strong brand that is poised for growth. If there's one word, you heard ambition. Does anyone else want to share a word this morning? You were all good students, I know it. I'm sure we could get a word. Anybody? One word? I thought I would hear margin. Yeah. Okay, no volunteers. How about relevance? The relevance of the Starbucks brand. Increasingly relevant with a younger and more diverse generation. How about adaptability? The ability to move quickly and adapt to fast-moving market trends. How about differentiation? Not just different, but an enduring, strategic differentiation. And how about purpose? Offering something genuinely meaningful in the world that the world needs more than ever. The marketplace is challenging, and we have our challenges, but I'd like to help illustrate that our best days are ahead of us. My name is Brady Brewer. I lead our marketing organization as the chief marketing officer, and I've been with Starbucks for 21 years. You heard Howard talk about the vision. You heard him talk about ambition. You heard Frank talk about how we're going to reimagine the partner experience and elevate their experience with Starbucks. Really, for me, what I want to share today is that we are a strong brand that is poised for growth. Very strong brand, poised for growth. And I'll cover that in 3 parts. Really, it's about elevating the customer experience. And I'll start with the essence of the Starbucks brand and how we're adapting and evolving the third place, which you've heard so much about Starbucks over the years, and how we're adapting that for a completely new era. Second, you'll hear about the strength of our brand position and the incredible growth potential that it represents. And I'll conclude by sharing some of the key accelerators in our reinvention plan. But let's start with the essence of Starbucks. Right in the center of the circles here, if you really distill Starbucks down to its essence, you'll find 2 most essential elements, and you've heard them repeatedly today: coffee and human connection. Now, I want to focus on that sense of connection for a minute. Fundamentally, we believe in the value of human connection. And we believe that there will be an increasing premium on offering genuine human connection in the world over time. Now, at Starbucks, human connection means a sense of belonging, with a sense of kindness and care, someone seeking to get to know you, and service that is deeply personalized. That is what makes Starbucks, Starbucks. Now, for many years, you've heard Starbucks defined as the third place, a place of connection outside of work and home, and that's been the center of our success, both as a business but also as a brand. And naturally, and we've seen this play out in headlines, some people in this fast-paced, on-the-go, convenience-driven marketplace have wondered, what is the role of the third place now? What's the role of the third place in the future? So here's a critical insight. As Starbucks continues to grow, the third place isn't going away. We're growing it to more places than ever. We actually have more third places now than ever in our history. Around the world, 97% of our stores have seating. But we've expanded the concept of the third place, and we're reaching people in new ways, where they need us to meet them in places like drive-through, pickup stores, delivery, mobile order, and in digital channels. But let's go deeper than that. Let's really look at what the third place is. The third place, yes, it is a place, but what we've come to understand over 51 years, and certainly I have in my 21 years with the company, is that the third place is also a feeling. And that might sound a bit squishy, but we look at it very deeply. What it means is thoughtful, caring service, someone making an effort to get to know you. We measure that. And here's the key point. The third place has never been solely defined by 4 walls or a physical location. It has always been about that feeling. It's the relationships that we form in our stores every single day. We call that the third place connection. And that feeling of that third place connection is more valuable than ever. You can read any analysis of society these days, and they all say the same thing. There is an epidemic of loneliness and isolation and disconnection. We are in desperate need of more human connection. So we actually measure human connection in our scores, and what we see is that the feeling of being cared for by a Starbucks partner drives our brand and drives our business. That feeling of care carries 3 times the weight of any other factor at driving brand affinity and preference for Starbucks. Caring is what drives our business. So it is not some squishy notion. It actually is what drives our business and it drives our brand. And Starbucks leads the industry in care. But we're expanding that third place connection. That connection is no longer constrained by the 4 walls of a store or any physical location at all. We're serving customers across all of our channels. So we're increasingly do that in formats that allow us to connect with more customers and a bigger audience than ever. We're connecting with customers in their cars. We're connecting with customers on their doorsteps. We're connecting with customers in digital channels. And truly, we are building connections and loyalty at Starbucks far beyond anything we would have thought possible when I started at Starbucks. Today in the U.S. business, we reach about 75 million individual customers each month. Those customers visit multiple times a month. If we take that internationally, we see 100 million customers a week. If we add in our consumer packaged goods occasions, we are reaching 400 million customer occasions a week around the world. A week, 400 million. It's incredible. The more connections we create, the stronger our brand and the stronger our business. The flywheel of Starbucks begins with that connection. It is our differentiation. It provides us scale and it provides us strength. Now, the third place and the third place connection is who Starbucks has always been, and it's stronger than ever. Now, we've stayed true to who we are throughout all these 51 years, but we've had dramatic shifts in how we serve the customer. And I want to share some realities you heard a little bit about earlier that illustrate this dramatic shift in our business over the past 5 years. And again, I have a question for you, but you don't have to answer it out loud. But I want you to think about this. If we went back in time 5 years and shared a vivid picture of today's marketplace and all of the challenges that exist, how many would have questioned Starbucks' relevance and if Starbucks could even succeed? So let's talk about some of those shifts. If we had said 5 years ago that the consumer of the future would be primarily seeking a drive-through experience, that many consumers would expect to order through their phones, not at a counter, that 2 out of 3 consumers would be seeking a cold beverage and cold coffee, not hot coffee, how many would have declared Starbucks as less relevant, or maybe very challenged to succeed, or losing its advantage? Let's go a little bit further. If we had shared that that there would be a pandemic, and that would have accelerated at-home coffee consumption, that offices would still be at a fraction of their pre-COVID occupancy, and that restaurant spending, as we just saw in June, was down year over year. If we had shared all of that information, a vivid picture of those things probably would have been a pessimistic outlook for Starbucks. Yet here we are today. 2 out of 3, 70% of customers are seeking a cold coffee beverage at Starbucks. We're seeing drive-through at 50% of our business. Mobile orders 25%. Delivery is growing 20% year over year. And a footnote, in June we saw restaurant spending down 3% in the US. Coffee shops were up 2%. What does that tell you about the resilience of the coffee category and therefore also the resilience of Starbucks? Under these challenging conditions, Starbucks hasn't struggled, we have thrived. Our business is stronger than ever, and our brand, as you've seen, is more relevant than ever. How do we know this to be true? I want to share some additional information about our US business. Before I do that, earlier you heard about the currency of Starbucks. What is it that drives the Starbucks business? The currency of Starbucks has proven all of those challenges that you have seen. The currency of Starbucks is coffee, and the currency of Starbucks' success is our partners and the connections they create with our customers. That is what makes Starbucks Starbucks. It allows us to defy headwinds that other businesses struggle with. It's truly about human connection. We measure it, it's real, it's what drives our brand, and it's what drives our business. Now, I want to call out some important points about this. You know, over the past few years, as we have seen these shifts, it has not been easy for our partners. Our stores were built for a different era, an era that didn't anticipate the volume and complexity of the business that we would see today. And that is why we are reinventing. We're reinventing to increase the capacity of our stores to handle the demand that we're seeing and at the same time reduce the effort that it takes from our partners to serve that business. And ultimately, what we're trying to do through our reinvention is make some of those tasks and that burden go away to enable our partners to focus on what they love to do. They tell us this every single day. What I want to do is craft the world's best coffee beverages I want to connect with my fellow partners, and I want to connect with customers. That's what we're here to do. Now, John Culver is going to share a lot more details coming soon about how we're going to go and achieve that very soon after my presentation. Now, connection is who Starbucks has always been, and we have a heritage of continuously adapting, as you saw, to those shifts. And one of the ways that we're doing that as we're taking customers to the future is meeting an increasing need for convenience. Starbucks has had to very quickly adapt to these convenience-driven, on-the-go channels. It started with drive-through years ago. We went to mobile order. We've gone to delivery. We've opened up pickup stores and so many more. And what has emerged for us is a very strategic intersection that is absolutely packed with potential for Starbucks. And that is the intersection between uplifting, third-place connection, and effortless convenience. Now, that evolving intersection that is moving so quickly is something that Starbucks owns globally, and we call it experiential convenience. Experiential convenience that nobody else can deliver. Experiential, not transactional. An uplifting, connected, personal, and personalized experience wherever the customer is on the go. Now, I want to talk a little bit about how we're delivering that, and I want to show this video from a customer that she shared on TikTok.
So I just went to Starbucks with my 2 kids, and this is the first thing I've done after being bedridden for 3 weeks, over 3 weeks with COVID. We're headed to swim lessons with my autistic son, who is super anxious about it, and I've just told him we forgot the treat, which was helping him with his anxiety about doing this scary thing, swim lessons. So we pull up to the drive-thru at Starbucks. The girl today, she goes, "Hi, how's it going?" And she takes one look at my son's face, who has tears in his eyes, and she goes, "Oh no, are you feeling sad today?" And he goes, "Yeah." And she goes, "Are you having a hard day?" He goes, "Yeah." And she goes, "Would you like a cake pop? Could they have cake pops?" And I'm like, "Yeah, sure, that'd be great." And all of a sudden, my son is super happy, and his small act of kindness of just, "Why don't you guys have a couple cake pops and everyone can just eat their feelings together for a few minutes?" So I just want to say thank you to the Starbucks employees who gave my kids cake pops today and were honest and authentic. It was so sweet and so kind. People are good. People are good.
I love that. I mean, that story happened in a drive-thru, out the drive-thru window. When we talk about experiential convenience, it's uplifting connection, meaning effortless convenience. We met her in her car and delivered that kind of experience that made her want to share that story through TikTok. Now, up on the screen here, I want to introduce Malcolm. We did store visits in New York City. A lot of you probably came from New York, so welcome. Outside of Penn Station and the Penn Plaza store, we wanted to go and understand why there was one store that had such high customer connection scores. So we went to this store, and I'll tell you right now, I could hear the music in the store before we even went in. When we went in, all the partners were looking great. They had their shirts, very cool shirts on. They all looked the same with the shirts, and they all had their own unique hat that gave a little piece of their personality. There were no seats in the store. What I saw was incredible. That led me to understand a little bit better about why our customer connection scores were so high in this store. There were about 15 customers congregating around the handoff plane, and you can see here the number of beverages that had been mobile ordered, waiting to be picked up by customers. Every single customer was smiling, and they were smiling because of Malcolm, who was dancing every customer their drink. Now, of all the people who were in the store, not a single person was looking at their phone. Beyonce was playing overhead, and I won't try and recreate Malcolm's dance, but it was very good. A customer came in, and her name was Kristen. She was like, "Excuse me, I have a drink for her." And he was like, "Kristen, I've got you." He goes over and hands her her beverage. And she said, "I also got it." And he goes, "Water, I know, I'm on it." And he went over and grabbed her water and handed it to it. Not a single customer was looking at their phone. Every single person was smiling, and everyone left feeling just a little bit better than when they walked in. That is experiential convenience, and partners like Malcolm are making that happen today. And when we hear from customers about what that experiential convenience looks like to them, we hear things like, "Starbucks is my secret superpower," or "You had my back." And during the pandemic, what we heard from customers was, Literally, this was a description from a customer. She said, Starbucks is my micro moment of self-care. It's the one person I talk to outside of my home each day, and I specifically leave my house to get some interaction. Experiential convenience is about knowing you and exactly what you need right now in this moment to take on whatever's next in your day. And that strategic differentiation that Starbucks offers of coffee, connection, and convenience is more relevant and differentiating than ever. So let's take a look at the U.S. business. How do we know that that relevance is true? Our weekly active customer base is the largest in our history. We have more customers than ever in Starbucks history. If we look at some of the other dimensions of success, market share, number one. Brand affinity, the degree to which customers love Starbucks, number one in the marketplace. And we maintain the number one spot for Starbucks, for away-from-home coffee purchases, first choice. Starbucks is the first choice for coffee away from home. Now, what does that look like around the world? In China, same story. In Japan, same story. Brazil, same story. Turkey, I don't have enough time to go through all 82 markets, but I will tell you that those things are globally consistent. Brand affinity leader, first choice leader. And it just reinforces that these strengths that we have are enduring and relevant, and they're driving our market leadership. It is a very strong foundation for future growth. Now, let's go even deeper on why our best days are ahead of us. The U.S. customer base is young. The majority of our customers in the U.S. business are now Gen Z and millennials. I like to say that you'd kind of write this story in your mind that Starbucks customers came in maybe with You've Got Mail and then Devil Wears Prada and have kind of aged with the company. Not true. The majority of our customers are now Gen Z and millennials. And the younger you go, the stronger our brand affinity gets. Gen Z has the highest brand love for Starbucks of any age cohort. And as the U.S. diversifies and we look at the brand strength with different multicultural audiences, among away-from-home consumers, or away-from-home coffee consumers that identify as Latinx, African American, Asian American, our affinity goes higher still. So when we think about Starbucks being a strong brand that is poised for growth, our ability to adapt and innovate has earned relevance and love as a brand. Our customer base is young, and the younger you go, the stronger the brand gets. As the U.S. diversifies, the stronger our brand gets. It all adds up again to a strong brand that's poised for growth. A strong brand with massive growth potential. So how are we going to unleash it? I want to share some of the accelerators that we have in our reinvention plan. Now, customers tell us, as you probably tasted with your pistachio beverage, customers tell us they're loyal to Starbucks because, in part, they find a beverage they literally can't buy anywhere else. And that beverage is coffee. And today, that means increasingly it is a cold, customized, plant-based beverage. In the U.S. business now, the majority of our customers are seeking a cold beverage, around 70%. And that peaks at 80% during the summer months. Platforms like Cold Brew, Nitro, Ice Shaken Espresso have elevated traditional coffee categories. They're commanding a premium price, they're driving our sales, and they are among our highest margin products. And they're also more frequently customized. So when you think about that elevated, handcrafted experience at Starbucks, cold, customized, plant-based beverages is where it's at. When we talk about customization, that's modifiers like adding espresso shots, adding flavors. It's increasingly customers choosing plant-based milks, as well as new experiences like cold foams, like you had this morning. That increase in customization has resulted in beverage modifier sales of more than $1 billion a year in our U.S. business. Now, our unique heritage and capabilities in handcrafting customized beverages, plus the range of our menu, is perfectly suited for the Gen Z social media create and share generation. As people discover a beverage they love, they want to share it online. I mean, we literally have billions and billions of views on TikTok of hashtag Starbucks drinks. I know personally, when I go to the drive-thru with my 3 teenagers, I have to try and calm their menu items down because I feel bad for the person who has to make it. But customization is what customers want, truly, today. Starbucks is uniquely able to deliver those beverages, and it's accelerating our growth. We've been in business for more than 51 years, and customers are doing things with coffee we never could have even imagined. And here's what's interesting. We're growing from our core. After 51 years, coffee is what is driving our business. As we look at espresso, now espresso, this is the first beverage category we offered at Starbucks. Espresso is driving our business. In fact, iced espresso is now our largest product category, and it's also our fastest growing category. That's something that most businesses strive for, especially after 51 years, driving from our core. Cold, customized coffee. It's where the customer is going. It's where we're taking them. It's where we lead, and that means the customer is coming to Starbucks. So where are we going to go next? We have an incredible pipeline of coffee beverages, all based on iced espresso, cold brew, nitro. We also have hot coffee innovation, and you'll be tasting a lot of these products today. I know you've already had a fair amount of coffee, but I want to talk about hot brewed coffee for a second. You saw Howard talk about Clover Vertica. Today, in our stores, we offer a lot of different coffees, but with the launch of Clover Vertica, it's going to allow you to have a freshly ground, freshly brewed cup of the world's best coffee in 30 seconds or less. It uses proprietary Clover technology to brew coffee in what I call high definition. It's the equivalent of a French press. It brings out incredible nuances in each cup of coffee. And it allows us to offer some of the amazing variety of Starbucks coffees all day long, where customers can choose, including decaf all day long, which is something that customers have asked us for years to offer. Now, whether the coffee beverage is hot or cold, espresso or cold brew, we're increasingly using proprietary technology that Starbucks built in-house, as only Starbucks can, to elevate the categories and elevate craft and elevate quality. These are cutting-edge innovations that raise the bar on coffee quality, making it much easier for our partners to not just craft incredible beverages, but serve customers the highest quality coffee in the world. Coffee is at the center of who we are, and it will continue to serve as a key accelerator of our business and our growth as Starbucks takes the lead on what customers love and our partners are proud to deliver. Now, though coffee is our core, we also know that increasingly customers are seeking out food at Starbucks, and food is another growth accelerator for us. Again, you'll see some of this downstairs in the Trier Lab, but increasingly customers are adding food as a complement to their beverage, enough so that it's driving today 20% year-over-year growth in food sales at Starbucks. It wasn't that long ago that customers, maybe 1 in 5, were adding food to their order. And today, 2 in 5, about 40% of customers now add food to their order. And with a strong, convenience-driven, on-the-go customer of today, what they're seeking is one-handed meals. That's what we've called it. One-handed meals, because often they have a phone in the other hand or maybe a steering wheel. So breakfast sandwiches have been incredible for us, with a success at 19% year-over-year growth. Just to give you a sense of scale, our U.S. company-operated business is on track to sell more than 300 million breakfast sandwiches this year. 300 million. And over 100 million egg bites. So when you think about that scale and the expertise it requires, it's another competitive moat for us as Starbucks scales and builds its business. But we're still in the early days of food. Whether in the U.S. or around the world, we have market tests right now that are pushing the edges of what we plan to do with food. This includes things like fresh baking pastries in our stores every day. It includes things like portable salads, healthier options, more plant-based items, and egg products that raise the bar on quality in our stores. So we'll continue to innovate on food, fresher, healthier, innovative, thoughtfully crafted food, and food will continue to drive our ticket as a craveable complement to our beverages. Speaking of acceleration, let's talk about digital. So you've heard about experiential convenience and Starbucks' unique ability to meet customers wherever they're at. Our digital vision is that your perfect order is always just one tap away, no matter where you are. And in our reinvention plan, that is also at the center. We now have more than 58 million Starbucks Rewards members around the world, 27 million in the US. That's up 13% year over year, or nearly 60% increase since before the pandemic. Another way to look at it is 1 in 10 US adults is a Starbucks Rewards member. More than half of US transactions are now from our rewards members, half. And as a new member joins, what we see is that their spending with Starbucks and their frequency with Starbucks increases significantly. When they start to mobile order, it goes higher still. The convenience of Starbucks Rewards is attracting and developing our young, most loyal, and affluent customers. Convenience matters. Truly, it's driving our business. But we need to make important improvements to our convenience options like mobile order. And so at the center of our reinvention, we'll be doing things with mobile order to make it easier for customers to order, make it easier for our partners to receive those orders, and help reduce the stress of peak when they see so many mobile orders coming in. We're also extending the mobile order experience to more stores. Today, we deliver an inconsistent experience between our company-operated stores and our licensed stores. So we're extending mobile order and Starbucks Rewards to more locations. In our U.S. company-operated stores, we offer a holistic experience. Mobile order, more star redemption options in Starbucks Rewards. But when you think about licensed stores, in grocery stores, airports, and other locations, we don't consistently offer that same experience. So we are committed to offering the same experience across all stores. And the technology we're going to use to do that is called Starbucks Connect. More than 1,400 stores, licensed stores, have adopted Starbucks Connect. And what that means is that they're offering mobile order and Starbucks Rewards and the full holistic experience. And what we see is significant increases in both rewards usage as well as mobile order. And all of that drives incremental spending in those locations. So with roughly 80% of our licensed store portfolio yet to implement Starbucks Connect, we see that as a significant growth opportunity to drive membership and also member engagement with Starbucks Rewards. Now, I'd also like to take a little bit of a wider look with our Starbucks Rewards program and just share some other facts. So when customers are on the go, they seek out Starbucks. In fact, Starbucks is one of the most searched brands on Google Maps. More than McDonald's, more than Dunkin', more than Pete's, and more than many others combined. Incredible. So if we can make it easier to order from within mapping applications, we see that as a significant opportunity. When a customer wants to give a meaningful everyday gift, they're choosing Starbucks. Starbucks is one of the most gifted brands in the world. So much so that last December, Starbucks sold more gift cards than Apple, Google, Home Depot, and Target combined. Starbucks in so many ways is a currency of kindness. It's one of the most gifted brands in the world, and we're making it easier to give the gift of Starbucks. And I'd like to point out something else under the surface. In the U.S. business, nearly half of all customer spending is prepaid. Prepaid. Think about the strategic advantage and preference for Starbucks when nearly half of all spending is prepaid. Customers paying for their future visits to Starbucks. Now, there's one thing I haven't spoken about much yet, and that is delivery. I mentioned that it was up 20% year over year. Our delivery business is highly incremental. What we've discovered is that customers are choosing delivery when they can't get to Starbucks. The ticket is about twice that of our retail stores. Our relationship with Uber has allowed us to reach more customers and even new customers and new occasions than we could before. And going forward, Delivery represents a significant growth opportunity for us that we anticipate to double in revenue in the next couple years. Now, an accelerator of that is alongside Uber Eats, we're bringing DoorDash to market. We just launched a recent pilot, and we'll be taking DoorDash to national scale in 2023, which we believe will significantly accelerate this incremental opportunity for Starbucks. Now, honestly, whenever or wherever you are, Starbucks can now serve you, whether it's in your car, on your doorstep, on the beach, wherever you happen to be. Starbucks, wherever you want it. Starbucks is a very strong brand. It's poised for growth and will continue to build on these experiences and experiential convenience for our customers. So, creating opportunities for meaningful connection. I talked about the importance of connection, but between our customers and our partners is critical. And at the center of that is Starbucks Rewards. Our member base is made up of our most loyal and engaged customers, and the program has become one of the most reliable business drivers for Starbucks. But we see significant opportunities to grow the program ahead. We know that these customers are highly engaged, and we're able to engage them in very personalized ways. But these untapped opportunities, some of them are just right in front of us. Increasing awareness of the program, increasing perceived value, and making it easier to sign up for Starbucks Rewards are the top 3 ways we can simply drive growth of this program and attract more members. So I want to talk about how we'll do that through a program called Reward Together. So we've selected a group of the world's leading brands, and we've invited them to link their loyalty programs with Starbucks. So this will enable us to reward members of both brands, adding new benefits and new experiences that were not possible before while increasing customer lifetime value. Imagine earning miles faster at Starbucks with your favorite airline through your everyday purchases at Starbucks. Imagine earning stars when you shop with your favorite retailer. Imagine joining Starbucks Rewards so easily by just tapping one button in another brand's loyalty program. This is going to be a very powerful driver for us to drive membership growth as well as engagement and help drive customer lifetime value. We're going to be announcing one of our first US-based partnerships in October, coming right around the corner. Now, lastly, you might be wondering, with Starbucks as a digital leader and such strong reach among digitally savvy customers, how are we thinking about Web3 technologies? You've heard about blockchain, NFT, metaverse. How can we put these technologies to use with the Starbucks brand, with this brand? I'd like to introduce Starbucks Odyssey. You heard about it yesterday. It is a groundbreaking Web3-enabled experience at Starbucks and our next big innovation in loyalty. It is a very exciting extension of our Starbucks Rewards program, and I want to share a little bit of preview before I share more about the program itself. All right, so here's how it'll work. Members will go on Starbucks Odyssey journeys. And the journeys will encourage customers to go deeper in their coffee knowledge. They'll have quizzes, they'll have games, they'll have an opportunity to learn about coffee. We'll engage customers in gamified challenges. And we'll reward their engagement with Starbucks, whether it's in our stores or in digital communities. Through these achievements, they will earn digital collectible stamps. Those stamps are created with NFT technology. We'll also offer opportunities for members to buy and even sell those digital collectible stamps in a built-in marketplace within Starbucks Odyssey. And whether you earn these stamps or buy these stamps, they will unlock access to benefits and experiences that were never possible before. Now, it was really important for us to align our approach in this space with our environmental commitments, so we chose the Polygon blockchain technology. But I have to say, when I say that no customer will be required to know that. In fact, many customers will not even understand that they are working on the blockchain or with NFTs, because Starbucks is easy and accessible for everyone. That is what we're trying to do with this, just as we did with Wi-Fi, just as we did with mobile payment, just as we did with mobile order, making leading-edge technologies accessible to all of our customers and deepening their love and engagement with Starbucks. No one will have to have a crypto wallet. No one will have to know about cryptocurrencies to participate. Now, importantly, Odyssey members will not just be able to connect with Starbucks, but for the first time, we're creating a digital third place where members will be able to connect with each other in a dedicated digital community. We're offering this new game-changing way for customers to own their loyalty with Starbucks. And it will serve as an access pass to an entirely new digital and in real-world customer experience. We could not be more excited to bring this to life. Not only will this bridge digital and physical worlds, it'll start in the US, and a similar model will follow in China within China's specific digital ecosystem. And in the weeks ahead, you'll hear a lot more about this when we invite customers and potentially some of you into the fold. So just to close out, at our essence, we are in the business of uplifting people. That's why I've been at Starbucks and have stayed at Starbucks for 21 years, because I genuinely believe in the mission of the company. I genuinely believe in our promise to uplift the everyday for customers. And I believe that that promise is more needed than ever. People are longing for connection. Connection over coffee. We do this better than anybody. Whether it's in our stores or whether it's in digital channels, the connection that Starbucks creates is worth something. Yes, it drives loyalty, it commands a premium price, but it's globally scalable, but at the same time relevant in the local community. And it's more relevant now than 50 years ago. We are an exceptionally strong brand, and we are poised for growth. All of that leads me, in everything that you've seen here, leads me to one confident declaration, and that is that our best days are truly ahead of us. Thank you. I'd like to turn it over to John Culver. Thank you.
Okay, good morning, everybody. It's great to welcome everybody back to Seattle, and I realize that it's been a long morning, and so I appreciate your attention as I talk through how we're going to bring this to life in our stores. And, you know, I'm very excited to have the opportunity to represent all the great work that our team has done around the reinvention in the U.S. You know, over the last 2 decades, I've had the opportunity and the great privilege, I would say, of seeing the best of Starbucks around the world. And it's during that time I've had a front row seat at witnessing many of the major milestones in this journey. Today, I would say that we find ourselves at another unique moment, a moment where we can redefine what a new era of accelerated growth can be. in a moment that challenges us to reinvent and think differently about our futures. Now, Frank talked about our partners. Our partners have come to expect more from us. Brady shared about our customers, and our customers have also come to expect more from us. And it's clear, and I'm going to talk about this, it's clear that our physical stores have to change. Our physical stores were built for a different era, and we have to modernize in order to meet this moment. Now, what is unique about this moment is that this reinvention plan is the product of co-creation with our partners. We've held over 200 sessions around the country. We've held them in our stores. We've held them in our roasting facilities. We've also held them here at the support center. And for the first time ever, we have a comprehensive plan on how we're going to reinvent this company together as partners. The byproduct of all this work has been we are defining new ways of working. We're focused on enabling smaller, more nimble teams in order to drive faster decisions and make us more effective in the market. Frank shared we're focused on the most important work that we have clearly defined for the company. And I would say that over the 20 years that I've been with the company, that it has never been clearer on what our priorities are, and more importantly, what we expect to deliver with those priorities from a financial perspective. But what I'm most proud about around this work is that it allows us to tap into this next generation of leadership and really set the momentum and set the course for this new era that we're embarking on. The goals of the reinvention are very clear. We will increase partner engagement. We will increase customer engagement. We will drive accelerated revenue growth in a meaningful way. And we will also drive increased margins as part of our plan. Now, the work itself is well underway, and we're beginning to see positive traction across several key areas. We've improved retention in our stores. We've invested in training, and we're developing our partners and giving them the confidence to do their jobs and the ability to connect with our customers. And we've also invested a significant amount in deploying new equipment technology, which is helping us lead and drive productivity improvements. Now, there are other areas also that we're seeing improvements. We're seeing staffing in our stores come back to pre-pandemic levels. We've normalized hours of operations across our entire store portfolio. And, as Brady shared, we're also seeing our ability to accelerate growth across multiple channels, whether that be mobile order and pay, whether that be drive-through, whether that be our cafes, or whether that be through delivery. Now, the reinvention itself sets the stage for this next phase of growth for the company. And what I want to do is I want to share how we are reimagining the future of our stores and what that looks like for our partners as well as our customers. You know, today in the U.S., we operate over 16,000 stores across the U.S., both company-owned as well as licensed stores. And when we think about our investments for our existing store portfolio, we think about delivering in a few critical areas. First and foremost, it's our ability as a company to reduce the complexity and make work easier for our partners. Equally, it's important as we do that we allow our partners the time to do what they do best, which is connect with our customers. And also, at the same time, this notion of experiential convenience. And delivering that experiential convenience in a way that only Starbucks can do. It will be a true differentiator for us. 3 key levers that we're focused on: simplifying the engine to drive greater throughput through our stores, leveraging automation so that we can simplify the task and reduce the complexity of the work. And for the future, as we think about our stores for the future, how do we design more efficient, more purpose-built stores to meet this moment? Now, it's also important to understand that as we reinvent, as we think differently, we do so through the lens of our values, of who we are as a company. Going forward, we will increase accessibility in our stores. We'll do it in a way that creates an inclusive environment for everyone. And we'll always build our stores with an eye and a lens through sustainability and giving back more than we take. Now, our existing store portfolio represents our greatest strength, it represents our greatest need, and it represents the greatest opportunity that we have. And our investments are squarely prioritized in this area. So let me go deeper on what those investments look like and how it's going to help us simplify the operations. In fiscal 23, we will invest an incremental $450 million in our existing store base, with continued investments in 24 and 25. The investments are designed to help us become more efficient, help us unlock capacity, and also at the same time help us increase throughput in our stores. Now, a key cornerstone of the reinvention are the investments that we're making and continue to make on deploying more efficient equipment. We've already made investments in the areas of new Mastrena machines and introduced those across the store portfolio in the U.S. We've added new warming ovens now out into our stores. And we've also introduced a new proprietary cold brew system. Now, what we'll do over the course of this year and into early FY23 is we will have this equipment package fully rolled out across our entire U.S. portfolio. And I think it's important to note that what we see from this is meaningful savings of time for our partners to do the work that they want to do and allow them to connect directly with customers. We're seeing returns on the investments we're making in this area. A proof point here is that in our drive-thrus, where we have deployed this equipment already, we are seeing an improved out-the-window time. And it's clear that this new equipment leads to increased revenue, and also at the same time allows us to more efficiently support the growing demand that we're seeing from our customers. These 2 early proof points, more time for our partners to serve customers, increased revenues, those 2 proof points give us the confidence that these are absolutely positively the right investments to make at this moment in time to create a better experience for everyone. And in addition, allow us to grow our margins over time. Now, the second area of the reinvention program centers around leveraging automation to help us simplify the task and remove complexity. And there are 2 enablers to automation. First is, how are we going to reimagine our supply chain for the future? And second, how are we going to make the right investments in technology to make that work easier? Now, later today, Deb will come up and talk about specifics around technology investments. What I want to do is go a little bit deeper as it relates to supply chain. To date, we've implemented automated ordering across all our stores for food as well as our merchandise. This work that we've done on automation has enabled us to reduce the time spent by partners doing manual counting of SKUs on a daily basis. We've eliminated that for food as well as for our merchandise. In addition, we're leveraging our analytics and insights team, which has enabled us to get the right products in the right stores at exactly the right time. We're seeing benefits from this. What it's done is it's allowed us and driven increased sales. It's driven a higher food attach for us. And also, it's given us the opportunity to drive meaningful waste reduction in our stores. Now, going forward, we're working on automated ordering for our beverage category, which we intend to roll out across all U.S. stores in the next few years. This is a huge unlock for us. Now, beyond automated ordering, we're also testing additional innovation like automated counting and receiving, new delivery capabilities for the supply chain. And what this does, it allows the opportunity, all these investments do, to free up time for our partners to connect with the customers and ultimately provide better labor leverage for us. Simply said, automation for our supply chain creates a triple win. It's a win for our partners in simplifying the work they're doing. It's a win for our customers by increasing product availability. And it's a win for our business as we accelerate revenue and expand our margins. So now let me take a minute and let's shift to 24 and 25 and what you can expect. Today, we're serving more customers than ever. And those customers, as Brady shared, are looking for more customization, ordering more items with each order, and wanting to transact with us through multiple channels. That's why we have to reimagine the store environment and put the foot on the accelerator on our plans to design purpose-built stores for our partners and for our customers. Now, a key area of the focus in this redesign is new innovation in beverage and food production. By unlocking beverage and food production, we will significantly reduce the complexity for our partners. Now, as you've heard from Brady, customer demand for cold beverages are expected to continue outpacing hot beverages growth in the coming years. Cold beverages are increasingly more complex. They're more time-consuming, and the surge in volume has caused bottlenecks in our stores. Now, keeping up with this demand has challenged our partners in their ability to balance speed, craft, and connection. But it's not just about simplifying beverage production. The time it takes for us to deliver our warm food has to also be improved. And what I want to do now is I want to give you a glimpse to what the future will look like and introduce you to a game changer. And by doing that, I want to introduce our new, faster, proprietary Siren system. The Siren system is designed to simplify tasks across both our beverage and food platforms. And this system has been co-created with our partners down in the Trier Center. It improves quality and consistency while creating the capacity to meet the growing demands for customization across both hot, cold beverages, as well as warming our food. And to demonstrate the new Siren system, I want to take you live and in person to the Trier Center and introduce you to Sarah Trilling, our President of North America, who's joined by two Seattle area baristas, Jalen Proctor and Lisa Koss. So Sarah, down to you.
Wonderful, John. Thank you so much. It's fantastic to be here. Again, I'm Sarah Trilling. I'm down in our Trier Center, and you all are going to have a chance to join us later this afternoon through a few rotations. So really think of this as a sneak peek into some of the innovation that you'll be seeing later on. Before I go any further, I think I need to take a moment and allow the partners I'm with to introduce themselves.
Hi, I'm Jalen Proctor, and I'm a 7-year partner.
Hi, I'm Lisa Koss, and I'm a 3-year partner.
Thank you both. All right, so here's what's going to happen next. We're going to focus on cold beverage. We're also going to focus on food. And to get started, Jalen is actually going to make us a mocha frappuccino, and she's going to do this on our existing station. Essentially the way that we make frappuccinos in 9,000 of our company-operated stores today. I'm going to actually time it, I think. Are you all right with that?
Yeah.
Okay, so you got to give me 1 second. Let me get out my timer here, and we're going to get going. Are you ready?
Yes.
All right, let's do it. So what I want you to pay special attention to is the bending, the reaching, the touching, the number of steps that Jalen is taking. And I'm actually going to go quiet here for most of the cycle time because I actually want you to focus on all the activity that goes into making our mocha frappuccinos. All right, you may think that she is about wrapped up, but actually, there's more. She's got to do the whip. Wonderful. Thank you. Thank you very much. So that was about 83 seconds or so to make the Frappuccino on our existing station. So here is what we're going to do next. I'm going to take you over. We're going to go look at our new Siren System cold beverage station. This was developed, again, here in Seattle in our Trier Center with engineers, as well as our existing baristas, and really focusing on how to make it easier to be a partner, to better serve our customers, and in doing so, really increase the capacity and the throughput in our store. So Lisa is actually going to be the one who walks us through the build on this station. Let me reset my timer, and in just a minute, I'll ask you to get started. All right, here we go. Let's do it. Beautiful, beautiful. All right, so it's about 35 seconds or so with a smile. Thank you so much. Really looking forward to tasting these beverages at some point. But why don't we actually jump in? Lisa, can you tell us, what do you like about the new station?
Honestly, I love how the ice is dispensed right here. It makes it super easy, super simple. Currently, we have to use these big buckets to carry ice up from the back. It gets pretty heavy. We have to do it about every hour or so, and we have to do it all day long. But with the new Siren System, we can get ice in the few clicks of a few buttons. And this is so simple, so easy. I honestly love it.
Wonderful. Would love to hear from Jalen as well. Jalen, can you share with us a little bit about when you think about the existing station or the new Siren System cold beverage station, what is it that comes to mind?
Yeah, my favorite part about the new station is that there's less movement involved, so there's no bending, there's less turning, and usually after a long day of doing all of those movements, I'm pretty exhausted, so this helps prevent that.
Wonderful. Thank you both. Thanks for sharing. All right, so that is cold beverage, but we all know in order to actually see the productivity enhancements that we're looking for in our stores, we can't just solve for cold beverage. We have to solve for the total system. And so what I'd like to do next is to introduce a few additional partners who will help us by walking us through what's happening in food in terms of innovation.
Hi, I'm Heather Monroe. I'm a 19-year partner. Hi, I'm Tim Miranda, and I'm a 4-year partner.
Thank you, Heather. Thank you, Tim. So imagine you've had a cold beverage, and now you might be sitting in the drive-through lane, and you're waiting, right, for your maybe sous vide egg bites or maybe your warmed breakfast sandwiches. And so what we're going to show you next is going to really demonstrate the improvements that we're making there as well. Heather is going to walk us through next what it takes to make a sous vide egg bite on our current station. Are you ready, Heather? Mm-hmm. All right, let's go. All right, I'm not going to make everybody actually wait the 70 seconds or so for the oven time, so we'll just pick it up as if we finished the cook time and we're now getting it ready. All right, wonderful. So, I mean, the whole process, start to finish, takes about 2 minutes. That's for a single item, so you can really imagine if we get into multiples or mixed orders, what happens to our speed with service. Next up, very happy to have Tim, who's going to show us what it takes to make a sous vide egg bite using the new Siren System food station. What do you say, Tim? Are you ready? Mm-hmm. All right, let's do it.
That's it.
Wait a minute, right, that's it? That's it?
Yep, that's it.
All right, that's it. So what do you like about the new station?
Ooh, I like that it's not as messy. Nowadays, if you're going really fast with the ovens, the cheese melts and it gets everywhere, and the packaging can get really messy. And so with this new system, it makes everything really clean, really fast, really simple.
Wonderful. Thank you. Thanks for sharing. Heather, how about you? Can you share what do you like about new station or as you think about the existing station?
Yeah, I really appreciate that the new packaging reduces waste. In the new system, the food arrives in the same packaging that it's warmed and served in, whereas today we waste a lot of plastic film, parchment paper, and warming bags.
Thank you. Thanks to you both. And again, that gives you a sneak peek of some of the innovation that's happening here in our Trier Center. We are very much looking forward to showcasing additional enhancements that we're making when you're down with us later this afternoon. So I think we'll wrap it here. And John, back over to you.
Great. Thanks, Sarah. I told you it was a game changer for us, right? And truly, this is the future for us as it relates to the Siren System, how we deliver both cold as well as hot beverages, and then complement that with food and food warming. So a huge unlock for our partners, it's a huge unlock for our customers, and it's a big win in helping us become more effective and more efficient in doing our jobs to serve our customers every day. And it clearly demonstrates our ability as a company to lead, to challenge ourselves, to challenge the status quo, and to really reinvent for the future as we think about the possibilities that exist. But beyond the cold beverage and food, our engineers have also been at work developing a new, modernized, proprietary piece of equipment. A piece of equipment that delivers the freshest cup of coffee ever, on demand, at a push with a button, and offers a broader variety of unique flavors any time of day. Now, the new Clover Vertica system, as I shared, is a product that is able to freshly grind and brew a cup of coffee on demand in 30 seconds. And it really focuses on that single touch of a button to deliver that freshly brewed cup of coffee. And this is a game changer in terms of how we deliver brewed coffee to our customers. Not only does it improve quality, but it also improves waste and allows us to reduce the amount of coffee that goes to waste each and every day in our stores. But we don't stop there. Another game-changing technology that we have worked on and the team has developed is our proprietary cold-pressed, cold brew technology. And this does both cold coffee as well as cold espresso. And let me put this one into context. Currently, in our stores, cold brew is steeped for 20 hours, and it takes more than 20 steps to make. Across 16,000 stores, 365 days a year, it takes a lot of time, and it's a pain point for our partners. This new technology that I'm talking about enables us to deliver the same great-tasting cold brew product in a matter of seconds, and in fewer than 4 steps. It's a step change in innovation, and it's significant. And when you consider that we spend over $50 million a year on labor to brew our cold coffee, this is a significant game changer for us. From 20 steps to 4, from 20 hours to a matter of seconds. We are completely reinventing the experience for our partners and for our customers through how we're producing the beverages and warming our food in our stores. So better beverages, delivered more quickly, less strain on our partners. You can see firsthand what the new Siren system will be able to do to enhance the experience for all. And you're going to get the opportunity a little bit later to see that as you tour the Siren Center. So, all 3 of these levers that I've talked through, simplifying operations, leveraging automation, I now want to get into how we're going to design more efficient, purpose-built stores as we head to the future and ultimately create a much more strategic advantage for Starbucks to deliver the accelerated growth and the margin growth for the long term. So as we've built the reinvention, we've built it for our stores, and we've leveraged our insights and our market planning data. And that's important to note. And what we see is an incredible opportunity to further accelerate and expand our new store footprint across the U.S. Over the next 3 years, we expect our net new stores to grow approximately 3 to 4%. That's up from 3% that we previously communicated at our last Investor Days. When you think about the formats, today drive-thrus make up 40% of our U.S. store portfolio. And as we previously have shared with all of you, drive-thrus deliver higher returns and overall stronger financial performance for the company. Now, we'll continue to accelerate our growth in drive-thru, but we also see tremendous opportunity to broaden our portfolio and to think differently to meet our customers' needs. Cafes, delivery, pickup only, or drive-thru only will be formats that we'll continue to develop and evolve and put out in the marketplace. This is going to enable us to further unlock our channels to ensure we are meeting our customers' needs wherever and whenever they want. Now, regardless of the format, our new stores will continue to deliver best-in-class 50% return on investment, continue to deliver a 2-to-1 sales to investment ratio, and also continue to drive 25% cash margins. And moving forward, as we design our purpose-built stores, we're absolutely laser-focused on increasing our customers' accessibility to Starbucks and ultimately driving growth for Starbucks and our brand by increasing our share of the addressable coffee market. Make no mistake about it. So Frank previously shared our focus on the well-being of our partners. Brady shared the opportunity we have to unlock demand with our customers. And now, hopefully, you have a better understanding how we're reimagining the third place and accelerating our growth for our stores. Now, when you look across the areas of partner, customer, and store, it's going to be critical for us that we track our progress and that we hold ourselves accountable to delivering the growth in revenue and the growth in margins that we expect. Partner retention and labor leverage are two key metrics that we will track very closely. But the most important metrics of all will continue to be partner engagement and customer engagement. Because our history has proven that by delivering an elevated experience for our partners, they in turn deliver an elevated experience for our customers. This has always been the secret to our success, and it does not change. We get more laser focused on that. Now, with partners and coffee at our core, the reinvention plan unlocks and will deliver sustainable, profitable growth in the future. And when I'm talking growth, I'm talking abundant growth. Over the next 3 years, we will not only accelerate our store growth, we will increase our revenue by approximately 40%, and we will continue to deliver strong margin expansion as we think about the future. This is best in class in performance for all of you, best in class. And this plan, make no mistake, is built to endure. The plan and the work we've done has allowed us to think differently. It's allowed us to respond differently. And it's allowed us to challenge what was as we embrace what will be. Now, the possibilities are endless when we're able to sit down and co-create with our partners and build the future for Starbucks collectively together. Let me also share that our partners have been very clear with us about the challenge of meeting accelerating demand in their stores, the impact that the pandemic has had on them and on their lives, and the things that we must and will do better. Now, make no mistake, we feel a deep responsibility to get it right for our partners. And on the subject of unionization, here's how we see it. There are two paths. We can work together as partners, side by side, or we can have a third party between us. Now, working side by side, we can efficiently deliver solutions that support our partners in their jobs, as well as in their lives, supporting their physical, financial, and mental well-being. At the same time, let me be clear that we're committed to respecting the NLRB process, and we are now and will continue to bargain in good faith. Bargain with the stores who have chosen to have a third party represent them. Now, over the last 20 years, I've had the opportunity to serve partners across the globe. And I have never, ever been more inspired or confident in the future that we are shaping for the company as we move forward. And I'm also incredibly confident in our partners' ability to meet this moment. Now, at the end of this month, I will step down as the Chief Operating Officer for the company. And it's hard for me to leave something that I love so much, a company that I care about, partners that I care about, and think about what's next in the future for me and my family. But this is the right thing to do. It is the right thing to do because this sets up the next generation of leadership for the company. And I'm extremely optimistic about our future. I want to thank the more than 450,000 partners around the world for their commitment to one another and their commitment to our success as a company. And I also want to thank the entire senior leadership team, the board of directors, Melody, for your leadership, and in particular Howard, for the opportunity and the privilege that I've been given to be a partner and a leader in this company. Thank you. And I also want to thank all of you, our investors, for your belief in the company and your belief in our future. But let me close by having our partners share their story and share their optimism and their passion for Starbucks and the possibilities that they see for Starbucks in the future.
Starbucks has always been one for innovation and change. I guarantee they're going to change.
You can never stop learning, especially in a company. I feel like every day there's always something new that you get to see.
A reimagined Starbucks experience is an experience where partners come to work every single day and feel part of something bigger.
One step at a time, and we'll make it further. One step at a time, and we'll make it through this. One step at a time, and we'll make it further. One step at a time, and we'll make it through this.
Being a part of the conversation, there's a lot of innovation that happens here that we get to be a part of from the start of the idea through testing it. It feels great to be a part of that.
Every one of us has things that they care about, and being able to create an impact makes them want to be here.
We are super excited about reinvention. We've already seen training rolled out, and we all have a refreshed attitude towards what's coming next.
I am seeing the proof point show up in the stores, just really a different level of engagement from baristas and shift supervisors, and store managers are really excited.
There's just something magical in this place. There's empathy here. That's what I feel, real, genuine empathy.
I'm so excited for the future. We have endless possibilities if we keep our sight on what is most important to us, customers, partners, and the human connection. It's who we were, who we are, and who we'll always be.
One step at a time, and we'll make it further. One step at a time, and we'll make it further. One step at a time, and we'll make it further. One step at a time.
Thank you, John. He's in the back of the room. Could I ask everybody to just take a moment and celebrate John for his over 20 years of servant leadership? And now we're going to move into break. We're going to take a break for about 15 minutes. And so we ask that you exit the room in the back so you can enjoy some of our top growth and key selling items that we have outside of the room. And then we'll start our presentations promptly at 10:30 a.m. back in this room. Thank you.
们店复工了！再次见到你们，再次见到顾客，真好。
Hello and good morning, everyone. Starbucks China has been navigating unprecedented challenges since the onset of the COVID pandemic in 2020. But if there's any silver lining in all of this, it has forced us to further strengthen our focus, our muscle, and our operations. And the digital innovation we have introduced is enabling us to deepen our connection with our customers. Starbucks values and the Starbucks experience we deliver to our customers have never been more relevant. In the video we just showed, you can just see the joy and the renewed moments of connection that Starbucks has brought to our partners and our customers with the reopening of our stores. I could not be more proud of our China partners for the incredible courage and resilience serving and uplifting our customers, communities, and each other during the adversity. Today, with a partial lifting of COVID restrictions in different cities, I am very pleased to report that our recovery in China is well underway. However, given ongoing restrictions under China's dynamic zero-COVID policy and the unpredictability of the future outbreaks, we remain vigilant, and our recovery path will continue to be nonlinear. But we remain focused on delivering our long-term growth aspirations. In 2 weeks, we will open our 6,000 stores in China. 2 years of almost unimaginable disruption has not interfered with our delivering on the commitment we made at our 2018 China Investor Day in Shanghai. And it's just not the speed, but also the quality. Our new stores continue to deliver best-in-class returns and profitability. No coffee retailer in China even comes close to enjoying the deep brand love and connection, loyalty to customers that Starbucks has built. Our mobile ordering capabilities have grown from nothing to now driving over 40% of our business in less than 4 years. And enabling and supporting our business is a flexible, resilient, and strengthened supply chain and distribution network, as well as our family of over 60,000 passionate and engaged partners. Despite our growth, China's coffee market is still in its early stages, with huge potential to expand the addressable market. Per capita demand for coffee in China will grow further from 12 cups per year to 14 cups by 2025. By comparison, in Japan, per capita consumption of coffee approaches 200 cups per year, and in the US here, close to 380 cups. China's urbanization rate is expected to increase to 75%. And the number of middle-class households in China is expected to grow another 70% to 395 million within this decade. China's coffee market is about to enter a new era of growth, and no coffee retailer is better positioned than Starbucks to capture and benefit from the growth ahead. COVID has accelerated profound shifts in Chinese consumer needs and behaviors. These changes have required us to examine and evolve Starbucks' purpose-driven growth agenda for the next chapter of our journey. And I'm very excited to unveil our newly evolved growth flywheel, fueled by 6 key growth drivers that are each highly synergistic and mutually reinforcing. By growing our store portfolio and expanding our omni-channel at home and on the go coffee capabilities, we will efficiently acquire new customers and drive accelerating Starbucks Rewards membership. In addition, our efforts to enhance member engagement, coffee leadership, product innovation, and partner experience will elevate the Starbucks experience we deliver to our customers. This will drive greater demand and frequency across all channels. Underpinning these growth engines are our relentless efforts to drive productivity and efficiency through digitalization and technology enablement, as well as our investments to strengthen our supply chain and coffee ecosystem. At the core of our flywheel is our commitment to uplifting our customers and our communities. We strive to contribute to the growth of China's specialty coffee industry and help establish the standard of coffee excellence from farm to cup, customers to communities. All of these combine to create a very unique and powerful flywheel effect that will propel our growth in the years ahead. Let me take you through them one by one. Over the past decade, we have grown Starbucks' footprint in China nearly tenfold to 6,000 stores. Store development will remain a key growth engine for us in the years ahead. Our ambition is to enter 70 more new cities, as well as to expand our store count by 50% more to operate 9,000 stores in China by 2025. 9,000 stores. This is close to the number of company-operated stores in the US today. It means we'll open 1 new store nearly every 9 hours for the next 3 years. We expect our new stores to continue to deliver 2-to-1 sales investment ratio with a payback period of less than 2 years. How are we going to do that? In higher tier cities, we'll optimize store portfolio and density in key trade zones. We'll leverage data and analytics to build the right store format and size at the right location with the right investment to fulfill omni-channel customer needs. We will also accelerate the rollout of Starbucks Greener Stores framework in China with a plan to operate 2,500 Greener Stores by 2025. Our reserve stores will deliver evolved, elevated premium coffee experiences, and our new core stores will focus on fulfilling the need states of community, connection, and convenience. Beyond growing our store footprint, there are enormous opportunities to expand our business and share by meeting customers' needs wherever and whenever they crave Starbucks. Starbucks will be more accessible than ever, putting us in an incredible position to capture the rapidly growing customer occasions within and beyond our stores. By 2025, our portfolio of 9,000 retail stores will be complemented by additional 5,000 we proudly serve Starbucks Coffee food service locations, 550,000 ready-to-drink product points of distribution, and at-home coffee available to every customer through e-commerce in leading premium supermarkets, giving us a level of brand awareness and market penetration unrivaled by any other coffee retailer in China. We're also leveraging the huge opportunity of Starbucks gift cards and merchandise as gifting items by expanding our e-commerce footprint to include even more social platforms. In addition, we're capturing increasing out-of-store demand through our fast-growing delivery business, enabling us to serve more customers anywhere, anytime, for any occasion. Let me share a bit more about our delivery business. Since the launch of Starbucks Delivers in 2018, Starbucks has defined and elevated the standards for coffee delivery in China, bringing the same promise of premium coffee quality and consistency beyond our stores and into the hands of our customers in just 19 minutes on average. 19 minutes. Our delivery service features packaging innovations that include splash-proof lids, tamper-proof packaging seals, and a unique hot and cold delivery system that maintains beverage temperatures and quality. Our service is supported by over 5,000 dedicated riders who ensure each order is delivered with speed and experience. Our delivery channel is driving significant customer revenue and transaction incrementally. Our goal is more than double our delivery business by 2025, which means fulfilling over 400 million orders in the next 3 years. Our e-commerce channel is also becoming a focus of our growth agenda, projected to grow at a 30% CAGR rate, fueled by the tremendous popularity and opportunity of our merchandise and gifting products. Our e-commerce platform is a great extended engine for us to reach new customers and drive incremental traffic to our stores and other channels. Our omni-channel expansion will create new opportunities to reach and build meaningful relationships with even more customers. Our aspiration is to double our active Starbucks Rewards membership, and with total registered members in China reaching over 170 million over the next 3 years. Members who engage with us across retail, delivery, and e-commerce channels spend 10 times more than those who visit our retail stores only. There's huge opportunity ahead to drive engagement and incremental sales by cultivating cross-channel trials. We also see opportunities to up-level the Starbucks Rewards program by leveraging automated data and AI capabilities to deliver more personalized rewards and experiences. In addition, just as Web3 is opening up new possibilities in the US, is also going to open up new possibilities in China. Next is our coffee leadership. We'll leverage both our global and local expertise to accelerate our innovation speed even further. We'll focus on developing new products tailored to our new and young generation of Chinese customers. And we'll continue to lead on both strategic platforms, hot and cold. We'll also be bringing our omni-channel approach to beverage and food innovation by satisfying customer need states across all channels with different menus and products designed for in-store, on-the-go, and delivery consumption. We'll empower our partners to further elevate coffee craft, fostering pride in the quality of every handcrafted beverage they serve. And we'll bring customization to a whole new level in China that will allow every customer to enjoy his or her beverage just the way they want it, in ways no other retailer can. 2/3 of our retail partners are Gen Z. Over the past few months, we have connected with hundreds of retail partners who have provided us incredible insights and ideas. We're building a culture of co-creation in China to ensure we understand, stay current, and address their needs, hopes, and aspirations. At the previous Investor Day, I highlighted our pioneering critical illness insurance program for the parents of our partners. Fast forward to today, we're proud to be pioneering another disruptive, unprecedented benefit, paying out a 14-month bonus to all full-time retail partners on top of the 13-month salary they already enjoy annually. Once again, demonstrating our commitment to sharing success with our partners. We'll also continue to invest in coffee education by up-leveling our Coffee Master program and creating new coffee career paths to fuel coffee passion and pride. Now let's talk about our productivity drivers. The ambitious investments we are making to further digitalize our operations are all geared towards improving our partner experience, operational excellence, and productivity as we scale in the market. We're driving simplification and automation of daily store tasks so our partners can focus on the two most important things, coffee craft and customer connection. The deployment of IoT solutions, inventory, and auto replenishment planning system, our new digitalized food safety management system are all great examples of technology investment that will help us to manage at scale and drive improved economics. All of these technology innovations will need to be powered by a robust in-house technology and data infrastructure, and we're now ready for the next phase of our technology advancement. Over the next 3 years, we'll invest $220 million and launch a dedicated China Digital and Technology Innovation Center to power our technology transformation journey. Our innovation center will be a magnet hub to attract the best tech and data talent and companies across China. Equally exciting is our investment in the Starbucks China Coffee Innovation Park, a next-generation facility that will revolutionize coffee roasting when it opens in summer 2023. Starbucks will become the only coffee retailer in China to fulfill all aspects of the value chain from bean to cup, from helping coffee farm and coffee farmers grow better quality coffee through our Yunnan Farmer Support Center, to importing the finest green beans from around the world, to roasting coffee locally at the Coffee Innovation Park, and to delivering the highest quality coffee and exceptional customer experiences at our stores and across our other channels of distribution. Our Coffee Innovation Park will house a state-of-the-art roasting plant, Starbucks' largest outside the United States, with a capacity to roast 135 million pounds a year. The roasting plant will also incorporate cutting-edge technologies that will make it Starbucks' most sustainable roasting plant in the world. In addition, the Coffee Innovation Park will feature an integrated distribution center that deploys the most advanced automation technologies. It will also have an immersive experience center showcasing to the public sustainable practices at every chapter of the Starbucks bean-to-cup coffee journey. We are super proud of the unique coffee ecosystem that we're building in China. It will provide us with unique competitive advantage, the scale, the efficiency we need to continue to win in the market. Core to our China purpose-driven growth agenda is our commitment to further developing China's specialty coffee industry and uplifting our partners and the communities we serve. Bringing Starbucks' mission and values to life in a meaningful way in China is central to our growth strategy. Hence, I'm very proud to announce that we'll be investing $12 million more over the next 3 years to advance our Starbucks people and planet positive aspirations. We're more committed than ever to build a brighter future in China, with China, and for China. In closing, Starbucks is well positioned to drive long-term, sustainable, profitable growth in our largest international market. By 2025, we'll double the size of our business today and quadruple our operating income. And we will be the employer of choice for more than 95,000 proud and engaged Chinese partners. We are ready to fully unlock and capture the enormous opportunities. The best days for Starbucks China are ahead. And I could not be more excited to deliver on this vision together with our family of partners in China. Thank you. I'd like to hand it over to Mike Conway.
Come with me to the biggest Starbucks in Asia. There's literal coffee trees, and look at this giant Starbucks cup. The place was massive. These are coffee grounds, literally. Look at this store. The interior of the place, like amazing. A little gift shop. The menu was small, but it still hit. This is visuals on how they actually make the coffee. Pastries. This is someone else's order, but it looked good. This is mine, a hazelnut latte. This is in Bali, by the way.
Good morning. That was our beautiful store in Bali, our experience center, and I had the wonderful opportunity to be there just a few weeks ago. My name is Michael Conway, and I am a 9-year partner. And you just heard from Belinda how important China is to the international segment. I'm excited to show you why our optimism for the entire international segment is so high, and why interest from our licensees to invest in the Starbucks brand will fuel our path forward. Now, since 1996, Starbucks International has grown to serve customers across 81 markets with more than 200,000 Green Apron partners in more than 18,000 stores, half of which are company-operated and the other half are licensed. Today, the scale of our business is tremendous, and we actually have more Starbucks stores internationally than we do in North America. Now, when looking more deeply at our international portfolio, we have 4 markets with well over 1,000 stores. That include China, Japan, South Korea, and the UK. We also now have 8 international markets with more than 500 stores, including Indonesia, Mexico, Taiwan, and Turkey. We have 4 fast-growing emerging markets, including Thailand, the Philippines, Saudi Arabia, and India, that will hit 500 stores in the next few years, and we believe could extend far beyond that in the future. In total, 24 of our markets operate more than 100 Starbucks stores. The reach and scale of our footprint positions Starbucks as a global leader among restaurant brands. In fact, from 2019 to 2021, Starbucks International grew our store base by 16%, which is faster than any other global brands in our segment. When others were restricting investment, Starbucks, along with our licensees, seized the opportunity to accelerate our global position. This speaks to the strength of our brand and the power of our model. And we're not just opening stores. We're winning in the markets that we operate. We are the clear market leader in many of our largest international markets. And in a number of cases, this lead is sizable. Clearly, Starbucks is the consumer's choice around the world. So you can see, few other global retailers have achieved what Starbucks, together with our licensed business partners, have achieved in terms of number of stores, reach, and market leadership. All of this has translated into a tremendous year for our international markets outside of China. This year, we're driving meaningful comp across every major region. Total revenue up 30% for the first 3 quarters of this year. Operating income is up nearly 50%. And we've opened more than 600 net new stores, excluding the impact of the Russia market closure. All while accelerating investments in many areas to enhance future growth. It's clear that customers around the world are returning to Starbucks, and our markets and our partners are welcoming them. Now, an important facet of our success is our diversified business model. In markets where we have significant scale, like China and Japan, the company-operated model is a very deliberate choice and highly accretive to our earnings. We also benefit tremendously from our license model, which today represents 56% of our international portfolio. Now, let me frame why this is. Licensing leverages the strengths and expertise of our business. It drives higher operating margin, it insulates Starbucks from wage and inflationary pressures, and requires little CapEx, culminating in a higher return on invested capital. Furthermore, by diversifying across multiple ownership structures and geographies, we minimize risk and volatility, creating a win-win. We invest in further innovation across the system that strengthens our model and builds our licensee capabilities, which in turn attracts more excitement and investment from our licensees. As an example of why we prefer to operate in our larger markets, I'd like to speak to Starbucks' third largest market, Japan, and the enormous growth potential that exists. Japan will reach nearly 2,000 stores in the next 3 years, and the momentum in the market has been steadily building. We can see our success drivers playing out all across Japan: beverage innovation, beautifully designed stores, and the power of the digital flywheel unleashed to drive growth and connections. Now, while the digital flywheel in the US and China have been with us for many years, Japan only launched mobile order and pay 3 years ago. And over the last year, we accelerated digital convenience through innovative MOP exclusive beverages, customer campaigns, and third-party partnerships. And as a result, digital is surging in Japan, doubling this past year to 6% of transactions. And it's no coincidence that Japan delivered record revenue and operating profit in Q3. But trust me when I say we are not celebrating 6%. We are targeting an even higher goal on par with our lead markets at 25 and 40%. The opportunity in front of us in Japan is enormous, and we're incredibly optimistic for the future of that market. Now, let's shift from our company-operated markets to our international licensing business. With accelerating momentum and the huge opportunity that's in front of us, we have great confidence because of our world-class licensees. As you heard, many of them are actually here in the room with us today. They are fully immersed in Starbucks and our culture. They understand our mission and values, who we are, and what we stand for. Simply put, they are the best set of licensees anywhere in any industry. Along with our proven keys to success in beverage innovation, store design, and the digital flywheel, our licensees are a true competitive advantage for Starbucks. Now, why do I say that? They have significant scale in their markets, they're highly capable, they're well capitalized, which allows them not just to run our stores, but to invest in innovation across partners, stores, and digital to spark future growth. For example, in digital in South Korea, Shinsegae innovated with Siren Order in 2014. It was actually our first market around the world to roll out mobile order and pay. And today, they are continuing to innovate with solutions like My Drive-Thru Pass. It allows customers to register their license plate, and then it scans upon entry into the drive-thru, allowing them to pay for their orders, bringing contactless payment to the next level of convenience. Now, the reason why our licensees are so motivated to invest in such a significant way is because we have one of the most attractive models in the industry. We have a strong global brand, and we generate high financial returns. And this leads to investment. Investment in stores like this. This is a store in Guatemala, and you can see the transformation. It's a store in the downtown historic district, and our licensee in Guatemala invested to transform it into this amazing store that just opened up earlier this year. Also, just last week, I was in Mexico with our partners Alsea as they were celebrating their 20th anniversary. And they marked that commitment to the future by announcing a $225 million investment in stores and partners. This is just one example which demonstrates our licensees are committed to the Starbucks brand and to investing to accelerate growth in their markets. And for the first time, you're going to hear directly from 3 of our largest licensees about working with Starbucks. They are Alsea, Alshaya, and Shinsegae. All 3 of them are long-term strategic partners that we've been working with for more than 2 decades. And together, they account for more than 5,000 stores across 27 markets, representing 50% of our international licensee footprint. They are doing incredible things in the markets that they serve. Everyone's here.
Thank you, Mike.
Thank you. Thank you for being with us. Good morning.
Thank you.
Morning. All right. So please join me in welcoming Alberto Tirado, Chairman of the Board, Alsea Group, John Haddon, Chief Executive Officer of Alshaya Group, David Song, Chief Executive Officer, Starbucks Coffee Korea, which is a Shinsegae company. Thank you for being with me this morning to share your views on Starbucks and the future that you see in front of us. So, okay, this first question, I'm actually going to ask all 3 of you, and I'll start with you, Alberto. If you can talk a little bit about the history of our 2 companies, as well as the role that Starbucks plays in your portfolio, and how you feel about the business model.
Yes, thank you. Hello, everybody. Well, as you know, we started this company 30 years ago, and we started with other brands. And by the 10th year, we were really aiming to get the brand. Starbucks was not, as Howard said, in international markets. So I was a fan of Starbucks, which I love the brand when I traveled to the United States for several reasons. I love the product, I love the partners, but more than anything, I really loved the look and feel of the stores and the passion and the third space. So after a big competition in Mexico to get in this brand, we were chosen by Starbucks to be developing the brand with them in Mexico. So we started in our 10th year with the Starbucks brand. I remember opening the first store and trying to replicate exactly what I was feeling as a consumer in the United States, having this beautiful store full of coffiness, with a leather sofa, with a reading table, and the fireplace, etc., to really try to show to the Mexican market what the brand was. And obviously, we were very concerned, as you can imagine, because there was not this type of product in Mexico, and the social economic level in Mexico and the income is not as what is in the United States, as you know. So I said, how much is the people willing to pay for this quality of coffee and the price and everything? And I remember that the initial plan that we presented to Starbucks was 350 stores. And after we opened in the first store, it was magical. What I can tell you is that today we have, as you saw, 750 stores in the Mexican market and more than 1,500 stores in all our geographies. And we keep opening and opening and opening. As you said, what makes the difference, and you've been hearing this all day, but believe me, it's the partners. The culture and the magical of this brand is quite unique. So we believe that from those 350 stores that we originally planned, we're going to triplicate that by the next 10 years. So it's been a very good ride and a good story. So
great. Thank you. Thank you.
And
John.
Oh, sorry. You asked what do we have the business model?
Yes.
Which was the second part of the question. Well, first of all, as you heard, and Alsea runs other brands, but the uniqueness of this business model is, of course, not only the passion that happens in the stores, but it's so perfectly in terms of the unit economics. No, the low investment that you have to do, the small footprint that you need, the few numbers of SKU, the limited menu that you have, that you don't have any kitchens, that you don't need a lot of labor to run the store, the frequency of the customers, the return of investments that you saw, and everything makes this brand very unique, at least in our portfolio, and it's by far our number brand right now because of that.
Thank you. And it was an honor for me to be with you last week to celebrate 20 years together with your partners. So thank you for that.
You.
So John, same question, a little bit about the history and how Starbucks fits and plays in your portfolio.
Michael, thank you for having us today. It's great to catch up with some friends, so it's great to be here. So to give you a bit of context about Al Shire. Al Shire is a Kuwait family-owned business going back 50 years. And we operate 70 international brands across 18 markets, from the Middle East through North Africa through into Europe. And we started the journey with Starbucks just over 22 years ago. So 22 years ago, we opened our first Starbucks store. And I'm so proud to be here today to see Howard as well, because Howard Bihar basically opened the store with us. And I was there at that time back in 1999. And we signed a contract for 50 stores, because that's what we thought the scale and we thought the opportunity was. And I'm so proud on behalf of the family and Al Shire to sit here today saying we've been a partner now of over 22 years. The partnership is as strong as it's ever been. And we just see such amazing growth in terms of the future. And as we've grown and we've taken that Starbucks partnership, we've gone into 13 markets, as I say, through the Middle East, through North Africa, into the likes of Kazakhstan, into Azerbaijan. And the partnership that we have with Starbucks is why we believe it's so successful. The trust that we have with the brands, the unique economics that Alberto so rightly talked about, makes it very unique. As I say, we operate 70 international brands, American brands, European brands, and the unit economics that we see from Starbucks is unparalleled. The investment, the margin, the return on investment, the capital employed, everything against every other business we operate, whether it's in home furnishing, whether it's in apparel, whether it's in other food and beverage, Starbucks is unique. And I think that's what gives us the confidence to want to continue the growth journey and the partnership that we've had over so many years.
Thank you. Thank you. We appreciate your partnership. David, same question.
Yes. So thank you very much for having me here. It's a privilege to be part of this session. Just a quick background about the Shinsegae Group. For those that might not know, it actually started as the retail arm of the Samsung company, and it actually broke off. And as the video mentioned, the aspiration of the group is to become a customer lifestyle company. And so what does that mean? So they have businesses across fashion, retail, on and off, cosmetics, F&B, digital technology, residential, construction, IT. And so it's only natural to have this strong relationship with Starbucks that actually goes back 23 years now. And so after 23 years, we're over 1,700 stores. We've grown double digits, CAGR, both top line and bottom line. And we're probably the only directly operated model of scale in Korea. And so what does that mean? from a business model and a financial point of view, it's continuing to generate high cash flows and returns, that it's actually self-funding now. And not only from a financial point of view, but from a customer interaction and a connection point of view, we have the highest daily interaction from a retail point of view that's actually creating a lot of momentum and opportunities for the group to continue to expand their customer lifestyle journey. And all of that's been possible because of the trust, the relationships, and the resources that both parties have continued to pour into the business to continue to grow the brand to be one of the strongest lifestyle brands in Korea.
Yes, great. Thank you. I want to turn now to talk about partners. You heard earlier today how partners is so key to our success. And Alberto, I think you shared how partners is part of what's made us so successful in your region. Yep. Can you talk about some of the investments you're making in partners and how that is positively impacting the business?
Yes, of course. As you know, we have very ambitious growing plans. So talent is the biggest concern that we have. And as you know, in this industry, recruiting, training, and retaining is the clue to success.
Yes.
And we are in a high volatility market today with high rotation and turnover, as you said. So what we are doing, especially in this brand, is not only because the culture brings a lot of talent, but we need to develop them in three ways. We need to develop them personally, which we invest a lot of money in giving them opportunities to go to school, to finish their universities, etc., with flexible day parts. We also develop them economically. We have to be the leaders in the markets of how we compensate our partners and our collaborators in the company. And the third one, we want to give them opportunities to grow professionally, so that we give them a complete road so they can grow not only in the Starbucks brand, but internationally in our different markets. We operate, as you know, 11 different markets for Starbucks, but also we give them opportunities to grow in the different positions of the company. So today, Mexico, just to give you an example, we have a turnover less than 30%. And that's really based upon making them really partners of the company, and as we call in Mexico, gerentes dueños, which is they own the stores, they are the owners of the stores, and we love them. And if we love our partners, they will love the customers, and the business will be good. So
I appreciate the investment you're making in partners, and I just want to share. So last week we were together, and Alberto brought together every store manager in Mexico, every support partner, over 1,000 individuals together to celebrate, to be together, to immerse in coffee, and to celebrate the success of the Starbucks brand. And there's even an individual that started in the first store who's now running one of your regions.
Yeah.
So talk about partner investment and development. It's true across all our markets. I know all of our partners are investing in our partners in that way. John, I'd like to turn now and talk a little bit about stores. Yep. And you operate in a fairly unique region. Can you talk about how design taps into some of the ways in which customers are using the store, and maybe some of the changes you've made recently as it relates to the in-store experience?
Okay, yeah, we'll do. Obviously, store design in our particular part of the world is very, very important to our customers. Most of our customers are dine-in customers. So whereas we've got quite a different dynamic to the US and other markets, that in-store experience for us is absolutely paramount. And I think one of the things that we've learned with Starbucks over the year is the power of the collaboration on the design. And what I mean by that is that ability to listen locally, listen to the customers, listen to the customers' needs, but not lose the essence of what Starbucks is all about. And I think one of the things that we're very proud of is that collaboration with the Starbucks design team, where they listen, they understand, they listen to our customers, they listen to our partners, they listen to us, but then produce these most wonderful, wonderful store designs. And I think you've seen today and on the videos, collectively, there's some beautiful, beautiful stores across the rest of the world. And that's really all about the collaboration that we have. And as we've sort of gone through the pandemic and we thought about the future and what it looks like, I think we're at a position today now where we have so many different opportunities, so many different formats, that store design that we come up with can meet that customer needs wherever they want to show up and however they want to use this. And when I look against the competition, I think store design is what makes Starbucks so unique. As I say, we operate another 70 other brands, And also, obviously, we look at the competition in the coffee space. And every single Starbucks store that we see and we design is uniquely different. Now, a lot of the equipment will be the same, a lot of it will be the same, but that customer wants their own local store. They want to walk into it, feel comfortable, interact with the partners. And what we've managed to do through store design, and especially over the last 5 years, is collaborate to make sure that in-store experience is unique for that customer, but also is something that our landlords want. And that's so true now more than ever. Landlords want Starbucks. Starbucks is the coffee brand of choice, not just because of the name and the brand integrity, but of the uniqueness of the design. And in many, many markets that we operate in, and we have a shopping mall in Kuwait where we have 16 Starbucks in one shopping mall, and every single one is a different, unique experience, and best of all, everyone is profitable. So the ability to work with design, work with Starbucks, to be able to do that and engage with that is what, for us, makes the design so much more important. And as we evolve post-pandemic, the drive-through piece, which for us has been much slower than some of the other markets, has really, really become true. And over half of our stores, and we're opening over 220 stores every single year at the moment, over half of those stores are drive-through. So as we start to think about the future and infill strategies and convenience, which is what the pandemic has brought, not only are we able to offer that in-restaurant experience, or that in-dining experience, but also the drive-through convenience as well. So,
thank you. It's interesting. Earlier we heard from Brady how the third place experience is so important, and clearly it's alive and well in your markets and all of our markets around the world. David, I want to shift to technology, and I highlighted Shinsegae a little bit earlier and the innovation that you created, and I love the example of actually how you're leading the way in driving innovation into some of our other markets. But can you talk about some of the other ways in which you are using technology to innovate and how that links directly to the Starbucks brand and your success?
Yeah, to talk about innovation and technology, you really have to understand where Korea is on the map. And so if you look at the Asian map, you have two Asian superpowers of Japan and China. And so innovation for Korea is not an option. It's a necessity not only to survive, but to try and at least play a role and be visible. And so the government has continued to push in terms of investments in technology, innovation, infrastructure. And so as a result, Korea is the number one country for high-speed internet connection, both wired and wireless. And so if you look at mobile connection and penetration, we talk about high-speed penetration only. And so as a result, the Korean customer is used to 24/7 connection, and they actually demand it across the board. And so it's only natural for Starbucks to really embrace that right from the beginning. And so, as you mentioned, we have, our Siren Order or MOP, MyDD Pass, but, because of the high penetration of mobile messenger service, which is Kakao, we've been able to launch an e-gifting service, an e-commerce platform. We have our own in-app deliver service. And so, as a result, the Starbucks app in Korea is ranked number 50 in terms of most used apps in Korea. And so not from a coffee or an F&B point of view, but across all e-com players, finance players, portals, messenger platforms, et cetera, the Starbucks app is number 50. And so, how are we going to continue to expand that? We're positioning our app to be a standalone digital platform to really serve the purpose to continue to not only connect with our existing customers, but really, really bring in and attract new Gen Z customers to continue to expand our membership base in Korea. And so, what's next? Only time will tell.
Well, we're going to keep an eye on what you're doing in Korea because I'm sure there'll be more innovation that we might be able to apply to our other markets around the world. So I want to close by talking about the future and talking about what's possible. And so, David, I'm going to start with you. And can you talk about what you see for the opportunity of Starbucks in your market and what excites you about that?
That's what excites me every day. We've had 23 years of fantastic growth, and you can see, Korea is a pretty mature market in general, especially on the coffee scene. There are over 90,000 coffee retail chains or points of sale in Korea. But despite that, especially through COVID-19, where it was difficult for everyone, we continue to grow. And so we see huge opportunities for future growth, even in a mature state. And so we'd like to bucket into 4 different groups. And so, obviously the most important part is our core business or cafe business. We've seen record number of new store growth in the past couple of years, and we see that for the foreseeable future. Not only coming from the existing core cafes, drive-thrus, Reserve, but also from some of the new formats that are being developed globally and also locally. We're starting to, further accelerate our Starbucks Rewards members. So Korea has over 9 million Rewards members. And the speed of acquiring a million new members is actually shrinking or getting faster each year. And so we have a long-term aspiration to get to over 15 million Rewards members in Korea. And it's not about just acquisitions. We're just starting to activate our existing members through personalization and customization to continue to drive that. And obviously, all the automation and efforts that we're doing around store development and store design to make our partners feel more comfortable and better serve our customers is what's going to continue to drive our core business. The second bucket is what we consider kind of the new core, the business outside the store. And obviously, it's digital innovation that's been at the forefront of that. And so obviously, Siren Order upgrades, MyDT Pass upgrades, e-gifting not only on a third-party platform, but bringing that into our app, e-commerce, and with the ultimate goal of really creating what we consider an on-demand platform. And so creating an opportunity for our customers to connect with Starbucks wherever and whenever they want, 24/7. The third bucket is completely new businesses. And obviously, what Starbucks is moving into with Web 3.0, but we see that in Korea as well with investments in metaverse, NFT. And so that's online opportunities, but also offline with our group resources in terms of customer lifestyle, creating what we consider customer lifestyle centers, and with Starbucks as a key hub. And so that's a completely new line of business in terms of really fully leveraging assets and managing our assets. And finally, on the aspect of sustainability, as with technology, Korea is at the forefront of sustainability in general. It's become a necessity to do business in Korea. All our efforts around adopting reusables with more plant-based options, our investment in our partners to provide more opportunities for growth, investment in the community store program to invest more in the community and provide opportunities for underprivileged youth and community to continue to grow. And so all in all, we see more opportunities for growth than we've seen in the past 23 years.
That's
so
great.
Really
a very exciting growth plan for a market that's quite mature, but there's so much potential ahead. So thank you. John, talk about the future.
So if my boss, my chairman, was here today, he would say, John, the future's only just started, and the growth opportunity with Starbucks is literally from today. So despite the fact we've been a 22-year partner of Starbucks, we believe we're only just starting the journey. And that's one of the things that we try and get across to all of our partners, that the opportunity is so huge. And there's various different reasons for that. I think, first and foremost, we operate in 13 markets with Starbucks, and we have huge white space opportunities. So when we look at mapping the markets, we look at the size, we look at the opportunity just in pure real estate, we have the opportunities in the markets that we have to more than double the store count that we have at the moment. And that's the commitment that we've made, and the commitment we've made to the family in terms of funding, is that we will double the number of stores we had over the next 5 years and clearly double the profitability as well at the same time. Why that is so unique for us with Starbucks is, and something that David talked about earlier, format flexibility. With the other retail concepts that we operate, there is not the format flexibility. They can show up in one way, shape, or form. Starbucks is very, very unique. So whether it's a drive-through, whether it's a drive-through only store, whether it's a kiosk, whether it's showing up in a retail mall, when we talk to our landlords and we look at the space and we look at where the customer needs are, there is so much opportunity because of the format flexibility. So if we can still continue to grow the business as we see, build on that format flexibility, we think we've got huge opportunity to grow more stores. At the same time, we think we've got a real opportunity on our current store portfolio. because unlike David, we're a little bit further behind, both in terms of we've only recently done mobile order and pay. We've only recently started Starbucks Rewards. So when you start to think about all the digital initiatives that Starbucks are giving us and we're able to work with, we believe also that there's a big opportunity to continue to grow our LFL and continue to grow our like-for-like stores at the same time whilst growing new store formats as well at the same time. So we couldn't be, as I say, more enthusiastic, we couldn't be more happy, and we couldn't be at a better place to grow the markets that we have and at the same time pick up new markets as and when they make sense for us and Starbucks collectively to grow this business and grow this partnership for another 20, 30 years and beyond.
I agree with Mr. Alshaya that the journey's just beginning. So thank you. Alberto, we'll end with you.
I'm going to try not to repeat what my colleagues said here, which is going to be hard. But let me go back to, because we had 2 very tough years, we all did. And for the one of us that operate all the brands and operate in so many different geographies, the way that Starbucks has come back and the resilience of the brand, as it was mentioned here, is just incredible. We only compare our numbers with 2019, so we can get real numbers, and all our markets are growing double-digit compared to 2019. So the comeback of Starbucks has been amazing. We have invested in Starbucks as of today about $1 billion. And as you said, we announced an investment of about 250. Just this year, we're going to invest another 140 million, opening 170 stores. So we're going to be opening not one store every 9 hours, like Melinda just told us, but we will be opening a store every 48 hours, which for the size of our countries is not bad. And definitely, just to give you an example, today Starbucks represents about 36% of our stores, 32% of our sales, but 40% of our EBITDA. So as we keep growing the brand, and obviously it's the brand for World that has the better return of investment from all our portfolio. We operate about 4,000 restaurants, Starbucks being just 1/3 of that. So the opportunity that we see after what happened in the COVID is even bigger, not only because we can open everywhere, as you mentioned, in the different type of locations, but also the omni-channel opportunity that we learned through the crisis is incredible. With Starbucks Reward, mobile order and pay, and delivery, today, for example, in Mexico, delivery represents about 11-12% of sales already, and we're seeing that as an incremental with not necessarily double the ticket, but 30-40% more of the ticket that we had before or that we have normally in the stores. So we do believe that in our market where we operate today, we can at least open 2 times the stores that we have today. So our next goal is to be able to reach 3,000 stores in the next 5 years. I think with your help, as always, we were going to be able to make it.
Yes.
And really, I do believe that the opportunity of the brand with everything that just happened is better than everything. I hate to say sometimes that this crisis have hit the competition, but it's true. It has hit the competition in a way that we are better capitalized. We are back part of this big company with technology, with partners, with so much culture that I think we're going to win market share in each of our geographies, and it's happening as I'm traveling to see all our brands in the different markets. No?
Great. Thank you. Thank you for that. And thank you all for being with me, sharing firsthand how you feel about the Starbucks brand and, importantly, the future that you see and why you're so excited about that. So thank you very much, and appreciate your time.
Thank you.
Michael, thank you.
All right, once again, thank you, Alberto, John, and David for joining us. So far, we've talked about the significant size, scale, momentum of our international business. We've talked about the strength and attractiveness of our business model, and you heard here on stage that our licensees are excited for the future and ready to invest. And now I'd like to turn to how all of this will fuel the tremendous opportunity that's in front of us. Consistent with the company's reinvention plan, our international growth plan is squarely focused on our partners, our stores, and our customers. Let me start with partners. Together with our licensees, we've invested heavily in our store partners, and we are entering this new phase of growth with a strong and engaged workforce. We offer benefits designed for what matters most locally for partners, from mental health to education to all women's stores in markets where this is forging new ground, like India and Saudi Arabia. And of course, coffee education is important to experience our partners all around the world. Starbucks Coffee Master Program and Barista Championships display coffee excellence and are a huge source of pride and accomplishment for our partners. In fact, while we recently reintroduced the Coffee Master Program in the U.S., today around 1 in 3 international partners have earned the honor of calling themselves a Starbucks Coffee Master. And that passion to create an incredible Starbucks experience carries through to another opportunity, which is our stores. We are dramatically transforming the way in which we approach our store formats to enable increased connections and convenience, which is why drive-through is now a core focus for our international markets. For example, in Japan, drive-through transactions have grown from 9% in fiscal 19 to over 15% this year. And over the next 3 years, drive-thrus will represent nearly 2/3 of all stores of Japan in their openings. And in the UK, which is Starbucks' 4th largest international market, 75% of all store openings will be drive-thru. As a result of this shift, in fiscal 23, drive-thru will represent 45% of international new stores outside of China, a dramatic shift in our store portfolio. And what's really exciting is, as we've seen in the U.S., these drive-thrus deliver higher AUVs, stronger margins, and a higher return on investment. Acceleration of this drive-thru format is fueling our international store growth, and it's meaningful. Including China, we plan on accelerating total store growth to more than 30% over the next 3 years to nearly 25,000 international stores. Our third significant opportunity is through customer-focused product innovation. International is taking the best innovation from the U.S., like Ice Shake and Espresso and Refreshers, which are now offered across every region. And we also tap into local tastes preferences with region-specific beverages like chocolate glazed latte in Korea and melon of melon frappuccino in Japan. Now, the gold standard of innovation in the U.S. is our pumpkin spice platform, which just launched in a big way a few weeks ago. But get this, the melon of melon frappuccino sold twice as many units per day during launch as pumpkin spice did in the U.S. Product innovation is absolutely critical and international, and we're clearly delighting our customers. Now, this leads to digital, which is the single biggest growth opportunity across all of international. Our markets are embracing and seeing the benefits of the digital flywheel. Delivery, which became essential in some markets during the pandemic, now is present in 52% of our stores and exceeds 10% transaction mix in some key strategic markets. Mobile order and pay, which also grew during the same time, is now present in 59% of our international stores. While we continue to ramp aggressively, the real opportunity is with our international licensed markets, where today we generate just over 1 in 10 transactions, which is well behind where we could be. The good news is that where we have successfully expanded our digital offerings, we're seeing stronger frequency, higher lift, and stronger brand engagement. So, knowing the power of our rewards members, combined with the convenience of mobile order and delivery, we challenge ourselves to answer the question, how can we dramatically accelerate the rollout of Starbucks digital experience globally? And that led us to Starbucks Digital Solutions, a platform created exclusively for our international business to deliver a consistent Starbucks experience.
Today, Starbucks operates best-in-class, customer-focused digital engagement solutions proven to drive growth and brand loyalty. We want to enable the world's most capable licensed business partners to access these digital opportunities for faster growth with a single solution framework that works across the many markets they operate. This is Starbucks Digital Solutions. Using our current cloud architecture and world-class service providers, we're leveraging our global scale to provide the right resources to rapidly deploy Starbucks Digital Solutions around the world. This will deliver an end-to-end solution and unlock key capabilities like mobile order and pay, integrated delivery, personalized marketing, and many others. With Starbucks Digital Solutions, licensees can drive deeper customer engagement, provide an intuitive partner experience, and enhance operational capabilities for a seamless Starbucks experience for both partners and customers. It also allows customers in more markets around the world to order, pay, and earn rewards, all at the tap of a finger. And one day soon, a customer based in any region, such as Latin America, can travel from their home in Mexico to Chile or Argentina and enjoy a consistent, seamless Starbucks experience just like at home. This is Starbucks Digital Solutions.
Now, this is an idea that is not years away. In fact, we've already launched digital solutions across Europe and 19 markets in the Middle East, and we're working to roll out in Latin America next year. Our digital future for international is now. So as I conclude, you've heard me speak to the following. First, Starbucks has an incredibly strong global brand. We also have scale and reach around the world. Our momentum is building with strength across every single region. And you heard firsthand right here that our licensees are ready and excited to invest, driven by the attractiveness of our business model. And all of this leads me to be so excited about the runway that we have in front of us for growth. And so as we look ahead, I'm pleased to share, and I am confident that over the next 3 years, the international segment will deliver growth of our international store portfolio by more than 30% to get us to over 25,000 international stores, system sales growth of nearly 40%, and profits that will more than double. So it's clear to see that there remains an incredible runway for growth, and we've only just begun to realize the future for the Starbucks brand around the world. And now I'd like to hand it over to Chanda Beppu, who leads our high-margin, high-potential channel development business. Chanda?
Hi, everyone. I am Chanda Beppu. I am a 17-year Starbucks partner, and I'm looking forward to sharing our channel development business with you today. Around the world, when Starbucks customers see our brand, they know that an elevated coffee experience awaits them. This is the strategic brand role that channel development plays for Starbucks, growing the affinity for the Starbucks brand as we reach customers outside our stores where they live, work, and play. We've talked to you today about the incredible plans we have for our stores. Now, through channel development, Starbucks plays across all segments of the coffee addressable market. Food service, ready to drink, whole bean, ground, instant, and single serve. These segments represent 70% of the global coffee opportunity. No other cafe brand has the packaged coffee reach that Starbucks has, to extend the brand and meet customers wherever they are with innovative flavors. And no packaged coffee brand in at-home or ready-to-drink segments can leverage a global cafe footprint like Starbucks to tap into rich, real-time consumer insights from handcrafted cafe trends and quickly bring them to life in a packaged portfolio. This competitive advantage gives Starbucks brand reach and innovation speed, and it's how our brand ecosystem drives parallel growth in both our cafe and channel marketplaces. Starbucks reach might surprise you. We stretch across 86 global markets. Brady talked about it. We now serve 300 million consumer occasions per week. Let me say that one more time. 300 million consumer occasions per week. These moments show you all the ways that Starbucks is the brand of choice in coffee moments at home and on the go. Throughout the uncertainty of the last few years, consumers reach for trusted brands and experiences they could count on. This led to an impressive 19% CAGR in system sales over the last 3 years for our combined at-home coffee and ready-to-drink businesses. And as we look to the future, Starbucks currently holds a relatively small market share, leaving us tremendous opportunity for market growth. As we think about how we go to market, Starbucks global business partners are world-class industry experts with strong local market capabilities and shared values. Together, we have built a solid foundation to innovate for future growth. We create competitive advantage with our partnerships because of our complementary strengths, bringing together the best of what Starbucks has to offer in coffee equity and brand strength with the exceptional market reach and distribution capabilities of our partners. Starbucks has always been a brand of connection, and we're proud of both the growing and long-lasting partnerships we've built with the best in the business, including the #1 and #2 global food and beverage companies. Nestle, our partner in the Global Coffee Alliance, has been in business for more than 150 years, and their global supply chain expertise has allowed us to expand Starbucks Coffee to reach more than 80 markets since we established the Global Coffee Alliance in 2018. One of our longest partnerships, nearly 28 years, has been with PepsiCo, with its globally recognized strength in bottling and distribution. And after 28 years, we still have a robust pipeline of innovation in the wings. Our focus is having key partnerships with the right capabilities in the right place. Starbucks brand equity is strong, and with our partnerships accelerating our growth and extending our brand reach, we can stretch to meet more customers with premium coffee experiences, all the best Starbucks has to offer. Channel development success is driven by 3 elements: brand leadership and brand strength, broad reach across global markets, and our expansive premium portfolio. Let's talk about the at-home coffee segment of our business. We have been able to significantly expand our portfolio and our reach with the Global Coffee Alliance. Starbucks has been the #1 U.S. at-home coffee brand in an $11 billion category for the past 9 consecutive quarters, where we have a history of outpacing our competitors as we gained market share. Since our last Investor Day, we have added 6 additional markets to now reach 73 relevant coffee markets with our at-home portfolio. And that portfolio is broad. Starbucks stretches across 14 key at-home coffee platforms. This spans growth in our existing platforms, such as Roast and Ground and K-Cup, and the portfolio expansion we've created in single-serve Starbucks by Nespresso and Starbucks Creamers. We've been successful in this expansion. Last year, Starbucks Creamers were the biggest brand contributor to category growth, with 24% growth in dollar sales versus prior year. In just 3 short years since launch, Starbucks Creamers have grown to a $200 million business. In addition, Starbucks is now the leader in Nespresso compatibles category in the US with 65% dollar share. We've grown variety on the Nespresso Virtuo system since we launched in 2020, delivering a compelling platform that offers a variety of coffee cup sizes in your favorite Starbucks roast profiles. You may have been able to try that just outside. Our goal is to introduce consumers to more ways to enjoy their favorite cup of Starbucks coffee at home. Looking to the future, we intend to bring products that highlight the strengths of Starbucks in locally relevant ways, such as the recent launch of Starbucks Super Premium Mini Cups in China, the launch of our Starbucks Blonde Roast Single Origin Guatemala on the Nespresso Original line, and the very exciting future launch of Starbucks Reserve on the Nespresso Virtuo system, furthering our coffee leadership. Now turning to ready to drink, you might not know that Starbucks is the #1 global ready to drink coffee brand with 15% share of a growing $22 billion category. Like at-home coffee, our reach is broad. We extend across 65 global markets. Our ready-to-drink portfolio is robust, and we continue to innovate, introducing bold flavors in 22 platforms that are globally inspired and locally relevant. Let's talk a little bit more about how this comes to life. Our ready-to-drink portfolio has evolved and matured. Brady talked about growing from our core. Our iconic ready-to-drink Frappuccino platform is more than 25 years old, and we're expanding it into new offerings that meet today's consumer taste profiles, like plant-based Frappuccino in the US and Frappuccino Mini in Asia. Our customers have always guided our approach, and we've taken what we do best in cold beverages in Starbucks cafes to introduce new platforms like Daily Brew and multi-serve coffee in EMEA, and oat milk Frappuccino and oat milk espresso chilled cup in China and Korea. Our opportunity extends beyond coffee as customers seek out more choices in their daily lives. To meet this need, we recently made an exciting move into the energy category with the launch of Starbucks Baya. And we're going to continue to innovate across plant-based and cold coffee. In fact, we're excited to announce that we're bringing a customer favorite to a convenient new ready-to-drink format with the launch of Starbucks Pink Drink, inspired by our popular handcrafted beverage in Starbucks cafes, which first began as a customer-driven innovation. As we grow our brand reach, we're taking advantage of the opportunity to extend the Starbucks brand in ready-to-drink coffees in Latin America and Southeast Asia. We'll meet new young coffee drinkers, Gen Z consumers, with our portfolio of signature, cold, ready-to-drink Starbucks favorites. We'll enter 3 new markets in Latin America and Southeast Asia this month, with the 6 more anticipated for the balance of fiscal 23. Every new market entry adds to our proven track record, and we continue to grow in the markets we already serve. Finally, system sales best represent our business growth, and we're on track from 2020 to double system sales in this business by 2030. We'll also continue to be a margin-accretive segment to Starbucks, and we anticipate strong and consistent performance to continue. But importantly, channel development will continue to amplify the brand and create customer occasions outside our stores, reaching customers wherever they are, across global markets, across at-home and on-the-go moments, to deliver a premium Starbucks experience around the world. Thank you. I'd like to introduce my friend Deb Hall-Lefay, who will highlight our digital leadership in the industry.
Hi, everyone. We are almost at the home stretch here. Hello, my name is Deb Hall-Lefay, or as some are starting to call me around here, DHL. I am a 4-month partner. And I want to say that these past 4 months have been some of the most interesting and inspiring of my entire career. I could not be more humbled or excited to be here today to talk about the future of technology at Starbucks. As I'm new around here, it's probably worth a quick introduction. I'll go back to some of the beginning where folks were from Chicago. Me too. I'm a Chicago native. And I chose a career in technology largely thanks to an internship that I had with a little Chicago company called Motorola. It was my opportunity to see firsthand the real enthusiasm that people had to bring technology to drive business performance. It also helped me understand that technology was really shaping how we live, how we work, and how we play. After 15 years at Motorola, I went to another little Chicago company called McDonald's. At McDonald's, I had the privilege of leading teams that helped build and deliver on our digital agenda. Those teams in that moment did the hard work of aligning 120 different countries onto a single retail tech stack so that we could deliver innovation a little faster. That global perspective and alignment helped drive faster-paced innovation. Our digital footprint soon grew to include things like digital menu boards, kiosks, mobile ordering. And those capabilities were delivered and scaled in rapid succession across tens of thousands of restaurants. After 15 years, I left McDonald's and I joined Couche-Tard, the company behind Circle K. Many of you are probably aware Circle K is a fuel retailer, about 15,500 sites globally, about 125,000 employees, and about $60 billion in revenue. I joined absolutely energized to join as the global CTO to help drive reinvention of the customer experience in an industry that just had not done that before. And I loved the scale of the company. Our focus as a leadership team was to become the world's preferred destination for fuel and retail. And one of the leverage we were using was differentiated customer experiences. It was an exciting, inspiring journey of reinventing fueling and the C-store experience. And I never expected to leave Couche-Tard. However, Starbucks is a company that I've always admired for doing the right thing, for amazing technology, and a very special culture focused on bringing people together around coffee. In short, the mission, the people, and the brand presented an opportunity that I just couldn't pass up. In just a few months, I have been listening and learning. And already I've been inspired by the singular mission that everyone around here shares, and that is delivering kindness and connection one cup at a time. I'm also impressed by the incredible technology and the incredible technology team that's already here. But I'm also already seeing opportunities to unlock greater speed at scale. The insights are driven first and foremost by the time I've been spending in stores, working shoulder to shoulder with the people who actually use our technology, our partners and our customers. I am seeing an incredible team, an incredible ecosystem of technology solutions and suppliers, and alignment across all teams to deliver on the bold reinvention plan aspirations and Starbucks' biggest global priorities. It is such a privilege to be here to help write the next chapter of technology history at Starbucks. Starbucks spent much of the past year reflecting on where we are and where we need to go. It resulted in a clear articulation of what reinvention needs to look like. And as you've heard from others, actually everyone today, technology is fundamental to our plans. And the technology foundation that we have today, it is absolutely strong. But what we have today has not been built for our vision of the future. Through my Starbucks learning journey, I've developed a clear analogy to describe Starbucks' approach to technology: education. In the last 150 years, our approach to teaching has continuously evolved. We used to give teachers chalk and a board, and off they went. As technology evolved, so did education delivery. We began to publish textbooks, design learning toys, incorporate computers, the internet, Zoom, and Teams most recently. All along the way, we've been elevating the teaching profession. But all of those technology advances never took the teacher out of the classroom. Instead, they sought to empower our teachers to do their work at their highest caliber. Why? Because it's the connection. It's the connection between the student and the teacher that makes all the difference. In technology at Starbucks, we aspire to the same goals. We will never replace our baristas. They are the core of who we are, and they deliver that connection to our customers every day. We are instead laser-focused on how we enable our partners to bring humanity, kindness, and coffee to every one of those 14 million one-on-one connections that they make every single day. Simply put, our job is to automate the work and simplify it so their job is easier and more joyful. As I mentioned, the Starbucks tech stack is impressive. Our app is the envy of every retailer. We scaled our commerce and rewards programs to support Starbucks' aggressive digital growth. And with 24.7 million active reward members driving over half of our US company-operated sales, I'd say we've done pretty good, darn well. We're also data-driven. Our millions of daily customer interactions give us the ability to use our data and our incredible data expertise to guide our business. We integrate data and insights into every part of our business. Sometimes they're used to provide the great personalized customer experiences that surprise and delight, or micro-level pricing, or partner engagement moments, and so many more, including leveraging IoT. We possess the real-time data on our digital and our physical footprint. This enables performance visibility and data-driven decision-making that propels our business forward with each and every passing moment. As you've heard from John, we've prioritized our partners. We're automating store tasks, providing task management tools, building playbooks for shifts, and launching automated inventory ordering. That said, while our digital channels continue to underpin our success, which is wonderful, we must also acknowledge that that channel growth has created a few challenges for our partners. Those pressures are absolutely top of mind as we design the technology that makes it easier and more fun for our partners to deliver the experiences of the future for our customers, wherever they may be, in our stores, in their living rooms, in their cars, or as you heard from Brady, maybe even in a Web3 experience. So as you can see, we have a lot more to do. Building on our track record of leadership success and delivery, we're planning to continue to accelerate innovation to focus on value creation at the scale of Starbucks. As we look to the future of technology at Starbucks, our goal is actually pretty simple: speed to market with digital innovation at our global scale. Our approach to this speed at scale agenda has 3 pillars: stabilize, modernize, and optimize. First, we must stabilize. What I'm talking about here is store operations. Things just need to work. As many of you are aware, our mobile app has had a few brief outages over the past few months. And with 1/4 of our US sales coming through our digital channels, it's just imperative that the tech works. So we know that even a few minutes of downtime can mean lost moments of connection between our partners and our customers, confusion in our stores, and of course, lost business opportunities. That's why our top priority is to have resilience in our digital channels, because reliable store operations is just a must for our customers and our partners. Second, we need to modernize. For over 50 years, Starbucks has pioneered increasingly modernized customer experiences. And as we've been lighting them up, we've created a bit of complexity. We've absolutely been making the right decisions for our customers, but that complexity has built up a little bit in our tech ecosystem, and it sometimes slows us down. We will modernize and simplify our architecture to be able to scale new ideas and innovation faster. And we will unlock ourselves from the shackles of multiple monolithic systems to become more agile. The good news is this work is already underway. A good example of this is what you just heard about from Michael, our Starbucks digital solution. In EMEA, 67% of our store portfolio is now live on this tech stack. It's bringing online new capabilities like mobile ordering, delivery, digital menu boards, and scaling them much faster than we've been able to do in the past. And what's truly exciting is that this not only creates a consistent customer experience, it started in Europe, is going to Latin America and the Caribbean, and eventually to Asia. Another good example of enabling a consistent customer experience across store types is a solution we call Starbucks Connect. You heard Brady talk about that earlier. We've built a technical solution for licensees to participate in our Starbucks Reward program and get the benefits of mobile order and pay. With Connect, our customers will have a consistent experience wherever they are. Connect attracts new Starbucks Reward members and helps grow our licensed store business. It's a big deal, and it's rolling out quickly, already in over 20% of our U.S. licensed stores. And the value is clear. We see Connect stores quickly scaling from what used to be 0 to almost a quarter of transactions coming through the digital mobile order and pay channel like that. Third, we will optimize. As we become speedier, we will also become more efficient. The opportunities to streamline and simplify are immense. We will eliminate redundancies and we will leverage the world-class technology that we already have. This will provide cost savings and accretive business benefits that we can direct to future technology investments. One area for optimizing is rationalizing the hardware we have in our stores. This spring, we began to ask ourselves, where else could we go with the multitude of digital assets that today only serve us for a single purpose? How could we use what we already have to power new experiences? We launched a test that went live last August at the Microsoft Campus Learning Store, where we're testing different digital experiences of the future for our customers and our partners. It's an important experiment. We're seeking to find ways to extend our digital assets, the ones we already have, to do more for our business. We have an opportunity to transform the partner experience if we take our customer-facing digital assets and make them barista-facing as well. Some of the highlights of the proof of concept that will inform and shape our priorities of the future include things like multitasking, multi-use hardware, finding ways to equip our partners with devices that enable a more modern experience to support key shift work through a single pane of glass, customer usuals, making it easier for our partners to recall and add customer favorites to in-store orders. Imagine how this could improve millions of daily customer interactions and enable faster speed of service. Nutritional information, adding this information to ordering workflows, which streamlines work for our partners. Reusable technology, determining where we can make our tech more flexible and reusable. Hardware independent, if you will. We want any high-performance application to work on any hardware. This will maximize the value of the equipment we put in our stores while giving us the flexibility for future store designs and future customer and partner experiences. Accessibility. I'm especially proud that we are designing inclusive experiences that support our partners' accessibility needs and ways of working. In our live proof of concept, a legally blind partner was able to take orders with the help of a screen reader. Talk about being performance-driven through the lens of humanity. We have an incredible focus on reinventing the experience for our partners, our customers, and our stores. You've heard that all morning. The bottom line is this: tech is at the heart of bringing all of these experiences to life. You heard me talk about stabilizing MOP a little bit earlier. Is that in service of our customer, of our partners, or our stores? Of course, it's in service of all three. Our technology cannot be designed for a single stakeholder. It must be built to support the holistic Starbucks experience. Earlier today, Frank talked about our 5 strategic shifts. Technology does not support those moves discreetly. It spans all of the reinvention plan, lighting up different aspects of it. And we are making unprecedented investments to fuel this reinvention. We're investing roughly $200 million across all of our functions, with a large portion of that going towards technology. Now, when it comes to our customers, we're leaning into innovation and embracing emerging tech solutions to deliver hyper-relevant, scalable, personalized partner and customer experiences. And we're converging our digital customer-facing assets with in-store tools to help design these experiences of the future. As you heard from Brady, With our reward members driving over half of our transactions, making digital ordering effortless is a top investment priority. We're building the foundation to enable even more customer personalization. Right now, we're focusing on personalizing journeys by driving the next best action in our Starbucks reward lifecycle and in our app, providing relevant, event-based offers and content, simplifying and taking friction out of the sign-up process. In addition, we're developing a frictionless payment program that will automatically recognize and authenticate our customers as they pass through the drive-thru, helping unlock a more personalized and effortless experience for them and for our partners. One more way that we're improving the customer experience is making enhancements to our mobile app. That means real-time updates so our customers know the status of their orders before they arrive to the store. We're also load balancing across multiple stores to improve throughput and evenly distribute the demand, especially during those peak hours. We'll also be using artificial intelligence and machine learning to really tweak and fine-tune our wait time algorithms so that they take into account changing customer behaviors like more drink modifications, more mobile orders, and more business coming through our delivery channel. Now, shifting to our stores and partners, we've got a number of things in flight that automate tasks and streamline processes. One of the ways that we're optimizing the experience for our partners is handheld ordering. Our partners have been using it to expedite orders in the drive-thru. And what they're telling us is that these tablets are easy to use and easy to read. Whether that's on a sunny day in Florida or it's a little rainy here in Seattle. Recently, we've been also working on this partner app, which I think you heard Frank talk about earlier. We're starting to deploy it. And the whole idea here is to unite all partners as one Starbucks. And as Frank said, it's one of these personalized tools that we believe is going to empower our partners to thrive at work. It's a really important part of our reinvention. We're co-creating the app with features that are important to our partners. And we'll continue to learn and develop more of these features as we continue to roll it out. And they're telling us that they would like things like viewing and managing their schedule and pay, things to do to facilitate fostering connections, and then helping drive personal career growth, and even more. The launch of the Partner app is a great example of how tech is helping redesign what it means to be a partner. And perhaps even more exciting to our partners is the work that we're doing to enable customers to reward great service with tipping. Today, we enable in-app tipping for Starbucks Reward members who use a stored value card. And we're going to make that easier, and we're making it easier for all customers to be able to reward great service no matter how they pay or where they pay. Whether it's automated ordering, smart capacity planning, automated receiving and counting, or micro-fulfillment, the tech team has the same job each and every day. We're striving to eliminate tasks for our partners and enable them to do more of what they love: master making great beverages and connecting with our customers. So I want to end with where we began: education. The history of education technology is one of continuously giving teachers more and better tools to deliver instruction. And it's been supporting our education professionals to build the trust-based relationships that they need to inspire and nurture their students' minds. As a company, we have spent 50 years inspiring and nurturing the human spirit. Our partners do that every day. They're the ones who have built that trust with our customers. And we are relying on our partners to continue to foster those moments of connection. So, much like education technology, Starbucks technology does not seek to replace our partners, but instead seeks to elevate and empower them to deliver another century's worth of connections. I'm so excited to be here on behalf of the tech team and to help power those experiences at scale that only Starbucks can. Thank you.
How we doing? We up? We sleep? All right. So now we're going to actually break for our rotation. So everyone should have a badge. And if you look on the back of your badge, you're going to see your group name and a table number. So the group name, espresso or refresher. If it's espresso, you're going to go and enjoy lunch first, followed by experiencing our Trier Showcase. If it's refresher, you're going to go to the Trier Showcase first, and then you'll enjoy lunch. And then the table number that you have is the table that you will sit at during lunch. We have one of our leaders at each of the lunches in both sessions, and so you'll have the experience of sitting and talking with some of our Starbucks leaders. But just as a kind reminder, we're still under a Reg FD environment. So I just ask that you hold any and all financial questions to the broader Q&A session this afternoon. We have Green Apron partners that will escort you throughout your rotations. And so now, Green Apron partners, the audience is in your hands.
Let's go to Starbucks drive-thru.
Hi, can I please have the pink coconut Starbucks refresher?
Looks so tasty, OMG.
We have it! Woo! Oh my God, it's so good. You have to get it.
Good afternoon, everyone, and welcome back. I'm Rachel Ruggieri. And you know, I thought about this and I thought, gee, I don't have a video, I don't have special guests to come on, but I decided this, that today my colleagues have given you a narrative. And really what numbers do is they end a sentence. They're the punctuation. And I'm choosing this for today's punctuation, exclamation point. So keep that in your head. Keep that in your head. So how many people enjoyed the Trier Center? Oh, come on. That's pretty cool. All right. I love the Trier Center because I think it highlights the very best of what we have to offer at Starbucks, which is innovative solutions designed by our partners for our partners. It gives me a lot of confidence in the future. I hope it does for you as well. And it also makes me really proud. Now, as my colleagues have shared today, our reinvention plan supports a renewed focus on the three foundations of our business: our partners, our stores, and our customers. Investing in this triple shot is what differentiates our brand and our experience. Now, whether you have that great conversation in the morning with your favorite barista, you know you all do, or you're customizing your pumpkin cream cold brew in the afternoon, or if you're like me and you enjoy a grande quad espresso over ice with extra ice twice a day, every day, explains a lot. There's so many different ways to enjoy Starbucks in whatever way works best for you. And what we know that is above all, our brand is defined by the experience and the personal connection that our partners create for our customers. That is the essence of Starbucks, and it's what makes us unique. I can say that because I'm not only a partner, I am first and foremost a customer, and a very loyal one. So now as I wrap up the presentations for today, yep, this is the wrap-up section, I'm going to show you how the investments and the personalized connection and that experience we're creating for our partners and our customers translates into a new era of performance. Now, as Howard teased in the beginning, and as we've shared throughout today in the details, the reinvention plan is set to support a new era of growth. What does new era mean? Simply put, it means accelerated earnings growing to 15 to 20% annually over the next 3 years. Come on, you got to be on the edge of your seat. 15 to 20% annually over the next 3 years, up from our previous guidance of 10 to 12%. That's our new era of growth. Now, hopefully you're on the edge of your seat, you're not sitting there writing and you're listening, because the reality is, now what I need to do is explain how that accelerated growth translates into our performance. So it all starts with the building blocks of our ongoing growth model. Our building blocks can be summarized into 4 key drivers that collectively support our company's earnings growth. They are number 1, comp growth, 2, store growth, 3, margin expansion. And finally, disciplined capital allocation. Our reinvention plan was specifically designed to accelerate each and every one of these building blocks, leading to accelerated earnings growth. Now, before I get into the building blocks, I want to remind everybody that our ongoing growth expectations are over the next 3 years, starting in fiscal year 2023 through fiscal year 2025. Additionally, fiscal year 2023 will be outsized as we lap fiscal year 2022, which was pressured from elevated investments, inflationary pressures, and COVID-related impacts. For this reason, fiscal year 2023 may be outsized on certain metrics relative to our ongoing performance. All right, now back to our building blocks. So our first building block is comparable store sales growth, because we know that comp growth is a key indicator of the health of our business. Now, we're expecting acceleration in this metric over the next few years, driven by the collective benefits my colleagues shared throughout today as part of the 5 strategic shifts, otherwise known as the reinvention plan. As a result, we're now expecting our global comp growth to reach the range of 7 to 9%, with fiscal year 23 at or above the high end of the range, given the timing of recovery in China, normalizing to the low end of the range in fiscal year 24 and fiscal year 25. Now, this is 3 percentage points above the midpoint of our previous guidance range of 4 to 5%. Why? Because our path forward prioritizes investments that accelerate our revenue growth through efficiency and unlocked capacity across the globe. Importantly, we've already seen some benefits from the investments we've made, as Frank shared earlier today, as John spoke about. And we're in a position, a unique position, to benefit from some tailwinds, including increasing demand for convenience, increasing traffic, as well as a continued taste and desire for cold beverages and personalization. Now, driving this acceleration is our U.S. comp growth, which is expected to increase to the range of 7 to 9% annually over the next 3 years, also up from our previous guidance range of 4 to 5%. For China, we're expecting our comp to be outsized in fiscal year 2023 and portions of fiscal year 2024 as we lap the severity of the lockdowns in the market. Now, as the market recovers, we expect comp to normalize to a range of 4 to 6% in 2025, which is up 2 percentage points from our previous guidance range of 2 to 4%, driven by our confidence in our ability to meet our commitments, aided by an increasing digital capability, which Belinda outlined today, as well as the vast opportunity that we see in this key growth market. Now, our next building block, so on to number 2, is new store growth. Based on the demand that we are seeing across the globe, we're also accelerating our global store expansion, targeting net store growth of roughly 7% annually over the next 3 years, with fiscal year 24 and fiscal year 25 higher than fiscal year 23 as we work to accelerate the pipeline. Now, this is up from our previous guidance range of approximately 6%, even on an expanded store base, driven largely by our U.S. portfolio, as the reinvention plan, similar to what John outlined today, has identified incremental opportunities, coupled with our deepened confidence for our growth in China. Now, with this, the U.S. store growth target increases to 3 to 4%. John had shared that today, over the next 3 years. That's up from our previous guidance range. Oh, I should say, fiscal year 2023 will be at the low end of that range, and fiscal year 24 and fiscal year 25 will be at the high end of that range. Now, that's up from approximately 3% that we had previously provided. For China, given the strong and robust store development that we have in the market, we're now targeting net store growth of roughly 13%, which is basically giving more definition to the low teens that we had previously guided. We also see tremendous opportunity to be able to expand across the globe outside of markets like US and China, as Michael had shared today. Now, when you think about the store expansion that I just shared over the next 3 years, coupled with the long runway of opportunity that we have across the globe, it's not hard to imagine that we're now estimating approximately 45,000 stores by the end of fiscal year 2025. 45,000 stores. That puts us on a path to meet the 55,000 stores by 2030 that we had previously guided and projected at our last Investor Day. Now, with this pace of global store openings, we're expecting to open nearly 8 stores per day. 8 stores per day. When you have best-in-class returns, the ability to build and remodel stores that optimize the customer experience of the future, and a global footprint, it reinforces our leadership position, which is actually unrivaled in our industry. That might need an exclamation point. All right, so now when you combine comparable store sales and store growth across our company-operated and licensed markets, it leads to revenue growth of 10 to 12% annually through fiscal year 2025. Now, this is up 2 percentage points from our previous guidance range of 8 to 10%. And this is because we continue to prioritize investments that focus on accelerating the partner experience, creating efficiency in our stores, coupled with an industry-leading digital program, an engaged and growing Starbucks Rewards membership base, game-changing innovation, and a rapidly expanding store portfolio. There is no better way to demonstrate a new era of growth than through the confidence that we have in committing to double-digit revenue growth, which breaks convention for a company of our size and our scale. All right, moving to the third building block, margin expansion. I know it's always the question of the day, right? We expect our margin to expand in each of the next 3 years. So based on the anticipated recovery in China, coupled with the investments that we've been sharing throughout the day, we now expect solid margin expansion in fiscal year 2023, with progressively more expansion in fiscal year 24 and fiscal year 25 as the impacts of the reinvention plan start to take effect and amplify. Now, we'll reach our historical levels of margin over the long term, but it's critically important that we make the right investments and decisions today and in the near term to implement this reinvention plan because it furthers our advantage. Okay, now let me provide a little bit more color around the shape of our recovery, margin recovery. Our margin is a function of pluses and minuses that together net to accelerated growth. We expect an outsized impact on the plus side of the equation, driven by sales leverage from the accelerated revenue growth, inclusive of strategic pricing, improved turnover, efficiency in our stores, and labor leverage, as John had outlined today, and some of which we shared with you in the Trier Center earlier. We also expect waste reduction, as well as supply chain savings across the P&L and G&A leverage over the long term as the reinvention plan investments begin to lessen and we get leverage from the accelerated revenue growth. Now, on the other side of the equation, we anticipate incremental investments in the support of our reinvention plan and our other initiatives. In fiscal year 2023 specifically, we're estimating to spend slightly more than $1 billion of incremental investments, half of which will reflect the annualization of the investments we made in fiscal year 2022, largely related to wage and benefit rate increases. Now, we also expect headwinds related to supply chain and commodity pressures, inflationary pressures, to continue, with a potential opportunity for a tailwind in the future if rates decrease. Now, it's going to be critically important for us to continue to invest in our partners, our stores, and our customers well beyond fiscal year 2023. But we believe the benefits from those investments will outpace our costs, leading to further margin tailwinds in the future. Okay, we're getting close. Fourth and final building block. Moving on to capital allocation. Despite the elevated level of investments, we remain committed to sustaining a strong balance sheet and superior shareholder return underpinned by disciplined, growth-oriented capital allocation. Now let's start with CapEx. Based on what I shared today and the expansion of our global footprint, as well as our ability to continue to invest high-return, growth-oriented investments in our partners, our stores, and our customers, to enable this, we'll need to increase our CapEx relative to previous guidance to $2.5 to $3 billion annually over the next 3 years. Now, these incremental investments will go to support store growth, renovations, innovation in our stores like equipment and design, like what you saw in the Trier Center today, as well as supply chain and technology improvements. Now, as we continue to prioritize high-return, growth-oriented investments, which bolster our revenue and our capital efficiency, we expect our ROIC to progressively improve, exceeding 25% in the next 3 years. Now, our ability to continue to invest in the customer experience of the future is a competitive advantage. Importantly, the learnings from the investments we're making today help drive better returns for our capital investments in the future. Next, we remain committed to sustaining an incredibly compelling dividend, continuing to target an earnings payout ratio of approximately 50%, which equates to an estimated yield of about 2%. Now, both our payout and our estimated yield are near the top end of growth companies of our size and scale, creating superior shareholder returns when you combine it with the rate of our earnings growth. And finally, we will resume our share buyback program, reinstituting a healthy level of return of shareholder capital. We expect to yield a benefit of approximately 1% on earnings, net of incremental interest expense, beginning in fiscal year 2024, as we expect the reinvention plans to help uplift our free cash flow and our debt capacity while we maintain our long-term leverage target of 3 times lease-adjusted EBITDA, which is consistent with an investment-grade credit rating of BBB+. Now, between our dividends and our share buybacks, we expect to return approximately $20 billion to shareholders in the next 3 years. $20 billion to shareholders. Now, on the subtopic of capital allocation, I also wanted to address an alternate scenario of 10-20-30 that we shared at our last Investor Day. As a reminder, that scenario assumed further licensing of some of our markets and a redeployment of the capital, which would lead to an earnings growth of at least 10%, operating margin approaching 20%, and ROIC approaching 30%. Based on a more recent evaluation of our ownership structures, we believe that we largely have the structures in place today to support the growth scenario over the next 3 years. So if you take disciplined capital allocation, our compelling cash distributions, and enhanced ROIC, it reflects our confidence in the strength of our business, creating exceptional shareholder return while maintaining balance sheet flexibility and, importantly, funding our critical investments. Okay, we're getting to the very end because now I'm going to add up all the components of the building blocks. So when you take accelerated comp and store growth, it leads to revenue growth of 10 to 12%. When you combine that with accelerated margin expansion, as well as a return of our share buybacks, it converts to an EPS growth of an estimated 15 to 20% annually over the next 3 years. So see, that's where we started, now we're back. 15 to 20% annually over the next 3 years. That far surpasses our previous guidance of 10 to 12% when combined with a dividend yield of approximately 2%. This is an incredible ambition on every single level. Howard started with ambition, and I just punctuated the ambition. Now, hopefully what you've heard today through everything that my colleagues have shared and what we've talked about all day is that we're designing a plan and implementing a plan that delivers a new era of growth. And if you're in finance, you hear new era of growth. I know, because I do this too. You think of percentages and CAGRs and basis points. But the reality is, or in my opinion, there's another definition of new era that I particularly like that comes from the Longman's Dictionary of Contemporary English. I know, probably never uttered at an investor day. The Longman's Dictionary of Contemporary English defines new era in this way. It's a period that is just beginning, especially one that seems to offer better opportunity. I'm going to say that again. A period that is just beginning, especially one that seems to offer better opportunity. I've been a partner at Starbucks for over 18 years, and I have had incredible opportunities, and I have learned so much. And I love working at the company. But what keeps me here, and importantly, what keeps me coming back each and every day, is something that I learned from my parents when I was growing up in Walla Walla, Washington. And that is, people make the difference. We shared a reinvention plan today and talked about a lot of things, and I just gave you incredible growth numbers. But the reality is all of that, everything we've shared, is in support fundamentally of a better experience for our partners. As Frank outlined, for our partners to thrive. That's what this fundamentally all leads to. Because we know that when our more than 450,000 Green Apron partners across the globe work together side by side to reinvent Starbucks, that is our superpower. Our partners are our superpower. And that is why we dare to enter a new era of growth, to create long-term value for all, for partners, for customers, and for shareholders. I have confidence in this growth. Why? It's simple. I have confidence in our partners. Thank you so much for being here today, and we welcome Q&A, which I have to imagine you've got a lot of questions, so we will entertain those in just a few minutes. Thank you. punctuation.
So I think we want to open it up for any questions, comments. And if you just introduce yourself and maybe stand up because the lighting is tough. We can't really see you very well. That'd be great. Go ahead. Mr. Palmer.
Yes. The mic's coming. The mic's coming.
Hi, Dave Palmer, Evercore ISI. Just a question on the siren system. I assume you've tried it out. You have the Trier Center. Maybe you've done some in-market stuff. Could you maybe give us some numbers or give us a sense of what it looks like in terms of labor productivity and the throughput upside, in other words, the sales upside, as you roll that out? And that $450 million you're spending in 23, is that really the siren system rollout itself, or does it include some others? You know, if we talk about what is in that. Thank you.
I can take that. What I would say is our siren system is really, we're in a test period. There are some stores today that have it. We'll continue to test to 23. The rollout is in 24 and 25 more broadly. So that 450 that John outlined is a lot of the equipment, as well as some of the activities that we're doing in the stores today to be able to create more efficiency. Some of what John talked about with automation, with simplifying our tasks. So that's really what's largely going into that number today. Inclusive in there also is some of the training that we're also spending for the partners. So that's really what combines that number that we're talking today. And in terms of the siren system, what I would say is the $2.5 to $3 billion in capital that I guided for the next couple of years, that will include our rollout of the siren system. So it'll be part of new stores as well as renovations, and it's part of that overall capital spend.
If you're staying in Seattle, any of you, and you want to see it in action, it's in a store about 20 minutes from Seattle in Renton. And it's live. We've all seen it. We've been there a number of times. Our partners love it. And it's right there. You can see it in action.
And we can send out the address. I know I already have a couple people, so we can send the address out.
And what you'll see is that it'll drive throughput, right? Clearly, the time to make a beverage versus where it's at today drives an increase in capacity to help us achieve those revenue targets that we're looking at, and ultimately flow through into the margin growth that we're looking for.
Yeah. And on the mic. Thank you.
It's Greg Frankfurt from Guggenheim. Thanks for all the detail, and I thought the Trier Lab was just really good to get a hands-on feel for. In terms of the revenue growth and the comp growth, I mean, I guess 7 to 9% just feels a lot stronger than where it's been. How much of it is the technology enabling that versus something else? And what's the breakdown of traffic versus pricing that's assumed in that?
Sure.
Thanks.
Thanks for the question. I'd start with 7 to 9%. Remember, FY23 is at the high end of the range given the timing of recovery in China. So we're normalizing to the lower end of the range in 24 and 25. Still a big number. And a big driver of the difference from where we were before is some of the things that I outlined, which include the investments that we're prioritizing that drive accelerated revenue growth, as well as this increasing digital capability that we have across the globe. What Belinda talked about in China, what Michael addressed for the international markets, and as well as what Brady talked about. So that's a significant driver. We have a engaged and growing Starbucks customer base. That also supports the growth, as well as the fact that we've continued to innovate in our products, beverages, and food, and that also helps drive it. So it's a combination of all of that that leads to the accelerated comp growth that also leads to the accelerated revenue growth.
If I could add just a little bit on top of that, on the ticket side, what we're seeing is premiumization. So as people shift towards that cold, customized, plant-based beverage, that tends to be a premium beverage. As they customize, they're adding things like cold foams or plant-based milks, which again is a premium ticket. Plus, with the growth that we're seeing on food, we're just seeing an expansion in ticket completely. But if we look at the transaction side, offices are still at a fraction of their pre-COVID occupancy levels. And as we see that to start to come back, we think we'll see a lot more traffic coming into our stores, not to mention some of the digital innovation that we've put in place, as well as the expansion of delivery. So both on the ticket side and the transaction side, we see a number of levers to really drive the business.
But I will note that the 7 to 9% comp, particularly in FY23, because it's reflecting the recovery in China, it's got a significant part of it that's traffic. In the out years, there's still traffic growth, but it's smaller relative to ticket, given to what Brady spoke about with personalization and more premium beverages.
Let's take one in the back.
Hi, John Tower at Citi. Just had a couple questions, if I may. In terms of, I think we heard a few numbers today around investment, whether it's the 450, 220 million in China, and I believe another 200 million in digital. So I was hoping you could walk through where that's going across the business, OpEx versus CapEx, as well as the timing. And then, hate to get greedy on this, but thinking about the business beyond fiscal 25, obviously we got the 15 to 20 up through that point, but how should we think of it beyond that?
Well, I can start and I can have Belinda and John add, but in FY23, we're committing to slightly more than $1 billion in incremental investments. Half of that reflects the annualization of the investments we made in fiscal year 22 related to the benefit and wage rate increases. So the way to think about the remaining amount is a good portion of it, almost all of it, goes to partner. Then in terms of the $2.5 to $3 billion in incremental capital that I spoke about, right, relative to we've been closer to, say, the $2 billion range, that increase is reflecting the stores, the renovations, the innovations we're speaking about. But that's the high level, so I'll give it to my colleagues to give you more detail.
Great. In terms of the 220 million in China, it's really around three areas. One is digitalizing our operations so we can simplify the work for our barista. Like I shared before, they can focus on connection with the customers and the craft, right? Second piece is the new experience that we could bring in the omni-channel space. And either in delivery or in store, we're constantly bringing and elevating the Starbucks experience that we could offer. The third piece would be around the membership. How are we going to acquire, engage our membership, our members a lot better? I mean, the enormous opportunity we can reach new members, and then cultivating that relationship with them requires a lot of investment for us to be able to offer personalized experiences to them. So those would be the three areas that we'll be focusing on those investment.
And for the U.S. business, I would just add the $450 million is the investment we'll make this coming fiscal year. It's really centered around the store and store experience, and really the work we're doing around simplification for our partners, as well as giving them the increased training that we are investing in. Equally are the investments that we'll make to drive demand as well, from a marketing standpoint as well as from a digital standpoint. So, clearly we see that these investments are the right ones to do, and we are definitely going to hold ourselves accountable to seeing the returns from those.
And if I could just add the slightly more than $1 billion that we spoke about, that's all OpEx, it's all partner. And then largely what Belinda talked about and what John talked about are part of the $2.5 and $3 billion in capital. So that gives you the breakdown. And then beyond fiscal year 25, I just have to say we're incredibly encouraged by our reinvention plan, but I think, the guidance we gave today is a great outlook for the next couple of years.
Please.
Hi, Andrew Charles from Cowen. I guess a question for Rachel or for Michael, but just want to go through on the refranchising plan. A year and a half ago, it seemed pretty sound to refranchise company-owned stores outside of China, internationally, of course, not in the U.S. Can you talk about the thinking that's changed there, just given that was going to be an opportunity to boost ROIC for the company, cash inflows to buy back stock, make the business a little bit more franchised, so therefore a little bit more, resilient, if you will, a little more defensive. And then just to follow up to that, Michael, if you had to pick one market that we can think of as, obviously you guys did fantastic well in the U.S., then it became China being the next big focus. What's the one market you'd say, hey, this could be something big as well in the future that you're most optimistic about? Thanks.
So I'll start, and Rachel, if you want to talk
Sure.
about that. So I shared today that we're fairly balanced right now internationally between our company-operated and our licensed markets. And what we found during the last couple of years is that that model is working for us. It's actually been quite robust. If you look at some of our company-operated markets like Japan, that has been quite resilient. We put investment in, so our digital is starting to take off. So our sales, our profitability is starting to increase. And so that market is a significant market with actually a lot more runway, whether it's stores or digital to come. And then you flip to a market like the UK, also very strong performance, some record performance the last couple of quarters. We've had 5 quarters of just record revenues, and we see a lot of potential there. You flip to our international license markets, and we've also seen resilience across the line there, and we've worked very closely with our partners over the last couple of years to ensure that we're building capabilities. And so I think as we look at the balance has worked for us, and in fact, as customer behaviors change and we start focusing more on shifting our portfolio, that balance and both of that is working well for us. I don't know if you want to add, then I can talk about what's next.
And the only thing that I would add to that is that we continue to evaluate our ownership structures. And so we'll continue to do that. I was just being very specific around addressing the 10, 20, 30. Well, we don't see that that is an alternate scenario. It doesn't mean we won't continue to evaluate our ownership structures. We will.
And in terms of the future and what might be ahead in terms of the next big market, you may have noticed actually today I've shifted from talking about a given market to focusing actually on our licensees. And with our licensees who span multiple markets, we see growth coming from not just one market, but multiple regions. So as I think about the future, I see growth across Latin America. I see significant growth in EMEA and also Asia Pacific. And so really, there isn't one market. I think there's going to be a lot of growth to be had in existing markets. We're always looking at new markets as well. But there isn't one that stands out. What really stands out is the strength of our licensees and the way we're going to build capability there. And what you're going to see isn't just one market, but you're going to see growth across the entire portfolio, similar to what we've seen the last couple of quarters with the strength of our business. Yeah?
Hi, John Zolaitis, Quovatus Capital. You put up on a couple of slides an expected relationship between cost and sales at new stores of 2 to 1. But obviously, the revenues at new stores are expected to be higher in the future, and we all know that cost to build out stores has gone up. In addition, you're making a lot of investments with the new siren system, et cetera, to make the stores more attractive. And we know also that drive-through stores tend to be more expensive than some of the other formats. So I was wondering if you could help us understand the specific cost of the new stores that's embedded in the CapEx guidance that you provided. And then secondly, within that, China is a greater percentage of the growth going forward. Are those stores expected to produce higher ROIC than the US-based stores? Is that included in the 25% total company ROIC target over time? Thank you.
Yes. I could start, and I'll answer the last part of your questions first, which is yes, our ROIC exceeding 25% over the next 3 years is inclusive of the growth that we're seeing in China from a store count. Now, in terms of the cost of a store, you got the model right in the sense that we are continuing to support a 2 to 1 investment ratio. So our sales will go up, but as you indicated, our costs also go up. But we're still able to support 2 to 1 while we do that, while still maintaining best-in-class economics, keeping to that approximately 50% ROI in the U.S. and about a 25% cash margin. China, as you know, is got even superior economics with about 70% ROI and closer to about 35% cash margins. So that's what we'll maintain as part of how we continue about success, right? We've talked a lot about store growth. Store growth is incredibly important, but we aren't chasing a number. We're ensuring that we have the opportunity and the economics as we do that. And today, we have that line of sight, and so that's why we're, optimistic about what we're doing.
You know, one thing about China that I think is perhaps not as obvious is that despite the strength of the unit economics of China, the transactions are relatively low. And historically, if you go back 20, 25 years within the U.S., the transactions at Starbucks were less than 500 a day. And so as the market matures and as we get more and more capacity across China, what's going to happen is those transactions are going to go up. And when you think about the scale of Starbucks, that we're still getting 2 to 1 sales to investment ratio at the level of scale that we have. I mean, you could actually make the case that 10 years ago, we actually had the best locations in the country, and our 2 to 1 sales to investment ratio should be going down because we don't have the choice of the highest quality real estate anymore. We've already taken it. But what's happened in America is that the market has expanded well beyond the high-profile markets, and that's exactly what's going to happen in China.
Good point.
Yeah.
So I found it.
Sarah Senator from B of A.
Sarah.
I wanted to go back to the idea of the same-store sales in the U.S. I know this might be a typical question to answer, but if you had to think about sort of order of magnitude, how much of that is from, new sales layers or new customers versus just improving productivity and maybe just capturing the demand that's out there now that but you've talked about perhaps not being able to service? And maybe if you can frame it as whether it's transactions to Howard's point about 500 versus 700, or how to think about the drivers. Thank you.
Yeah, I'm happy to start. Rachel, I don't know that we'll break down the portions of where it's coming from, but I do think one of our challenges today is that we're not able to meet the capacity of demand that is coming to our stores. So as we become more efficient on the front end, and when you think about a business that's 50% drive-through, we call it line bulk. It's when the line is too long and you peel off the line, or you don't even stop because the line is too long. That's one of the number one reasons for not visiting Starbucks is the line is too long. So when you think about just the latent demand that's out there, as we increase the capacity of our stores by enabling our partners and making their job easier and more effortless, we can serve more customers, and that's certainly baked into the model. But in addition to that, given the programs that we've talked about, the expansion of digital, the new product innovation that's building in the sweet spot of where the customer is going right now, that will continue to drive demand and drive sales. And then on the ticket side, we'll continue to look at our pricing strategy over time, but also we see that premiumization effect, not just in the elevation of the core product categories, but also with the customization that we're seeing increase significantly year over year. So that combination of factors should drive a very strong comp growth in the U.S.
Thank you. Jeff Bernstein from Barclays. I feel like Howard, Rachel, when I talk to investors, a lot of them look for prudent conservatism in an environment like this, especially with your size and scale, which you've referred to on a number of occasions, setting up for maybe more of a scenario to consistently beat and raise, which companies your size set the bar at a reasonable level and trying to exceed that. I'm just wondering the driver and the confidence behind actually accelerating your comp growth, your unit growth, your revenue, margin, EPS growth, just the scenario behind which you lay that out, especially in an environment right now where it seems like most people are talking about a slowing economy, whether it's in the U.S. or worldwide. I know, Howard, you mentioned you haven't seen anything to date, which is fantastic. I'm just wondering, one, just why raise, why not manage it lower and beat expectations? And two, what do you see today versus past slowdowns where you feel like you have greater confidence now? That's more of a short-term question, but just it feels like over the next year or two, headlines are going to be, how did you raise numbers?
Let me tell you how this plan was built, which I think will give you some insight and hopefully some confidence. The plan was built not only bottoms up, but everyone on this stage and the teams that we represent individually built their own plan. Then we came back together, we rolled up the numbers, and we had a real tough conversation about the scale of exactly what you've asked. And what I said to everyone on the team, I'm going to be very straight up with you, is go back, take the next few days, and have an individual conversation with Rachel as to whether or not you want to revise your plan down. So there was no pressure whatsoever about trying to hit a number, a comp number, an EPS number. It was based on what we were experiencing and our faith and confidence in the investments we're making. And then Rachel had the opportunity, as we presented to the board, to have the same kind of conversation. And I'll let Rachel take it from here.
What I would start with, Jeffrey, is I would say really the building blocks that I shared, I think, are the logical way to think about it. And from a comp perspective, which is the first start of the building block, to see a comp increase, and again, 23 is elevated relative to the recovery. If you think about the more normal end of the range, you think about, we're investing to be able to drive an accelerated revenue growth. That's critically important for us. Our ability to invest in the customer experience tomorrow is a key differentiator. So without that level of an investment, we wouldn't be able to get to the future we need to get to. So in some ways, you sort of have to be where you are to be able to support the level of investment, to get us to the future. The other thing I would add is we have an increasing digital capability that I think sometimes globally We don't even tell the story about broadly enough. You know, we talk a lot about what's happening in the U.S. We talk separately about what's happening in China. We had Michael share a little bit about what's going to happen in international. When you look at that collectively, that's an area of opportunity for us just in terms of how we think about our growth and what's different from even a couple of years ago. I mean, China was at 47% of their sales in Q3 was digital. Between MOD and MOP, that was a 13% growth from the prior year. So significant increase, and I think that just speaks to the opportunity we have. And if you can kind of get your head around the comp, you know, store growth, we've been pretty successful with that. That leads you to the revenue. And then the reality there is we are expanding our margin, but as you saw in our guidance, it's more of a, you know, directional on the margin expansion to be able to give us the flexibility so that we can continue to invest and determine how these returns come in. I mean, you can kind of get to the range when you take the revenue and the earnings, but if you've got confidence in that revenue and you add in that margin expansion, which is not an egregious number, collectively that gets you to the earnings.
Yes, please, in the back.
Hey, Kevin McCarthy at Neuberger. The question is on China, and in particular, what is it that gives you guys the conviction to really lean in on growth here when there are so many mixed signals coming out of that from a macro standpoint? It almost seems as if you guys are kind of going for a strategic land grab here, while others might be standing still. So any color on that would be appreciated. Thanks.
Right. Well, I during my presentation, I mean, the majority of the growth was from the last 10 years, and I explained just now that there's white space that we could go after. The market has great potential on more people picking up coffee. Middle class is growing, urbanization, all of that is happening. That's tailwind for us. And you just look at the last 2 years that we went through major distractions within the market, and our stores are still giving us new stores, like still giving us best-in-class returns, and it's just proven that there's just lots of opportunity. We're growing our stores not because we want to grab space, but there are people. There are more people. There are more people drinking coffee in China, and in different tier of cities, the whole coffee lifestyle and the life cycle is moving. And it's very dynamic, and just look at our track record. This is the third time we're giving a target. The first one I remember, 1,500 by 2015. We delivered before the deadline. 2018 in Investor Day, no COVID was in sight. Nobody in the world would imagine we have a pandemic going on. We went through that. We delivered 6,000 stores. Today, I am so confident to tell you that with our people, the ability that we can operate in the market, the know-how, our partners, the relationship we've built with our customers, the relationship we have built with our key stakeholders in the market, including the government, 9,000 stores, 2025. Thank you.
And let me just add one proof point on that, or data point. If for those of you that have covered us for multiple years, back in 2012, 2014, we had a statistic that said the average China consumer consumes less than 3 cups of coffee a year. Belinda put up a statistic showing that is now 10 to 12 cups per year. The market is moving fast. Coffee is emerging as a choice of beverage for the younger consumers in China. And we are positioned to capture share. And that's what we're doing. We're going after it, and we're investing now for the long-term growth aspects of the country.
Yes, back there. Thank you.
Thank you. Danilo Gargiulo from Bernstein. So it looks like this is a very ambitious exclamation mark plan.
There's a headline.
I wanted to ask you, how are you planning, if you're planning, and how you're planning to cascade down incentives down in the organization to make sure that everything is aligned? And the second question I have related to that is, look, it seems I hear love, I hear co-creation of the plan. So what's still outstanding in terms of aligning incentives with unions so that this plan is actually carried forward by the entirety of the Starbucks system? Thank you.
Frank, you want to start?
I'll start by saying I think it's an excellent question. I think this notion of cascading from the top to the bottom up, is very much at the core of the reinvention. I think we have some opportunities to continue to tighten that connection. Our first sort of thrust into this was just a recommitment to the partner experience as the source of value creation, comparatively speaking to all other things, as Rachel has said so well. And so I think with that in place, we're now going back and revisiting what are adjustments we should make to make sure the incentive alignment is as tight and as affirming as it can be.
Yeah.
Thank you. Nick Setian from Wedbush. Would it be possible for you to at least bracket, some of the operating margin assumptions around FY23, in terms of the U.S. or North America versus international? However you'd like to do it, maybe relative to 2019, just because, there's some big variations you can have there, particularly with international and China.
What I'd say is, we've provided a revenue range and an earnings range that allows you to get to the trajectory on margin. So that's one way to look at it. What I would say is the majority of our margin expansion in 23 comes from the U.S. business. So hopefully with that perspective, it allows you to kind of consider what that shape might look like.
Yes, please.
Thanks. Lawrence Laverne from Credit Suisse. So question about the Siren system. Amazing with time savings, better for partners. How do you think about the customer impact? So differences in taste or even perception when you go from cold brew that takes 20 hours to 45 seconds? And then somewhat related, I believe you mentioned potentially baking in the store. Can you expand on the strategy behind that? And again, just on the impact of the customer, the smell of the store, things like that.
I'll take the taste of coffee first, and then you can go to food. I can't tell you how many hours each of us spend on ensuring the quality of the coffee is at the same level it's been for the history of our company. And in fact, we are sourcing and roasting the highest quality coffee, more so than any other time in our history. And the proof of everything we do has to be in the cup. The Siren system will have no dilutive effect whatsoever on the quality, the integrity of the taste of coffee. It'll be exactly the same. And in terms of smell and things of that nature, in terms of baking in the store, I'll give it to Brady. Yeah, just to build on that, the Siren system does not change our brewing method for coffee. It changes the production system that the partner uses and the tools they use to make cold beverages. So it changes things like how they get ice, how they distribute milk across the bar instead of having to go into a refrigerator. So the coffee in that way is unaffected by the Siren system. But what I would say is that in each case, whether it's hot brewed coffee, whether it's hot espresso, or cold press, cold brew, Starbucks is rewriting the science of coffee extraction on patented proprietary technology. And we work with the leading experts in the world on coffee. Very specifically, to answer your question, we go through very rigorous stage gate process to test everything we do. We start with our partners. We do focus groups with partners to ensure that any change we make is not only accepted but loved by the partners. And our quest, as always, we never go backwards. It's only up in terms of the quality. So increasing quality of both hot brewed coffee through the Clover Vertica machine, increasing cold brew quality, and reducing the number of variables that happen over an 18 to 20 hour period in the back of the store by doing cold press, cold brew on demand. And then with hot espresso, we continue to refine our Mastrena 2 machine to make the world's best espresso. So quality of coffee, number one priority for us. We start with partners, and then we do multiple rounds of testing with customers in central location testing, products guidance testing, and then we usually do market tests, all to make sure that the coffee only goes up in quality, never backwards. And food?
Can I?
And food. Michael?
Yeah, I just want to add, so
talk about
internationally, we're doing baked in many markets across our international portfolio. In Latin America, Alsea, they're doing baked in right now, and it is actually a win-win-win. It's a win for the business because It actually creates a better tasting. It helps with waste. It helps with just the process of getting it there. It's a win for partners because they get joy from baking it in the store, and it's definitely a win for customers as well. And so we have experience in doing that, and that's something that we're sharing certainly across the international portfolio, and perhaps lessons also that we're sharing and can apply here as we consider.
I would just say ditto because that was so beautifully said, but the only thing I would expand is that's the beauty of the global business of Starbucks. We have multiple markets around the world who are fresh baking in store every day. And so we've just gone around the world to go look at some of those locations. I was on those trips. We brought someone from operations, supply chain, R&D, and we went and looked physically and walked the whole process end to end to say, what would it look like to fresh bake laminate products like croissants, chocolate croissants, cookies in our stores? It actually eliminates a lot of pain points for partners. So today we receive a frozen product, and we have to thaw that product, and then we heat it. One of the top complaints we get from customers is a cold center of a breakfast sandwich or a cold center of a pastry. Some of you were smiling, which means maybe you were impacted by that, and I'm sorry. Or a cold center of a sous vide egg bite. So in the future, with things like a fresh baked croissant, we take frozen dough and put that right into the oven, and it not only finishes the bake, but it actually bakes a fresh baked pastry in the store every day. The quality is the best you can find, and so we'll start that. You saw downstairs one of the ovens. It was off to the side, and then we had the new pastries in the pastry case. So we'll be taking that out to market test very soon. We've already been doing a lot of work behind the scenes to evaluate what that could look like. But as Michael said, not only does it elevate quality, it's actually more efficient for the partners. It reduces waste, and so there's a number of things, the win-win-win that Michael talked about to do that. Yes?
Thank you. Brian Bittner from Oppenheimer. Rachel, as it relates to 2023, you said metrics will be elevated, and I know you definitely were talking about comps being elevated relative to the 3-year range because of China's recovery, but are you also expecting EPS growth to be elevated? And I ask that because you outlined the $1 billion of incremental investments, right, and quick math says that's like a 300 basis point margin headwind in 23. Yes. And you said that the North America business is going to be the leader of margin expansion. So I'm just trying to understand the commentary about outsized growth in 23 and whether it relates to EPS, and if you can unpack how that works for.
The way I'd look at it is the comp range, as I said, was 7 to 9%, with FY23 at or above the top end of the range given the recovery in China. However, remember on margin is solid margin expansion in fiscal year 2023 with progressively more expansion in 24 and 25 as the impacts of the reinvention plan begin to amplify. So you got a greater top line in FY23, but you have a margin expansion, but not to the degree we'll see in the out years. So as a result of that, I think about that lower end on the earnings guidance range. Mm-hmm.
Yes? John, we'll come to you next.
Thanks. Jared Garber from Goldman Sachs. Just wanted to understand, transaction counts in the U.S. are still lower than they were in 2019. So wanted to get a sense of if you think that recovers over the course of the next year, or how you're planning to maybe utilize incremental traffic in your stores and what the impact of that looks like. And also as it relates to 23 and 24, how are you thinking about that China recovery? What's sort of embedded in that and your understanding of that market?
Transactions? Sure, yeah. I mean, our transactions, we're growing. I mean, I think what has transpired over the last few years is that our afternoon day part has grown. Morning is now growing, and I think what we're seeing is a lot of people are holding on to their afternoon occasion that developed over the last 3 or 4 years. And as offices start to come back in the U.S. and the urban core starts to get new life again, what we're seeing is that single beverage transaction in the morning is starting to recover. And so transactions will grow in 2023, and we're already seeing green shoots of that in our business.
And then maybe in terms of the China recovery, as I thought I was in my guidance for 23 and 24 on comp, saying it would be outsized relative to the recovery, but Belinda can speak more specifically in terms of the timing of how they've planned it.
So there's obviously a big chunk from the recovery from the Shanghai lockdown and everything else, right? So, but we did plan a very healthy comp growth, given what I've just explained to you guys today on the 6 key growth drivers. and we are going to work on those positive growth. And there's an assumption in our comp growth that we're not going to enter the fiscal year with everything just disappearing, right? So we're still going to be under the COVID, the zero COVID policy. So we're expecting, assuming that towards the latter half of next year, that you'll see more lifting of the restrictions versus now. So that's majority how we planned our 23 plan.
John?
Hi, thank you, John Ivankoe at J.P. Morgan. We led the presentation earlier today, talking about 2008 and the opportunities that came out of that. One of the things that happened in 2008 was a rationalization of the U.S. store portfolio. Coming into GFC, you opened a lot of stores in markets that, quite frankly, didn't develop for a number of years. I mean, whether they were subprime markets or otherwise, the trade areas just simply didn't develop at the time that that you rightly thought at the time. So I was wondering if there are any parallels in China. We read a lot in the Western press about the China property market or different projects that are half built and without people, what have you. I mean, are there Starbucks stores that are located in such markets that maybe you actually have an opportunity to mothball or just say, listen, we'll come back to them in 3 or 5 years? Is kind of the first point. And then secondly, is there a significant change? I would assume there's some type of a seismic shift in consumption patterns in China. 3 years of lockdown is a very, very long time, or just disrupted COVID, zero COVID behavior. Is there a change in the China store development platforms, that in 23, 24, 25, that's very different than the past that maybe was kind of obfuscated in what overall very strong growth numbers look. In other words, is the China of 23 to 25 very different than the stores that you were opening in 17, 18, and 19?
Okay, so I'll take that.
Yeah.
Well, first of all, I was here 2008. So the acceleration in China really happened back in 2011. So the number one thing our team has learned and throughout the last decade is that we want to build only profitable stores. And in the way that we will use a very disciplined growth. That's the only type of stores we want to build since the beginning of our acceleration. So it's not just today. So we really learned the lesson, and that was how we accelerated our growth back in 2011. So we watch our portfolio very, very carefully each year, and in the last decade, many things have happened. Things shift. Just in the last 2 years, many things happened as well. So we very much studied our new stores and make sure that we're not chasing after store count, but we're chasing after healthy new store growth that will give us great return in the future. So that's number one. I want to assure you with that. Our portfolio, it's very healthy. Now, of course, this year we've seen distractions on, when we have to have temporary closures. But even with that, we are delivering best-in-class returns and profitability like what we've showed you. So feeling really comfortable about our portfolio. One of the greatest portfolio you can ever have in this world with our size for our new stores. That's in terms of how we're going to grow. I think that's your second question. So I talked about the omni-channel needs. There's obviously we have a third place business that our customers just love, right? We're building communities. People are gathering. You can see from the video how people are just rushing back to our stores, connecting with each other, connecting over coffee with our people. So that is thriving when there are no restrictions going on, okay? So, and then you're talking about a delivery business from nothing to now a high percentage, right? Over 20% of our business on just delivery, right? And we're going to double that in the next 3 years. So if you think about our stores, our previous stores that we just built, those are fulfillment centers for our delivery business. Now, going forward in our next 10 years of growth, we can be so much smarter. If you take Shanghai as an example, we're at 98% of coverage in the entire city of Shanghai already in terms of delivery fulfillment. You think about my next batch of new stores in Shanghai, we can be so much more smarter with our capital investment in terms of infills. I don't need to build extra capacity for fulfillment for other like delivery needs anymore because I have enough. So my point is we can be so much smarter with our capital investment. We can leverage and maximize that a lot more. We can, the purpose-built stores that I talked about in my presentation, it's really about how we're going to go wide, go deep, go smart, and go green with our stores in different cities, and how we're going to build out our penetration and the omni-channel needs for our customers. Thank you.
Let me take a page out of Rachel's book and say, let me put an explanation point on that. We've been in China now for 21 years. We lost money in China, I think, for the first 9 years. It took us a while to get it right. And in the last decade, I think we've proven that the power of the Starbucks brand and the experience in literally creating an industry that did not exist and a category that did not exist. If I had to put a headline on the China opportunity, we are playing the long game. I don't know if you picked up a word that Belinda used in her presentation. She said the growth in China over the next year or two will not be linear. There are obviously external issues. But our belief, going back to a decade ago when I made the declaration that China one day would be as large as the U.S. Well, we're 3,000 stores away from the same size in the U.S. Now I believe that China is going to be 2x of the U.S., that the size of the opportunity is twice of America. And certainly if you look at the scale of the opportunity, the population, the power of the brand, the investments we've made, continuing to invest ahead of the growth curve, we are going to build a major business in China, and we will become one of the most respected and recognized brands, not Western brands, but brands in China. And so from an investment thesis, what other consumer brand in your portfolio has the opportunity, the runway, and the proven success that we have in China? And so we're going to continue to be bullish on China despite some of the external issues. And we believe the relationships we built with the customer, relationship we built with our partner, the relationship we built with the government, puts us in a very unique position. It looks like we're out of time unless there's more questions. Sir.
Thank you. Dennis Geiger, UBS. I wanted to ask a bit more about the new store growth in the U.S. You highlighted the still very strong returns. I think a breakdown of the stores by format over the next few years, which is super helpful. Can you talk a little bit about the decision to go from 3 to 3 to 4? How you think about cannibalization maybe within that context, or even on the plus side, how you think about easing the pressure on existing stores, or maybe this urban to suburban shift. Just any other pieces to kind of unpack that acceleration would be helpful. Thank you.
Well, there's a few factors. I'll start and go from there. I mean, all morning long you heard us talk about the fact that the demand in many cases is outpacing our capacity to serve our customers in the way that we want. One way to obviously to offload that pressure is we need to open up more stores in the proximity of the trade area, those stores that are under tremendous pressure. That's one. Two, the drive-through opportunity opens up a whole new scale of real estate for us that really has not been the core focus of the company. That's two. The other issue is if you looked at the map that John put up in his presentation, there's a whole lot of geography that Starbucks has not played in. And as the market has expanded, primarily because of Starbucks, we have opportunities that we have not taken advantage of. The other issue is the multiple formats that we have. We didn't have that in our past. So the multiple formats gives us tremendous real estate capability. It lowers our CapEx in many cases because the stores are different formats, smaller sizes, and we can do lots of things. And so we don't see, I said earlier, in my first thing I said this morning is we have line of sight on lots of opportunity for Starbucks. And maybe the biggest surprise of the day is the accelerated expansion of store growth in the U.S. It looks like the last question. Oh, one more. Please.
Thanks. Patrick Johnson, Stifel. I wanted to drill down on labor just a little bit more and a couple of key things that you guys had mentioned, particularly in relation to dynamic scheduling. Is that something that's on the horizon within fiscal 2025 or sooner? And how do you manage that to be sure that you're matching labor to peak demand times? And you, related to that, mentioned tapping non-traditional labor pools. Can you expound on what you meant by that specifically?
Yeah, let me take your question in reverse. On the non-traditional labor pool, I think the number is 95% of people who work in a Starbucks store today are under age 32, 33. It's in that zone. We can get the exact number, but order of magnitude, which is terrific. You know, it actually mirrors the customers that are becoming more and more our primary customer. However, there are other labor pools in the labor market. I can say this with some fidelity. AARP, people over 50, which I am a member of, that's a labor pool that we've historically not marketed to. If you went to the website of Starbucks to look at applying for a job, all the people look like the people who work in our store. They don't look like people who are over 50. So that's an example of a labor pool that we think where it would be tremendous additive to the culture of Starbucks. It would bring further maturity and stabilization. And those folks are looking for flexibility in their lives, and that's the hallmark of working at Starbucks. We meet you where you are. So that's the second question of how to think about expanding labor pool. And I also mentioned we want to think of ourselves as having to continue to grow the labor pool at large because we're one of the bigger players in the category. We have some ideas on how we might do that. On the scheduling side, it's a two-sided relationship. First of all, we don't capture today enough information about what your preferences and needs are as a barista. We get a little bit of information in the beginning, but other information would be helpful to know relative to your scheduling objectives. So A, we need to learn more so we can serve you better. And then we think there are some tools that we're working on currently. We've done a lot of a lot of partner testing as part of a reinvention so far to understand how do you really optimize scheduling so that the store manager is empowered with robust decision support tools across 9,500 stores, but not PhD level, but using artificial intelligence where necessary and other analytics tools for the 21st century, and get the information from the partner. So we think there's a lot of value unlock in just getting a tighter connection or synchronization between what your preferences are as a barista and how we want to optimize the schedule. And it's not an overnight thing. It's a complicated problem set, but it's one that we have high conviction already just doing some of the early analytics that there's a big value unlock for partners and for the performance of the store itself.
Please.
Hi, all. Great presentations. Steve Boland, Odlum Brown. Just wondering, how do you measure partner engagement and connection, and how do you know if you're at a desirable level or not?
We have a kind of we call it listening strategies. What are the listening strategies and an affirming, transparent listening approach? We have some tools we use that we measure weekly, sentiment, 1 or 2 questions, just to get a kind of a pulse. And then we have a slightly more elaborate model that we do quarterly. The meta question is, would you recommend Starbucks to a person to come work? That's like the highest level order question. Then there's questions that sit underneath that. So we have a pretty finely tuned system now for listening that's short interval, longer interval. Having said that, I think it's still ripe with opportunity because it still averages. And so if you go back to the earlier discussion today about personalized journeys for different cohorts of partners, we think there's an opportunity over time to fine-tune the questions to better make sure that we're meeting your specific needs as opposed to my specific needs. And I think part of the agenda for innovation and better meeting needs is getting better at listening. The last point I'd make is you've heard in some of our narrative, including the earnings call, we've always been a pretty good listening company, but now we're trying to become a co-creation company. And that it makes for good rhetoric, but it's not a natural act at our scale, and we're working really hard. I think you've seen a lot of co-creational themes today. And we think that the partner can have an outsized influence in how we think about that going forward as well.
I think we're going to close it, okay? Well, first off, it's been a long day, and you've been great. We've really thrown a lot at you today. You've all been present, and I can't thank you enough on behalf of all of us at Starbucks for coming to Seattle, listening to our story, and I hope that when you walk away, you're struck with a few things. That this is a team of people that represents 450,000 Starbucks partners, and we take that responsibility to heart. We understand how hard people are working, the changes and the pressures on workforces in general, and we want to do everything we can as a leadership team to make our people proud. We also realize the fiduciary responsibility that we have to do everything we can to meet our financial obligations. And what we share with you today is our promise to you that we're going to do everything we possibly can to make you proud of your investments, your recommendations, and your involvement with Starbucks Coffee Company. We stand here on this stage representing a lot of people. The one thing I want to do, and I hope you'll join me, is that there's a lot of Starbucks people in the room. I'd like you all to stand up and to be recognized for everything you do on behalf of the company. Please stand up. Once again, I want to recognize our international partners who have come far and wide to be with us today. I think it speaks a lot about your relationship with the company. We'll see you all tonight. We'll celebrate the day. And again, thank you all very much. And we'll see you soon, either in New York or California or wherever you are, and do everything we can to be as present and visible so we can stay in contact with you. Thank you very much. Thank you.